since mid-July. No sign of a recovery, and that's manifested a bit in the Mag 7. But it's a case of the Mag 7 not doing as well as expected, but also these value stocks are now starting to actually post positive returns, relative returns. So the market is searching out leadership change. That's undeniable. And the big question, I think, as you were discussing earlier, is that going to be enough to actually push the aggregate market to new highs, given the sheer scale and weighting of these tech stocks, the Mag 7 stocks?
So far, some of the leaders in the category of new leaders has basically been like staples, utilities, industrials done pretty well. So are we getting enough kind of mid-sized sectors to start to make that map a little bit less unfavorable?
Yeah, I think, and again, you showed it with the equal weighted index, which had been a notable laggard for quite a while as the Mag 7 ripped away, is starting to play some catch up. So you are getting this broadening out of the market, which is actually a very healthy exercise. When you have the level of concentration we'd seen in the market, the top 10 stocks accounting for 32, 33% of the market, unprecedented concentration levels, you've got to ask yourself how sustainable that is. And really what we're just showing in this chart was just understanding the drivers of the market returns. When we had a big up leg in the market from April to mid-July, almost half of that was entirely driven by the Mag 7 contribution. 50% of that return was driven by the Mag 7. Likewise, when we had this sudden dip from mid-July to the recent August 5th low, almost half of that was driven by the weakness in the Mag 7. What we're saying is the market has recovered. Mag 7 have delivered a positive return, but we're now seeing the value stocks contributing more than the Mag 7. So the balance is clearly shifting in terms of those market drivers. So, and that would be, if you looked at the Mag 7 contribution going back over the last 2 years, clearly that it's been the dominant contributor over that time frame.
Is that going to just by nature now give the market sort of a lower beta when you had such concentration in a handful of names? As we saw there, swinginess, those names are driving it both ways. So as we even it out, does that naturally kind of lead to lower vol? Is that a reasonable conclusion?
I think it does, and I think but it could also lend itself to. We've just got to sort of most probably go through some recalibration process, which could well mean we're in a more of a range-bound market. And I think we shouldn't underestimate the market starting to price in the election uncertainty premium as we close out this quarter. So that is going to be looming up as people are going to say there's a lot of uncertainty. Where are we going? It's a good excuse to possibly sit on the sidelines. We're going to get this sectoral rotation. All of that possibly points to some sort of range.
Good morning.
But within that range, you're going to get quite a lot of more significant.
Okay, most stocks are higher. NASDAQ 100 is mostly green. Got about 20% unchanged. And we have 4% that are red.
Bedrock of earnings, and that aura around it was where the strength was for profits here the last 3 quarters. Can the other stuff make up for that? Will we look at like an aggregate EPS for S&P and say, okay, this is a good continuation, or does it just slow down?
Great question. We were examining some of this in some of our recent research and looking at the earnings growth trajectory for the Mag 7 and the Market X. There we are. You've got it here. So the grey line is the earnings growth estimates for this year for the Mag 7, and you can see it accelerated.
Okay, MongoDB is looking really good after earnings.
It's been treading water. So the second derivative of that is
NVIDIA is rising a bit.
But still at a very high growth level. The more concerning thing
Supermicro.
Supermicro
taking off.
That blue line, you can see that's on the left-hand axis. That earnings growth projection for this year is half. It's gone from 12% down to 6%. So the underlying market's health is not good. So this is the dilemma for the rotation. The second derivative, the rate of change of the growth forecast for the Mag 7 is now just mildly turning negative, but it's still high. But you've got a pretty ugly picture for the rest of the market. There's the remainder of the market, and that is the big problem for investors. But really, what's going on, I think, with the Mag 7, it's a bit of focus on this year and next year's EPS growth. But what highly valued growth stocks are also doing is discounting. The market's working out what is that long-term growth rate being discounted. It's not just about short-term earnings delivery. And the problem I think we found with the Mag 7 is the market overjuiced the long-term growth delivery. You've seen that's the fundamental thing that's being recalibrated here. And the thing we learned from that is if the market moves your long-term growth trajectory down just by a few percentage points, that can have a disproportionate impact on your valuation.
Well, that's where it seems like we should be taking surprisingly good economic data like GDP revisions higher and running with that right now because this is a market that's increasingly and quickly becoming more dependent on the economy. That's kind of the main conclusion.
Okay, we got about 4 minutes to go. 4 minutes to go.
And that explains why you're seeing some of these value stocks. Value stocks traditionally that play on the underlying economy rather than frightened of a recession or landing clearly. And you think discount rates are falling, go for those long duration growth stocks. If you think the economy is going to hang in,
Just drop my tea.
Okay, go for the value. So look, this chart was just trying to show this divergence. The blue line is showing this growth stock against value trade, and you can see that's basically showing the tech against a lot of the cyclical stocks. But the tech have done really well to mid-July, but it is now seriously rolled over, and that's now giving a very different profile to the underlying market. As I said, underlying markets had a V-shaped recovery. Growth relative to value looks as though it's now trending lower.
Great stuff, Philip. Really a fantastic way to break down how the market's shifting. Takes us to a really good place in understanding its relationship to the economy. Appreciate your charts. Appreciate thoughts.
Thank you.
Great stuff. Philip Waller, Managing Director of Market Research at Wilshire Indexes. Excellent work putting it together there as the economy becomes more connected to stocks. The AI theme slowed down a little bit. When we come back, we're going to talk to crude oil, KG, getting us ready to go into the bell. Stick around. Starting in a few.
All right. It's a good thing I keep my tea and everything out of the way. Okay, Supermicro, nice little pop coming back in, going into the opening bell. NVIDIA's popping up.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all
right.
services. Futures with Ben Lichten.
Got less than 2 minutes to go.
Eastern on the Schwab Network.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need.
All right, let's get ready for the opening bell.
Neil, tell me you know this.
Gotta run, Carl.
All right, Supermicro pulling back a little bit.
Have a choice in how you invest with Schwab.
It's time to move forward
Find the next trend.
from every click to every tick.
There's no fear of
Yeah, whatever. Oh. What happened to CNBC?
Join us for next set investing.
1 p.m.
All right, we're about to open.
Schwab Network.
Futures trying to stay. All right, so we're starting to move back a little bit.
Another really good setup here today. The Nasdaq starting off strong in futures, 85 basis points. New AI.
S&P. People taking profits.
Drivers forward this morning after Dell and Marvell last night. Autodesk. We've got some good strength and
Give it a few minutes for the markets to settle down. Take profits in the first few minutes.
We also have a little bit of help from the commodity story as crude oil drops 2% on inflation day. Never hurts to see WTI coming off. Kevin Green joins us. Says we've got 30 seconds here to the bell. Going to get some ring in KG, but give me the quick take on WTI. What happened?
Yeah.
All right.
Report from Reuters that OPEC is still on set to basically ramp up production starting in October. Now, this has been floated by OPEC for some time here in the works after a 2.2
Supermicro.
cut that we've seen because oil prices obviously have slid. Now, we have some dynamics that have taken place, especially
JP Morgan. Let's see.
taking place internally within the country where they may actually be taking offline all of their production as well as
Lulu looking good.
so that would actually impact around 1.1 million barrels per day. But OPEC actually increasing their production in a time where
Okay, Lulu. Let me just take a look at this. Lulu. Lulu. All right, so Supermicro got definitely got momentum players involved. Lulu just below the 50-day moving average, up on the day 3.85%. The iron condors that we talked about yesterday, right in the middle of price action, so you collect 100%. 100%. All right, all of these, let's see what's left of them. 300, 310. Yeah, I don't see this rallying. I don't see this rallying 40 points today. Okay, S&P chopping around. Apple a little dip there. Meta, Broadcom lifting a bit. All right, so we got mixed on the New York FANG index stocks, mixed. All right, we're just chopping around. LRCX is now moving up the list. MongoDB, consolidation, a little profit taking. Autodesk after earnings. Okay, there goes CrowdStrike. CrowdStrike on the move. CrowdStrike. CrowdStrike trying to get up to yesterday's high. Starting to fade right now. CrowdStrike. All right, Pinduoduo. I saw some news on Pinduoduo. What was it? Pinduoduo, PDD. Okay, gapping up, Pinduoduo.
So look for some immediate pressure there. And then the next area of resistance, 5650. And if we can actually hold 5650, then all-time highs are definitely in sight. We would only be around 17 points away from that. But yeah, I would have expected a little bit more of a
Of course.
So when I'm kind of looking at the Texas right now, it kind of looks a little bit more bearish to me, but we'll see. We have a long way to go. We're also going to have a light session too, low liquidity. So low liquidity could also lead to massive prices.
Like whoever gets out there first.
Exactly.
Okay, just watching CrowdStrike. Probably some shorts covering at the moment. CrowdStrike.
As we were talking about throughout the first half hour here, you can get AI leaders that aren't NVIDIA to power the market. That would be a really nice kind of.
Okay, Snowflake pulling back, Tesla pulling back. So stocks that are up yesterday, seeing a little bit of profit taking. Supermicro pulling back.
And this was a really good week for the sector.
Yeah, we were seeing some positive data coming out of MongoDB. Now, it has been trading in a range for the last year or so. It has not caught the bid by some of these other AI names or those that have exposure to AI. It's not a pure AI name, right? This is more data warehousing here. But they did actually beat The street's expectations when it came to top and bottom line, right?
Okay. See Bitcoin, trying to make another day of it. Bitcoin, Nvidia, Supermicro.
Indeed, both top bottom line for that for analyst expectations. And they talked about their Atlas Cloud service that they are providing. And they saw some really strong strength within the quarter. They also made mention that they
What's
bring on
HOLO is moving higher. Hologram.
a competitor of them in their commentary yesterday, as well as Elastic reporting earnings. They're down around 23%. So MongoDB actually did a direct jab at their competitor during their conference call. And they said that they are seeing some positive trends there.
Lulu.
Pretty decent. So we are not seeing a nice
Okay, Lulu. All right, Lulu.
maybe a combination of a short squeeze.
What's JP Morgan doing? JP Morgan. Okay, follow through on JP Morgan. Have a put credit spreads. I'll probably add to.
Seems like the bar has gotten low enough now for some of these cloud companies to start to, catch the attention of maybe kind of the value side of expensive tech, if you want to call it that. Kind of sounds like a contradiction, but there is still a lot of growth happening in some of these places. So, all right, good stuff. Thanks, Kevin Green. MongoDB up 16%.
Okay, JP Morgan, I'm going to probably add to this. Makes a lot of sense. We're just going to keep moving higher. JP Morgan, best bank out there, according to the professionals.
Marvell, and then some Intel news as well. Let's start with earnings from Marvell. Carolina seemed pretty good when they hit yesterday.
Yeah, shares surging higher in response. Earnings and revenue both surpassed analyst expectations. Third quarter outlook also came in better than expected. So in turn, we're seeing shares up more than 7%.
I love when stocks start trending, like JP Morgan. Great setup. All right, let me see what I'm going to do here while we're waiting for the opening range. Okay, so CrowdStrike pulling back a bit. Okay, JP Morgan. Okay, Lulu, this Iron Condor is working just fine. All right, so what's going on here? We're now down $4. Is that right? Okay. Lulu. I'll go ahead and close this. There's no way this is going to drop 20 points, will it? Lulu? You just can close this for 4 cents, $4 per contract.
Morgan Stanley boosted to 82, although Morgan Stanley is in the equal weight camp. So Marvell up about 5.5% right now, so off those earlier highs. And
Caterpillar.
23%, almost 22%.
Caterpillar.
Okay. Yeah, nice numbers. A lot of nice response too. Analysts liking it.
Caterpillar with a put credit spread as well. Caterpillar. Moving in the right direction. I'll probably add to this one as well. And I'll wait to roll it up, but looks good.
Market's holding in there. Nice pop for Marvell for sure. Sequential growth is always nice and consistent. So another one to kind of add to the list. We've got a few big moves this morning. Broadcom's doing really well. Qualcomm looking up at 1.5%. Broadcom's up 3.5% though. So I'm kind of thinking a little bit along those lines with chip leaders outside of NVIDIA. Intel
So if you are long Caterpillar, you're doing well. I could add some flavor to this by buying some verticals. Okay, looks good. All right, what else is working here? Amazon. Let's see what Amazon's doing. Amazon.
TSMC, of course. So this comes after Intel, of course, missed on both the
Amazon. Looks like it wants to do something.
earlier this month. Revenue, of course, declined 1%.
Have a call credit spread on this one, so I'm not looking for prices in the next few trading days to get back above 182.50. 20 days, 21 days. All right, so CrowdStrike pulling back now. Amazon's on the move. Amazon pushing a bit higher. Okay, the New York FANG index stocks are mixed. Apple with the pullback. Let's see, Tesla.
Already they've slowed, paused factories, laid people off, cut, halted dividends. So it's like it seems natural that we should be exploring kind of all options here because they've done.
Okay, CrowdStrike pulling back more. CrowdStrike.
Gonna need some help somewhere. Unless it would be nice if indeed the message from Best Buy was true and everyone started buying on computers again, but that might just put a floor in the stock. I don't know if that's going to be the case for upside. They're going to have something more dramatic and transformative. Speaking of dramatic and transformative, let's talk about my wardrobe. Lululemon earnings, not bad. Maybe not transformative. Maybe kind of like more popular a couple of years ago.
Not completely bad, but not great. I'm just taking a look at shares. They're actually down 1.7%. It looks like they might be modestly higher.
All right, so let's take a look. Most stocks are green on the NASDAQ 100. MongoDB, the top 5, MongoDB, Marvell, Chips, Intel, Chips, Autodesk. I almost took that. Did I take? I didn't take that, did I? No, I didn't take Autodesk. I was looking at Autodesk. I was trying to do something with Dell before the close, but I couldn't get a fill. So Dell, let's look at Dell to see what we were doing on Dell. Okay, here's Autodesk.
In terms of the outlook, Lululemon said it now expects full year net revenue to be between $10.38 and $10.48 billion.
Your breakfast is right there. Those are 9 grams of protein each. Or maybe it was 6. Okay. If you want to heat those up just a little bit, they should be still warm. Okay, so let me just take a look at these.
Of being there because apparently the fit isn't very flattering. I didn't try them, but based on some of the pictures that I saw, not a flattering fit. Customers weren't happy. They did address that on the earnings call. They called it a test and learn.
Let's see how these did. Let's see how these did.
Impact, but certainly wasn't a positive headline when they're trying to attract
Dell.
customers to come to the stores and to continue buying their goods. They're not going to serve ones that people want.
Okay, so here's Dell, and we were looking at Dell. 130s on the upside, 90.85 on the downside. All right, so Dell, you would have collected 100% of that premium. Okay, Autodesk, ADSK. Autodesk, we were looking at 285, 275s on the calls, so you would still be good here on Autodesk. They expired today, so we're fading from the high. Autodesk. If you took Autodesk, you're currently fading.
Yeah, I know. I'm going to have to check out that we made too much.
Okay. And of course, Lulu did just fine. Lulu doing fine. Let's look at IWM. IWM have an iron condor on IWM. Okay. So the upper strikes are 235 for January.
Maybe next summer.
Good for hot yoga, maybe, you know?
There you go. Hey, last one, Ulta, pretty big miss here. Kind of seems like they continue to fall out of favor in a pretty quick way.
Yeah, shares were already under pressure heading into this report, but now down another 3.5%. It was an earnings and revenue miss.
What's
and they
Tesla
actually
doing?
cut their
Tesla.
outlook
All right.
for
So
earnings.
waiting for the markets
Earnings missed
to.
May of 2020, and then the first revenue miss.
All right. It's 9:45. 9:45. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, Memorial Day weekend, so we'll be off on Monday.
Net sales rose less than 1% to $2.55 billion. The estimate was for $2.63 billion. Comp store sales fell 1.2%.
I remember when I first started trading back in '87. I couldn't wait for the markets to open. The weekends killed me not to be trading or to be doing something. My first trade was IBM, which brings to mind IBM. Still trending. So IBM is one of these stocks that I was looking at for a potential put credit spread. So if you took a put credit spread, IBM doesn't report until October 23rd. So put credit spread, you're doing just fine. If you took any of these, let's take a look at Home Depot. Home Depot, yeah, that's just fine. JP Morgan, of course, we already talked about. Okay, let's take a look at the New York FANG index. So yesterday I told you I'd like to see at least 2 days of bullish by the close. Oh, Labor Day. Sorry. Did I say Memorial Day? I did. Okay, well, you know what I meant. My brain and my lips, a lot of times, are not connected.
James to 450 at the higher end, Barclays down to 335 at the lower end. Analysts pretty
okay, Marvell back to a 50% retracement. You might get a nice trade off of Marvell. The only thing I didn't like about Marvell was its numbers. Okay, so watching Marvell on the bounce.
That's a huge drop off. And I'm not terribly surprised. As I said before, it's cutthroat.
Marvell. Okay, so let's see what it looks like presently. We only had 3. Okay, Marvell. Okay, here's Marvell. We want to see all 4 of these indicators are metrics green. So revenue growth is lower. Earnings growth 66.7. Let's look at NVIDIA's metrics. If you recall, NVIDIA missed, and this number was plus 600%. I think it was greater than plus 600% earnings growth last quarter. So NVIDIA taking a breather, but it is moving higher at the moment. NVIDIA is moving higher. Okay, so momentum traders are definitely active today. Here goes NVIDIA.
Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills.
Okay, I'm going to add to NVDL most likely.
Just for traders. Also, you can trade brilliantly.
Okay, Lulu, I'm all out now. Lulu, all out, $205 per contract. Lulu. I don't know. Personally, I think it's the smartest way to play the markets is to sell premium when you've got implied volatility very elevated. Lulu, NVIDIA, I mean, these are 2 killers. You just have to understand how how to trade iron condors or credit spreads
Binge watch the market with Schwab.
and give yourself enough time for the trade to work. Let's see, Caterpillar. Okay, that looks good. JP Morgan. Okay, Super Micro. Apple's still moving lower. Apple, I don't have a position in Apple anymore, right? No. Okay, CrowdStrike.
Stocks are in good shape right now. NASDAQ at the highs of the morning, up about 90 bips. We're going to talk some consumer stocks, though, balancing out our range. Chewy trying to go 2 quarters in a row.
Okay, so you can see how Lulu.
Joins us, managing director of equity research at Wedbush. Seth, good morning.
You can see how Lulu playing an iron condor. I mean, do you really think in earnings a company like Lulu is going to pop $40 or drop $40 or more? And the premiums were pretty elevated, so that was a good one. Okay, what else do we got here? Amazon, that's a call credit.
Who's advertising on Chewy? How much of that is coming?
IWM Caterpillar.
Companies that sell through Chewy as well.
Okay, Lulu looks good.
Predominant supplier of advertising spending on
Okay,
the
NVIDIA still moving. NVIDIA.
pet food brands.
Gotcha. So they're just okay, got it. So it's virtual store.
Okay, we're coming up to some supply overhead from yesterday from earnings. Okay, NVIDIA coming up to supply. Just a week to JP Morgan. Maybe a month. Let's see, JP Morgan. When are their earnings? The key, Jeremiah, is the earnings date. Okay, so we want to roll, but we don't want to get caught October 11th. So okay.
They continue to broaden their assortment to appeal to their customers, so that's working. From a supply chain standpoint, that's in great shape as well. Over 40% of their orders now going through their automated fulfillment centers, which are much more efficient, and their inventory is even more optimized in terms of locations across the country. So those things are also helping drive margin and conversion.
Well, when you're looking at the potential going forward here, like what's the ultimate end game? Is it more integration of pharmacy, higher price items, higher margin, or is there other potential verticals that they could go down? Like how limited are they? How caged in are they to their particular industry?
Yeah, pet healthcare is a huge area for expansion. Not only are they selling more pharmaceuticals, but they're starting to open up veterinarian clinics. They have 6 or 7 of those open, I believe. I continue opening those.
All right, JP Morgan's making money.
Good results from the early clinics.
I probably won't do anything for now. I'll just add to this one. Okay, so where I would like to add on JP Morgan, what I would like to do is add on dips. Okay. So currently we're up here at the highs. Okay. So put credit spreads, you always want to add when we move lower and then reverse because you're going to get the best value for your puts. I mean, that makes sense, right? As you're dropping, puts become more expensive. Then you eventually see support, a support bounce. That's where you want to add to your position. Okay, NVIDIA, still watching NVIDIA. NVIDIA at supply now.
A latent legacy winner in retail.
Yeah, I'll be the first to admit last year has been phenomenal, better than I expected. I downgraded my rating on the stock about a year ago after a weak second quarter of 2023. But since then, they've been on fire. They corrected some of their inventory issues, have got shrink under control, and they're really getting great momentum with some of the brands they have in their store. So I think this quarter is going to be a good one.
I mean, it's double in the last year. Is it that compelling? Are they breaking new ground in some way, or did they just right the ship financially, well-oiled machine now?
No, they are breaking new ground. So this is a different company than it was pre-pandemic. Certainly more of their sales are online, but the way they integrate brands into the mix and the way they operationalize those brands in terms of customer service and merchandising have all improved. At the
same time, they've changed the way that they move aged inventory, so it's more efficient and doesn't detract too much from the merchandising in line.
Okay.
Things are really moving the needle.
NVIDIA looking good at supply. NVIDIA is at supply.
We'll preview into next week. Let's start trading Chewy though first, Tom. Sunshine and puppies. That's the bull case. For
Money Magic
Stocks up about 20% just this month.
on, let's check Money Magic levels on NVIDIA. Okay. NVIDIA 123, 125. All right. So 123, 125.
So that's at the, basically the lower quarter of implied volatility levels that we've seen. So I looked at a strategy. If you believe in this company, you think it's going to go up. I think Seth's got a price target of about $35 per share. And a strategy that takes advantage of that type of move by offsetting some of the costs. Looked at going out to the January monthly cycle. So 140 days to expiration, longer duration call vertical here, where I'm going to buy the in the money 27.5 strike call. And then against that, sell a 35 strike call. So you're picking.
Okay. We're right at supply right now on NVIDIA. This is just intraday resistance on the 5-minute. Let's zoom out a couple of time frames. All right, so we can see a little bit higher. All right, so if you zoom out to the 15 or 30 minute, you can see that 123 level coming in. That's Money Magic level, option wise. Okay, so that looks good. NVIDIA looks good on the hourly. Okay, S&P, Marvell pulling back, Marvell. Intel, they're splitting up the company, manufacturing. This might be enough to get the stock moving. Intel. Okay, Intel.
It's $280. Too bad that it continues, that it's for real. Yep. All right. Well, Seth is a believer.
Okay, Intel.
Trade makes sense. Pretty straightforward.
Okay, Intel, note the Bollinger Bands. This could actually get going. Intel, I wouldn't buy it up here at the high of the day. Pre-market, I saw it. Almost did something. It was at 2080 at the time.
One of the key things with Dick's Sporting Goods you got to realize, and I think this is a good lesson for all traders.
Didn't do anything. Didn't pull the trigger. Okay, Amazon pushing a bit higher. Amazon. Okay, it looks good on the day. Amazon. CrowdStrike. CrowdStrike, Iron Condor. CrowdStrike, Iron Condor. All right, so we're starting to fade. All right, so it looks like there's some profit takers right over here. This gap over here, 290. The upper Bollinger Band. Whenever you're doing credit spreads, if I make a mistake, most of the time I'm looking at the standard deviation 2, second standard deviation 2 Bollinger Bands. 95% of price actions contained based on volatility. So that's a good way to look at the markets. All right, sell outside the Bollinger Bands. In this case, we're outside the upper Bollinger Bands and the 50 and the 200 days. So the likelihood of CrowdStrike closing above 300 presently with this death cross coming into view, 50, 200-day cross, probably pretty minimal. Let's see. Pinduoduo gapped up. What's it doing? All right, still looking pretty strong. Okay, it gapped up and then it dipped. Now it's starting to bounce again. Pinduoduo. Okay, PDD.
Okay, so looking forward to basically get stuck to some degree.
Taking advantage of those higher option premiums due to the implied volatility levels that are elevated.
All right, so it's pretty pumped up. Yeah, Dick's the big mover.
172, 175 on
All right, Tom,
Amazon.
thank you very much. Thanks to Seth Basham for the take for Dick's and Chewy. Pretty good retail winners. Stock's in good shape right now. We're trying to make the move. NASDAQ leading the way.
Amazon on the move, looking good. Amazon.
Which is a little bit odd given where stocks are, but it put back to Apple's lower. Russell.
Okay, we're above the upper strike. Amazon's above the upper strike call wall. Pinduoduo pushing a bit higher. Okay, a lot of stocks moving higher. Okay, the NASDAQ 100 is 85% green. All right, so 15% red. The stocks that are red, Let's see, PayPal. I see Ross Stores, retail stocks pulling back. Retail is pulled back a little bit. Those are the stocks that are moving lower. Stocks that are moving higher, MongoDB, Intel, Marvell, Autodesk, Broadcom, CrowdStrike. Although CrowdStrike is fading a bit. Okay, let's keep an eye on NVIDIA. NVIDIA is trying to push through supply. NVIDIA.
When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is.
Okay, NVIDIA looking good.
It is incredibly.
Can we get something going here in NVIDIA?
Go out there and test yourself, find out how good you are. It is very attractive.
So how are you?
Okay, JP Morgan. What do I want to do here? Do I want to add to this?
Being lucky in
Wait for the dip. JP Morgan. I'll wait for the dip. Okay, we just got a dip there. Dip, 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 dip. All right, JP Morgan looks really good. The other good thing about credit spreads, I know I don't talk about them very often, but the other good thing is that once you see a stock trending, you got a very high probability of success. A directional trade, like, you know, the 50 days up and to the right, 9 and 21 day up and to the right, the 200 days up and to the right. Look at the volume. And you know, earnings are on October the 11th. But this is a pretty low stress kind of way to add to your portfolio, P&L. Especially if you're a trader that likes to be in positions more than a few days, you know, swing or portfolio trade. There goes Texas Instruments. All right, so chips are doing really well. Okay, so NASDAQ 185 stocks are green, 16 are red. Let's take a look at top 10.
We did see Bitcoin struggle, but now it's back positive. Looks like pure risk on. Dollars a tad bit higher. Bonds are basically unchanged.
How do you look at this market watch, Corey? How do I find the sectors? Let's see, S&P. Okay, here we go. S&P sector indices. Okay, 10 advancing, 1 declining. Okay, that looks good. Oh, that's pretty cool. I like this.
Crude oil also a little bonus there, down 3%. OPEC going to spike the output, and that's obviously bearish, and markets should like that.
96 stocks advancing, gapping up.
It's a nice little bonus. So there should be another fresh opportunity to get the market ramped up. And as KG's told us, likely to be a low volume, kind of low liquidity day heading into a long weekend.
50 stocks advancing.
Take it and maybe just nail the coffin shut on bears. Speaking of bears, we've got the
it's too bad you can't link this.
Chartmaster, we're going to take a look.
Okay.
Get ready for earnings next week. I got Ben with me in studio.
Okay, so if you missed the open, if you missed getting into positions, probably not the best area to start buying. NVIDIA continuation. So at this point, being a long weekend, what I'd be looking for is dips to buy. Let's see. NVIDIA looking good. NVIDIA. Okay. NVIDIA right up against supply. If we can make it through 122, 123 is the next level. That's a money magic level. Bitcoin starting to move. Bitcoin. All right, Bitcoin day 2 on the reversal.
Across the big pond. I'm not sure if you saw, but some of the inflation data we saw out of Europe overnight also very much in line with expectations and showing that we've seen some.
Okay, NVIDIA, can we get through this, NVIDIA?
We got inflation meeting is just a really reminder that
Okay, Apple fading.
threat has pretty much been removed. You know,
What's the deal with Apple?
It's now all about whether
Apple.
the economy picks up, turns around, plateaus.
Okay, I'm taking it kind of easy today because it is
Crater basically, right? We've got
Labor Day weekend.
we've built now.
And that's what the market's telling us, I think.
Okay, here's Apple's earnings. Okay, here's what Apple looks like. All four metrics are green. All four are green. So I want to be paying attention to Apple on this dip. Apple on the dip.
Sentiment at the top of the page there, coming in line with bank expectations, but a nice uptick here, 67.9 from what was it, 66.4, I think. So take a look here at current conditions. You can see a similar situation again, an uptick from what was expected. Now, like slightly lower than prior 62.7, 61.3, but as I take a look here, the expectations again, they've been boiling over 72.1, Oliver, from 68.8 prior. Now, the one thing I did notice is let's look at the inflation component here, and you get that reading. This is a key for the 5-year inflation component. I'm not too focused on that. I'm more focused on that.
Okay, let's see.
2.8%, Oliver, from expectations for 2.9 prior to 2.9. Now I went back. I looked. If my source is correct, you're gonna go all the way back to December of 2020 to find a reading again that below 2.8%.
Yeah, great stuff.
This is
Music to the Fed's ears.
and to the market's ears, right? I mean, and a reflection of, and it's sort of, I feel like it has a snowball effect now.
That Lulu tray was nice. That was nice. $5 total per contract to close the trade. So $205 per contract. Nice gain on that one. NVIDIA. Okay, we ran into resistance right at 121.80-ish. Okay, Apple's still pulling back.
What do you think about that? That's kind of curious to me. It seemed to me like the chart was in need of something. Instead of
Okay,
basically
NVIDIA. NVIDIA trying to get through this supply.
either break down or we come back up. Kind of a descending triangle, but like it's nothing. It's totally quiet. So I guess
Amazon.
It doesn't move the needle, that's for sure. And 10 years very comfortable just below, at or around this 4% level this week, mostly below it, right? 3.85 as we look at it right now, slightly lower today. But Oliver, I think this kind of speaks to again what Paul's talking about, balance, right?
Okay, Microsoft. Watch Microsoft here. Microsoft on the move.
They've been limited relative to that kind of, again, that kind of nice.
Can you do one of your charts there, Lee Star? Microsoft. Microsoft on the move. Let's take a look at Microsoft. Make sure you check Money Magic levels. Money Magic levels. We want to do that. Always want to do that first. Microsoft 415, 420. 415, 420. Microsoft 415. All right. So if we're above 415, 420 is doable. Okay. Microsoft. Let's see. I don't have anything on Microsoft, right? No. Right. No. Okay. Microsoft. Let's look at next Friday's calls. A vertical. Microsoft would like a little dip first. Hopefully this VWAP doesn't flatten out. Okay, let me just check one other thing. Microsoft. Okay, so we're starting to see some red bars on TTM on the 60-minute. 5-minute looks good. Maybe back up to resistance 421. We know Money Magic levels are 415, 420. We're above 415. Maybe we'll get a little dip first. Wait for a little dip, maybe. Microsoft.
Maybe don't overanalyze or look for too much, expect too much out of the market like this.
Yeah, fair enough. All right, fair enough. I'm looking. I'm digging. Bitcoin always.
I wish. Is there for you guys and ladies that use TOS? Is there a way to do shortcuts that change from verticals to singles to iron condors? Is there a way to set up so that automatically, because I'm constantly hunting for what I'm trying to do here. Okay, so today's calls are 70 cents, 78 cents. Those are pretty cheap. Okay, I don't want to do that. I don't want to do that. I want to go next week. All right, so try to get the best of the bid for the 415. No, I want to go 417.50, 417.50. Those are $1.10. Let's see. That's bid. I'm looking at Microsoft. Looking at Microsoft for a quick trade. 417.50. I want to go 5Y, 417.50.
Back with us, fresh bullish note this morning, $900. That's pretty juicy.
It is, and this is actually an adjustment.
Okay, watching that. All right, I'm going to save this order. I'll save it because I want to see a dip first on Microsoft. Okay, the S&P is dipping, but sideways slightly. So we're just off the highs of the day. Let's see the 0 day. See what 0 day looks like. 0 day. Okay, so we have 10-to-1 up volume on the. All right, so it's obvious that the Qs are active. Microsoft. Okay, looks like it's going to go. Microsoft on the move. I'm trying to buy the 417.50. What did I? Okay, this is a little confusing for me, so bear with me. I'm trying to buy a vertical on Microsoft 417.50, 422 for $2.15. Let's see. Okay, Microsoft on the move. Where's the price right now? What's the mark on this? Okay, I'll go up. Oh, I see. Okay, so we're right in the middle. Okay, so I just bought the 417.50, 422.50 on Microsoft.
Totally victorious in like every way, and so many doubters and haters too. Don't forget.
Filled. Okay, let me just post this.
Many as like a Tesla, but for sure there were doubters that they were going to be able to pull this off, and obviously now it's like becoming
To limit.
So that's where I imagine the stock goes, and that's why I think it continues to go.
Okay.
Basically, it kind of can depart.
Should have waited for a little dip there. Thank you, Rick. Okay, so we're right back to 50%. We came down to 236. Okay, thanks. Appreciate that. Microsoft. I'll give it like a 50-cent stop, maybe. Yeah, 50 cent. 417.50, 422.
In North America, and what they noticed that the retention rate was still relatively high, so they still had pricing power within that space as well. And they haven't even really turned the lever on the international space, which actually is the fastest growing subscriber growth area for them here in the near term.
Okay.
So not only when it comes to the content, the original content's taking off, not only looking at some of the sporting events that could be on the horizon here, but they also do have that pricing power lever that they can pull.
Okay, Microsoft. 417.50, Microsoft. 420. All right, so as we approach 420, as Microsoft approaches 420, that's where I would be taking some profits.
You can only, I think, imagine how the dividend and the shareholder-friendly activity will increase over time. That's another way I think about this too. To your point, they still have market to take from international dynamics that haven't been quite as robust as the conversion to.
You could wait for a little dip here, actually.
So they can continue to basically carve out a world of their own. Pretty great stuff. What about like buyback and dividend stuff, right? Like they should be able to act pretty freely.
Yeah, it kind of depends on what direction they really want to go. They can utilize that cash for.
Okay, Microsoft. All right, looking like it might dip a little bit. I got a 50-cent stop right now. Okay, Microsoft. Okay, Nvidia. Okay, Nvidia. Maybe wait for a little dip first. That's probably what I should have done. Wait for a dip on Microsoft first. I mean, maybe get closer to $2 or $1.90, $1.95.
The international segment is actually growing at a very rapid pace. We cannot undercut that. What it's taken is actually prices. They had to be a little bit more competitive.
Supermicro looking for the bounce. Nvidia, we ran into supply and initially got rejected.
If you do perceive value initially, then over time you're willing to endure some of the price increases. So the Middle Eastern markets, and also when you're looking at the Asia Pacific markets, those have been remarkable as far as growth, and they have that pricing power for them. And if that is going to continue, I mean, that's just going to be a tailwind when it comes to cash flow. So Oliver, I don't know what they're going to do with their cash. Probably put it back into content. But
Okay, S&P.
be able to generate here. It's just a flip of the switch, and really up to their leadership as to when they want to actually do that.
All right, ADD is only at 937. So caution, as Money Magic had mentioned, caution. Warranted.
Dan Denning, managing partner, KKM Financial. Taking a look at it for us, up slightly here today, less than 1%, Dan. But I mean, of all the.
All right, S&P, the highs yesterday just overhead at around 56. 56.45 or so.
Basically, it could certainly break out from here and continue to maintain its upward momentum. But overall, when you look at the market here, even after the data this morning, and again, positive outlook as far as inflation and the consumer still hanging in there. The market is not necessarily, I mean, we got a lift, but it's not a lift that I would consider something that looks like we're going to continue to break
Microsoft.
up highs.
Microsoft up 0.8%, 0.9%. Looking for a push higher. We are above the first call wall. Trying to get up to the upper call wall. 420.
Selling a put spread below the market. September expiration. So again, just a short dated put spread to collect some premium, get a return versus the stock, and have the opportunity to get put in the stock at a little lower level.
Okay. So you're okay buying it, dips a little bit, nice, a little bit better entry. In the meantime, you can try and collect some premium.
Yeah, see what happens. So yeah, I'm looking at the for the trading.
Netflix reports October the 17th. Why are they talking about getting assigned? Netflix. Let me take a look at Netflix. Netflix. Why are they talking about Netflix that way? Netflix, another one. Netflix looks like it's ready to go. Oh, I see what he's doing. Okay. $750 credit for the 675, 625 strike put spread. Wow, that's a nice credit. 675, 620. Yeah, me too. Me too. I'm thinking that we're going to see some resistance into September. So shorter time frames on, some of these options trades. And, longer term, we're good. Let's go take a look at TRBCX, for example. If you're an investor time frame, okay, TRBCX pulling back a little bit recently. You know what's a good one? Yoda brought to mind SPY-D. Okay, the dividend. That's still going. SPY-D. I believe that was you, Yoda, right? That brought this to our attention. Yoda, SPY-D.
And really what it is you're getting paid rent to possibly own the stock here in 3 weeks if we see a little bit of selling pressure.
Love it. All right, cool. Thank you, Dan Deming. Appreciate it, sir.
All right, Oliver, have a great weekend.
Yeah, thanks a lot. Dan, managing partner, TKM Financial. All right, Netflix looking solid. And the rest of the Mag 7 holding in. NASDAQ good. Got a little bit of chop, a little bit of a slight fade off of the high.
Microsoft's still chopping around.
Shape on this Friday. When we come back, we're going to talk a big.
Okay, you can afford to wait on Microsoft. I'm just looking at it for being above the money magic level, as long as it doesn't fade on me. I much prefer credit spreads because it's so easy to not have to worry about, direction or any of that. And every once in a while, try for a 2 or 3 point move into options. What am I trying to do here? Okay, so NVIDIA got rejected initially. Microsoft looking for a higher low. Okay, trying to get above this level 417 to move up to 420. Pinduoduo, looking for that to follow through. All right, so Microsoft pulling back a little bit. PDD looking for a pop. Looking for that to go. All right, it's above some supply levels. You can see this gap right here. That's the green. Moving above. All right, so next level is 102 on the 1 hour chart. Pinduoduo. Okay, Microsoft pulling back. I might take this off. Microsoft not working.
Thanks for swinging by, Carl.
No problem. So,
Listen to me adjust the bass, add more guitar, maybe some drums.
wow, so many choices.
Yeah.
Apple.
I can get full service wealth management.
Watching Apple.
On my own and trade on Thinkorswim.
No, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest.
Okay.
No politics, no noise.
Futures pulling back too, so it's going to take a lot of things with.
On any device for free. Schwab Network.
Yep.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get
Yeah, Rick Santelli said that yesterday. The interest payments on the debt alone exceeds the entire budget for the military.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
Supermicro pulling back. Okay.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
If you're looking for a big bull run in a consumer stock, you might want to build there. The shares of the company are up 120% in the last 3 years and just spiked again on earnings yesterday. Joining us, the CEO from Build-A-Bear Workshop, ticker BBW, Sharon Price John, President and CEO. Sharon, thanks for being here this morning.
Supermicro pulling back a bit.
Appreciate that. You guys have been on a pretty amazing run. The stock looks incredible. The numbers are consistent. What's allowing you to keep delivering this consistency in an economy that's gone through ups and downs?
Okay, what is JP Morgan doing? JP, I want to add to this. Okay, this looks like it's going to keep going. JP Morgan.
retail locations, which I think is what
JP Morgan.
right now, but also to intertwine that with
Okay, I want to wait for a dip. Okay.
a robust business, mostly with our collectors and adult side of the business that people didn't really realize that we had when we became multi-generational at about 20, 25 years old. So 40% of our sales are now
CrowdStrike. CrowdStrike. Fading again. Pinduoduo, no follow through. NVIDIA.
What is that older cohort buy? Are they buying like branded, like things that align? I know you guys have done like partnerships with like shows and entertainment, where people buy it like a gift, or they buy it as sort of like a collectible item. Is that one way you would describe those sales?
Yeah, Oliver, that's a big part of it. But Build-A-Bear is also pop culture. So while we
SMCI down.
really, important partnerships, whether that's entertainment, as you mentioned, we also have giftables, but we also have.
Okay, looking for a bounce. Super Micro still dropping here. Super Micro. Apple still pushing lower. Okay, so profit taking. All right, so the Microsoft's pulling back some, so take that off. That's not working. Microsoft, unfortunately. Okay, we got a bounce here. We got an area of liquidity. Microsoft.
That's great. So then, as you move that forward, how does that affect sort of the seasonality of the sales? I mean, it seems like it's obviously
Microsoft.
Is this sort of a big time of year from October into Christmas, et cetera, end of the year?
Okay, so we got this area of liquidity right below Microsoft. Let's see if they bounce this now. Okay, Apple's starting to turn. Apple. Okay, Apple off 0.3%. Let's take a look at Apple. Okay, New York FANG index stocks. Still got 8-to-1 up volume on the Qs. 8-to-1. Okay, so we need a follow-through day next week on Tuesday. Markets close on Monday for Labor Day.
Tell me about the status of that, because I feel like that's a big part of it.
Okay, we don't need that anymore.
Squishmallows. You guys sued them. They're owned by Berkshire Hathaway as well. So we've talked about it through that stock too. What's the status of that, Sharon?
Well, I think that one of the things that's important to understand, again, that Build-A-Bear's been around for 25 years, and we have our very well-known brand, and we're vertical. So we've created products for clearly a quarter of the century now. Where we have our own space and our own look and our own feel. And just to, of course, I can't speak about any sort of litigation, but we're just launching products that are based on our own intellectual property, and it's not actually
RSI trying to turn back up. Up volume leading.
Creating wonderful and important experiences for
all right, Apple turning the corner right now. Apple, let's take a look at Apple.
Jurisdiction over the competitor. Well, it was thrown out of Missouri federal court. Is it a big deal?
Okay, you got some liquidity there as well. Apple bouncing at a 50%. Okay.
Well, clearly I can't speak about litigation, but
Super Micro starting to bounce. Super Micro. NVIDIA looking for a bounce. Okay, the 0-day is squeezing. Bollinger Band's coming back together.
mini beans. So we also like to have these, are they cute? These are the ones for Halloween, a little mini bean like have that product in the make your own format. So
Apple.
and for us to have a broader range.
All right, looks like they're starting to buy some on Apple. Watch for this dip to get bought. Apple. Need to get back above VWAP.
As big as, of course, our core product line, which is the make your own product line.
VWAP.
Comparatively, no.
Microsoft bouncing. NVIDIA starting to show a sign of a bounce.
And doing this, like that to me is build the bear. Like that's, you know, the original. How much of it is everything that comes out of that process IP protected?
CNBC not broadcasting today? What's going on?
Well, there's quite a bit about Build-A-Bear that isn't much of
I would think.
Yes, so, but the products in question are not.
Microsoft, little bounce, but doesn't look like it's going to recover yet. The indices are chopping around as well. New York FANG stocks are mixed at the moment. Looks like Apple wants to turn.
Even in the creation of these new form factors, that they are clearly a part of the Build-A-Bear family.
Great stuff. Thanks a lot, Sharon. Appreciate the chat.
All right, thank you.
Appreciate the clarity. Appreciate the explanation for stock that's done so well here over the last 5 years. Stretch it back even further, but a fresh moves to the upside post earnings.
Amazon fading. Apple trying to turn the corner. Looks like Apple wants to turn.
Some charts for next week. We got Zscaler, we got Dollar Tree, Broadcom, mostly tech, but Dollar Tree might be fun after DG got slammed this week. So a couple of interesting moves here. Dollar Tree got hit along with it already.
$227.72 for Apple.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support.
JP Morgan. Looking to add to JP Morgan credit spreads.
Ready to tackle your trading questions.
Okay, JP Morgan. Okay, let me see here. JP Morgan. JP Morgan. Haven't pulled back yet, JP Morgan. Intraday did dip a little bit earlier. All right, JP Morgan's still going.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, I'm my favorite client.
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends.
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, well, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to
Okay, you can still get a credit of $1.34 on JP Morgan.
Schwab Network.
Okay, Microsoft trying to hold on. Apple attempting a reversal. Apple. NVIDIA trying to hold this little bounce level here. Apple. Watching Apple. Okay, Microsoft trying to do the same. Microsoft trying to turn the corner. Right at VWAP. Looking for the futures to bounce as well. Kind of looks very choppy. Seeing a lot of mixed signals at the moment.
Greater proportion of sales coming from consumables, like which then increase their strength pretty much. The CEO did say that they believe these softer sales trends are right now
Apple.
attributable to those that are more financially constrained, and they know the importance.
Apple trying to turn.
So they've taken this decisive action to enhance their value and convenience offerings. So either way, I don't really see this necessarily setting up like a strong report for Dollar Tree, given the fact that if they're competing with Dollar General, which Dollar Tree to me has always been.
Okay, let's go take a look at what's actually working today.
But still, if they're working now to compete with like a Dollar General, I mean, they have to be basically doing the exact same thing. I don't really know how the narrative changes.
Okay, we still got mostly green on the NASDAQ 100. Intel. Okay, into the gap. Company splitting. Manufacturing. Was it manufacturing and what? Let's see. Intel. Okay, here goes Microsoft with a nice bounce. So the dip, waiting for the dip, is working a lot better than buying where I bought. Intel, let's see. Intel up over 7%, best performer, blah, blah, blah. That's because of the company looking. Have they, or they're thinking about splitting up? Let's see. I don't see it here. Okay. There's another note, right?
We're down 44.5% off of those highs here, and unfortunately, things have kind of gone from bad to worse here. Yeah. You can see that now
Chip maker exploring options. Okay. Which could include a merger or a split induced. Okay. Include a merger or a split. Okay, Microsoft on the move. Scrapping some projects. Intel's potentially scrapping some projects.
Making a new low as well, and in the oversold area here. So really, very much geared towards the downside here. And if we
okay, keep an eye on Intel. That might be a nice trade. Intel looks like it's going to keep going. Intel's on the move. Some cheap options, maybe. I believe, Joel, you're still in this, right? Intel. You have January leaps, I believe. Okay, looks okay. We're at 22, so we're gonna have a short squeeze here on Intel. If you're thinking about taking a trade on Intel. Okay.
Yeah, that'd be a rough one here. But to the upside, our red lines here, a low point that we had, and then the low point before the gap down, 91.40, 94.20. Those are some points to watch to the upside.
91.40, it seems like, is the place you'd want to see the stock going next to try and get back into that range, right? Like that's going to be a tough place to get through now that we kind of had the gap through the old low. Yeah. There's going to be a lot of difficulty in getting really far through $90. You would think technically. So it's like we really might just open
Intel.
to a whole new level of trading down here.
This would be chasing at this point. So you want to look for a dip on Intel. Just like we did Microsoft. Waiting for the dip was better. Apple turning the corner. Good. Apple's turning the corner.
That's where I think I understand that, like, look, the margin stuff, Jenny's point, is difficult for them in the inflationary environment. But the other is just like the crushing moving averages showing.
Okay, Apple turning the corner. Apple looks like it's going to go. Nice chart post there, Rick. Okay, Apple.
Now taking a lot of the market from some of these other stores that were offering some of this.
Apple on the move.
Walmart's incredible for a reason, but just gobbling it up. So.
Apple on the move. Turning the corner. Apple looks like it could retrace much of this.
story. There have been some concerns about like its ability to carve out its niche in this like long-term, very competitive space. And recent sales organizational changes has also been perhaps a factor due to some of the underperformance. But I mean,
Intel looks good.
some solid numbers.
Apple looks good, rather.
So positive factors do include data and some more achievable estimates as they do try to find some stability here. Some recent changes.
Apple looks like it's going to keep going.
Some new hires for key roles. Well, it was seen as somewhat of a short-term disruption and higher sales staff turnover. I don't think that necessarily is unusual for this current environment. Management has acknowledged these risks already, and billings growth for fiscal 2025 has already been adjusted to about 20% year over year. The new billings.
Apple, nice reversal.
We already know those expectations, at least as we go into this report. Now, for this quarter, Zacks is estimating revenue of around $567.6 million. That would indicate growth of about 25% from last year on non-GAAP earnings that are expected to be around 69 cents. Or excuse me, that would mark around 69 cents. That would be about 8% to the upside of what we saw a year ago. So growth and top and bottom line. And I think that this week you look at the winners and losers of like the tech trade. It's pretty all over the place. But actually, amazingly so, if you want any sort of confidence, cybersecurity has been crushing it. I know CrowdStrike had its own very CrowdStrike.
Apple, nice reversal. Microsoft, nice reversal. Okay, looking good. Remember, we have Monday off for Labor Day.
Yeah, it was a good couple days here for sure for the cyber stuff and the cloud.
Let's see, Microsoft, Lulu.
Good assessment there too. When we've got 25%, top line, it's nothing to complain about. But it seems like we still haven't been able to punch quite through where we were last month, Rick.
Yeah, kind of a range that we've seen established during the recent trading since like our last earnings event in May or so here. So we've got a double bottom type.
Microsoft looking for a follow through. Apple doing well. Nice turn.
To the upside near 208.14 here, and you can see, we didn't really make our way up to that previous peak that we saw here, and indeed we also did not.
Nvidia turning back up as well, so we're getting a nice little bounce so far. Supermicro also turning back up. Supermicro.
Look at our moving averages. They're all kind of clumped together, kind of just moving sideways. The faster one.
All right, what's Tesla doing? Tesla. Okay, Tesla looks good. I would like to sell some credit spreads on Tesla. We're not too far away from VWAP. If that starts to go, maybe some 205, something like that. Tesla. Apple looking good. We got supply overhead at 230.
Roughly kind of the middle of the range here. Not exactly, but the trading is mostly kind of centered around these two areas. So these are definitely points to watch going forward here. RSI exhibiting a very mild, very slight triangular shape here. You can see the last few times we've crossed into the oversold area, we started making our way back upward pretty quickly here. And we also have a very slightly higher low each time. Same situation here in reverse. Very slightly lower high here, but we are still in bullish territory. So perhaps things are a little bit more geared toward the upside. Points to watch, 208.14, and then eventually as well, we had our high point after our gap down, 227.30 at our pink line. To the downside, take your pick from these moving averages. We got a bunch to grapple with here, as well as our volume nodes that I mentioned. Ultimately, 176 will be a key point to our volume profile fully control.
Nice, all right, and which is a good place.
Okay, Apple, Microsoft, still looking for these to follow through.
Previous high. That kind of shows that it's holding and it's building momentum, essentially.
Caterpillar, another one that I would like to add to. Caterpillar. Credit spread on Caterpillar. Put credit. Caterpillar. All right, so it's just grinding along. Where are we? 353.73. So we're above this pivot. So next pivot is 362 and then 367 on Caterpillar. Bollinger Bands turned up 921.50, 200-day are all pointing up and to the right. So this is good for credit spreads. Caterpillar, currently I have the October 18th, 340, 330 put, 340, 330 on Caterpillar. Okay, so Caterpillar, if you're interested in credit spreads, Caterpillar. Okay, this is a credit spread I have presently. Looking for this to continue higher. It's moved above these two pivots right here. Next pivot is this one over here, 362, 363 really, 363, 367. So this will probably just keep cruising. Yesterday's high, 356.50. Looks like they're killing some premium.
Sort of, I'd say, stealing away from some of the growth of the AI trade have dragged on the overall growth, but this is still part of the business we have to address. It's not like this is a pure play into AI by any means. So,
To which that you allude to are what people
Microsoft's still chopping around here. I almost said McDonald's. McDonald's, how's that doing? McDonald's. Okay, still flagging. Okay, lately the restaurants and bars were looking good. Those are fading now. Wingstop. Okay, those pulling back. All right, what was I looking at here? There was a couple. Coca-Cola, Home Depot, Zeta. Okay, let's look at Zeta. Zeta. Okay, still trending. Home Depot. Okay. Home Depot. Starbucks. Speaking of that, let's look at Starbucks. What's Starbucks doing? That finally move at all? Starbucks. Starbucks still sitting here, consolidating. Microsoft pulling back again.
They come at the expense of the company. It's why when companies are trying to improve their bottom line, sometimes they turn to layoffs of their workforce in order to sort of improve the fundamentals internally, right? It costs money.
Nvidia, nothing yet.
These numbers of weeks, 24 weeks, some companies like Nvidia.
Amazon fading.
For paid leave for primary parents. So again, it's perhaps the fact that these companies have the means in order to provide for their employees in this way.
Yeah, money matters. Brandon, great story. Thank you. Brandon Gomez. You are seeing those chip makers up today. Coming up on the show.
Ooh, what time is it? Oh, okay. I got to make an alert here. I got to take my son to school here shortly. He's in high school now. First football game he's going to go to. Remember the high school football games? Hanging out with your friends? Okay, let's see. Here we go. Okay, so alarms. Edit that one. 11:05. That way, go get him. Save. All right, so that's good. Yep. All right, Microsoft. I keep saying McDonald's. Microsoft still dipping, chopping around flat VWAP. It might just be one of those days where we don't move on Microsoft. Okay, let's see what else is working. MongoDB is up almost 15%. MongoDB. Okay, that pulled back. MongoDB pulling back and bouncing. Intel. All right, so Intel, if you like the idea of what Intel is doing, you're starting to see a dip now. Okay, Marvell turning the corner. Marvell looks like it's going to go. Broadcom, nice bounce after the pullback. Autodesk after earnings. CrowdStrike, consolidating. CrowdStrike. LRCX. Let me see. Maybe I want to take CrowdStrike off here. Let's see, CrowdStrike.
Today is Bitcoin's down about 8 bit. Right, Nasdaq pretty close to the highs of the session. It's still looking pretty good as far as equities go.
CrowdStrike. Inside day. Qualcomm. Qualcomm looks really strong. Qualcomm strong. Trending on the 5-minute Qualcomm. Okay, On Semiconductor. NXPI, Semi. All right, ABCD pattern early. CrowdStrike, LRCX, Qualcomm, Pinduoduo, Sideways, Analog Devices, ADI, NVIDIA, looking for the bounce in NVIDIA. Looks like they're killing premium, just sitting here. Market's not doing anything. All right, so can we get the S&P to break higher? S&P. Okay, so Bollinger Bands are tightening up on the 5-minute 0-day setup. You've got all green on the up-down volume, bold. ADD, however, is at 830 and fading, so no follow through yet on advancing and declining issues. Bald, okay, that looks okay. Tick is at 180. Apple. Buyers at the low of the day for Apple. Microsoft trying to do something and get into this wick. Yesterday's wick.
Scott, it seems like we got another great opportunity here. Good earnings from overnight, and Marvell got a lot of stuff working in tech this morning. Inflation hits. I mean, anything to complain about?
Well, not as far as that goes, right? I mean, here we are. We're coming to the end of the summer. I think
it's happened to me. Question. So we'll just have to wait and see. But I think the Fed has to be careful not to indicate.
Okay, Supermicro trying to turn, but it is a bear flag for now. NVIDIA trying to turn back up as well. Apple trying to hold on to VWAP. Apple.
Letting the inflation horse out of the barn, as I like to say, with the transitory argument. So I think a quarter-point cut would be a good start, and then we'll just have to see what the data shows us from there.
Okay, from here, 11 o'clock through around 12, probably better entries. If you missed entries this morning and you're not taking profits already, you probably want to watch Tesla. Tesla looking like it's going to do something here. Tesla, you probably want to wait around 11 o'clock. You get these pullbacks. What is this about? Why is this showing me? Okay, there we go. Okay, so this is continuing to grind higher. Let's look at Microsoft. All right, little dips. No follow through yet. Apple. Higher lows, trying to hold on. NVIDIA. Okay, these just don't feel like there's momentum here, do they? I don't feel the momentum. Okay. Supermicro still looks like a bear flag, could roll over again. Microsoft, no follow through.
Previously, this to me is the biggest concern that I have right now. It's not so much the Fed. I feel comfortable with them. Yeah. The question is, what's going to happen with the cost of carry? What's going to happen with the growing volume of treasury auctions? Are we running a risk with China reducing their holding in the Fed, even though they're titrating up, selling off or letting roll off the remainder of their balance sheet from that large size that they collected? Who's going to buy the stuff at what price? And do we run the risk, as Canada did some years ago, of having a failed auction? That will determine the key interest rate, which is the 10-year and the 7.
Okay, Microsoft, nothing yet. Okay, so it looks like they're going to frustrate traders that are looking for the quick fix. Tesla, Apple, Supermicro, looks like a bear flag. Nvidia, no follow through yet.
Including the economic growth over time, over 10 years. Harris is below that, about 1.2 trillion. Nobody, though, talking significantly about deficit reduction at this point in a meaningful way, are they?
They're not, and they're projected right now to be more than 1 trillion every year for the next 10 years at least.
0-day setup, still squeezing, still squeezing.
Banker by trade, and I stay away from politics, but if you look at the economics,
Up, down volume, still bullish.
there's no discussion.
Just feels like the next shoe's going to drop at this point. Okay, Bitcoin pulled back quite dramatically, erasing yesterday's gains. Bitcoin.
We spend on our military in a very difficult time, challenging time globally. So I appreciate the word study. They don't seem to want to talk about it, these two candidates. And they're going to have to address this if they get into office because it's a serious matter. Having said that, it's the Congress that determines the budget. And the Ways and Means Committee has also been negligent under either administration in trying to rein this in, and that's where you decide who you tax, what you tax at, and where you spend.
Which we have to leave it there, sadly, but great to see you. Thanks for joining us.
Okay. Yeah, let's try to focus on trading. I don't know if I opened up a can of worms or whatever, but let's try to focus on trading. Let's see, Apple, Microsoft pulling back a bit more. Apple, yeah, so we're not getting any kind of follow through. No follow through.
Obviously, after the fall yesterday on those earnings that were in many ways certainly better than any of the estimates out there, but perhaps fell short of the most optimistic.
We got a fade at the moment, no follow through. So, yeah, there's nothing there yet. Nothing here yet. Probably going to have to wait until the evening session, afternoon session. It's almost 11 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Last trading day of the month, Friday the 30th. Markets looked like they were going to do something, and then we just kind of took the fizzle out of the soda.
Quick programming note before we send you to a break. Be sure to watch. We got a big interview. It's next week, but you want to start preparing for it right now. You want to get your
Dollar General trying to break out.
Olympic gold medalist, four-time NBA champion Steph Curry is going to join us Tuesday morning, 10:30 a.m. Eastern.
Okay, let's look at Dollar General. All right, Microsoft dropping. Microsoft dropping. Microsoft, I'm stopped out of Microsoft. Okay, Dollar General. Okay, big gap down. Mondo, you've been doing these gap downs quite a bit, eh? Those working out pretty good for you. Dollar General. Nice little bounce so far. Turning the corner. Dollar General. Yeah, Money Magic saying caution earlier. Bitcoin dropping off. Okay, so looks like a fade so far. Dollar General. Microsoft, that got stopped out. Yeah, there's no follow through at the moment. The markets are just not doing anything, just kind of crappy. Money Magic giving a caution signal earlier on the long side. All right, so watching, been pretty much sideways all week. Okay. So the most we pulled back was about what, 2%? September, just remember, September tends to be a pretty nasty month. So have a game plan. My game plan is to reduce exposure. Okay. RSI still sideways. RSI still sideways. MACD's flattening out. We got 2 distribution days. Stochastics is flat. Got 2 distribution days. Feels like distribution up here, folks.
Money movers, I'm Wilfred Cross along with Seema Modi. We're live from the floor of the New York Stock Exchange. Coming up today, stocks continue their march higher on the back of fresh inflation data. The Dow coming off its 25th record close of the year. How far can stocks bounce from the early August lows?
And then building the next NVIDIA rival, the former president of SoftBank, on how he's thinking about alternative AI plays.
Last 2 tech names helping to lead the Nasdaq 100 and the S&P this morning. The CEOs of MongoDB and Autodesk both join us on the
Okay, we still got mostly green on the NASDAQ 100. We got about 25, maybe 30 stocks red, but the majority are still green.
Let's bring in CNBC senior markets commentator Mike Santoli. Last trading day of August. And
Apple. All right, S&P. Gap is down here at 55.92. We're still up on the day. 18 handles. All right, we just tapped a level there and reversed. Futures are reversing now.
Validates the market's view that inflation's last year's problem. Let's move on to concerns about growth that can ease into a resilient economy. That's the keep it simple bull case. And I think it still applies. I do find it interesting that
S&P. Okay. Very choppy. Very choppy. Sucking people in on both sides.
and bumping up against just below the all-time highs. That was over 6 weeks ago right now. In the midst of those 6 weeks, no net progress on the S&P, but the majority of sectors are beating the S&P. And it's been a defensive move, but somewhat rotation out of expensive crowded tech into other areas, rate-sensitive areas. It's
Okay.
the question is that enough to continue on higher? When we look at the performance
S&P.
for the month as a whole, it looks like the Dow will be the best performer. Was that true on the way down in those first few days that the Dow is the worst performer, or has it, as we bounced, have we really transitioned as well?
No, I think that really more reflects this rotation that's happened. I mean, the Dow is generally going to be a slower moving index, and so it is interesting when it does.
Okay, so with the choppy markets like this, good for premium selling because of volatility. Want to keep the volatility up. Let's see what VIX is. VIX. Okay, that's back down to 15 and change. 1540 on the VIX. Majority of the NASDAQ is green. So let's take a look at breadth real quick. Breadth still looking okay. All right. NIMO. Okay, starting to show signs that we could follow through. But distribution been moving sideways into the month of September, with everyone expecting, including myself, many people expecting another bearish month. September starts next week. Okay, NIMO, NYSE summation index turned up. You about ready, bud? What you need?
Do you know if we have another Nikon lens?
Another Nikon lens?
Yeah, for the M60.
Oh.
Nikon. It's an M60, and the only ones that I know we have is the one that's on it. Do you know if there's any more?
No, I don't think so. Oh, you talking about the 35 millimeter?
It's a 35 millimeter.
Why, you going to take it to school?
No, football game.
Okay.
Not
some of
specifically
the
that.
more
Okay.
volatile
All right.
Other friends is gonna bring a camera, but they don't have a long enough, big enough lens. That one's 80 millimeters, so it'll be all right. But
What the my camera? Taking that to the game? I don't like that idea. That's a $2,000 camera. Somebody decides they want to knock you on the head and take my camera. As long as you hang out with your friends, you're probably okay. Okay. All right. Well, get ready because we got to go.
You're going to be seeing better participation from the rest of the market, which is also an environment where, for many of our clients, where we lean more heavily into active management, especially in small cap and international equities. Active management should do better in this.
Trading, please.
Do you get worried, Megan, that we're pricing in too many rate cuts, and if they don't come along, if we don't
Okay.
get if we don't get 100 in total by the end of the year, that will then disappear?
All right. Looking for. Are we gonna get another bounce? All right. So let me get squared away here because I got to take my son to school. Should take me about 40 minutes. We got down a pattern. Okay. S&P cash. Okay. Okay, let me just change this banner.
Most of next year, we have a rate cut priced into every meeting for the next 12 months. So I think that's the more important point than do we get 25 or 50. In fact, I think it might be better for the market to get 25 basis point rate cuts at each meeting because you probably get the 50 basis point cut if data starts to deteriorate, as you were just talking about. I think good data.
Okay, I got to run. I'm going to go drop him off, and I'll be back. I'm your host, Cousin Minnie, coming to you from theclosingprint.com. We're at the 11 o'clock hour. We generally see pivots at this time of day. We're starting to see a pivot. Looks like it could be a bear flag, though, so caution warranted. Okay. If you look at money magic levels, the indices pointing, well, they're mixed, but the diamonds, the Dow is pointing down and everything else is pointing up. Okay. So I shall return, probably be back here before 12 o'clock, straight up noon. All right. So watch the markets. It's a Friday, so I don't think a lot of trading is going to be first and foremost in people's minds at the moment. So just take it easy. And if we do get a bounce, great. If not, just look for more choppiness. We are in a big range on the S&P. Okay, the S&P is in a sideways range. So we're either going to move up or down, obviously. So just keep it cautious, and I'll be back shortly.
Because with inflation moving lower, we are monitoring inventories building a little bit in the retail space. It's really going to be important to find those companies that have that pricing power and can maintain those margins in the face of slowing inflation.
Yeah, I see that you're overweight consumer discretionary. You're also overweight tech, which has had not such a great month in the month of August. But where are you sizing up the opportunity within tech, as you say, to find those winners, hardware versus software, chip makers versus more the AI companies? Where do you see the opportunity?
Well, I think within tech, it's maintaining a stronghold in the AI players. And that has gotten a little bit of maybe reduced enthusiasm, a little bit of skepticism around the amount of spend that we will see in that space and how much actual profitability and productivity growth will be realized from AI. And I think it's just we try to remind our clients this is a long runway. This is a story that's really more about secular growth taking place over a 3 to 5 year time horizon plus even. So for that, really patient. But on the broadening theme, I think it's really exciting that we're seeing some better participation across the tech sector. Not just in the AI plays. So if you think about, as you said, software, hardware, I think has been a little bit more challenged, especially as you think about maybe some exposure to the consumer and some of the goods price deflation that we've seen there. But I think that there are opportunities not just in those few names. It's really across the sector.
Megan, great to see you. Thanks so much.
Thank you.
This week's been all about AI with NVIDIA reporting earnings and that AI boom creating a big need for cooling in the data center industry.
Think for 50 basis points. My surprise, Caroline, 25 in September.
And if they cut 25 in September, is that setting themselves up for failure down the road, that potentially we, could see a recession or a weakening economy?
That's the risk. Failure is a big word, but that would be the risk.
Okay. I also want to ask you just about in terms of the political landscape right now. It's obviously an election year. Just heard from the Harris camp last night with the CNN interview, learning more about Harris's policies. Trump has weighed in on some of his policies as well. What is the main takeaway that you have found so far in terms of what they're offering as it relates to economic policy?
Well, there's not an awful lot actually on the table. But what I find more curious as an economist and looks at these things from a kind of a big picture perspective is this kind of parallel universe that we get into during particularly election season, where the candidates and the sort of the pundits speak in terms as if the president manages the whole economy, whereas people in the markets and economists like ourselves know that actually that's the Fed's job. So there's this disconnect where politicians sort of feel the onus that they have to almost pretend that they will be able to come out with policies to manage the economy, particularly the macro economy, employment and inflation, and yet that's the Fed's job. So there is a temptation then to kind of weigh in on the Fed as well. And of course, President Trump, former President Trump, got into a little bit of hot water when he dipped his toe in that pond.
He used to move the markets all the time when he was president, though, really encouraging Chair Powell to lower rates before he actually did it. So he says he wants more of a hand in interest rate policy.
Yeah, and of course that sets economists' hair on fire because independence of the Fed is sacrosanct and of course very, very valuable. But I do think, and I'm a little bit perhaps in a minority here in the US, that there are ways of improving the communication and the coordination between fiscal policy, which is set by the Congress, and obviously the executive implements it as a pen, and monetary policy, because both of them do influence aggregate demand. Both of them do influence inflation. So a little bit better kind of coordination or communication, at least, I think would be valuable.
All right, Paul Sheard, we have to leave it there. Thank you so much. Really interesting insights.
It's a pleasure, Caroline.
All right, that's author of Wall Street Journal bestseller, The Power of Money. Plenty more to come on Trading 360. Next up, it's the big three stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the technicals, and Achilles Larea is here from Larea Wealth Management. He'll take us through the trades for Caterpillar, Hilton, and Microsoft. That's next on Trading 360 on Schwab Network. We'll be right back.
It's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Caroline Woods. It's time for the big three stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. And here at the desk to take us through the trades is Achilles Araya, founder and CEO of Laraya Wealth Management. Ben, great to have you on. Achilles, great to have you here with us. Let's start with you since you're here with me. Your first trade, Caterpillar. It's actually had a pretty impressive run year to date, up about 20% year to date, up about 2% this month. And you like it?
Yeah, it's the NVIDIA of their type sector. No, but in all honesty, Caterpillar has been doing a run that's very impressive lately. Even this year, after the run that they had last year, we saw a real move to the upside, good income as far as dividend is concerned, the infrastructure play. We're also seeing a lot of outperforming on this stock. A lot of the houses like what it's doing, and we're looking at anywhere between a 10 to 15% move to the upside. And I think that's kind of conservative right now. There are still a lot of infrastructure that needs to be addressed in the United States, and Caterpillar is going to be one of the beneficiaries of that particular movement to the upside. Secondly, you have to remember that this company has not been performing like an infrastructure company. It's been performing like a tech sector company, and towards that end, we're looking anywhere on an annual basis, double digits and above. So that's a great company to have in your arsenal to keep going towards the upside. We're not looking for it to do 30% as we saw previously, but we are looking for that 10 to 12 to 15%, and then we'll reevaluate that going forward. We might have to knock it back if we start to see that infrastructure is not moving as it was before. But right now, it looks pretty good on paper.
Although I could see you comparing it to certain tech stocks with a 20% year-to-date gain. I don't think you can compare it to NVIDIA. 20% is modest for NVIDIA. But Ben, want to talk to you about what you see in the charts, because Achilles says it's already up double digits year-to-date, double digits to come. Is that what the charts show?
Absolutely, Caroline. Good to see you. It's not only looking good on paper, the chart behind me looks pretty good as well, especially after earnings, right? The fact that they've been able to build on some of that momentum that they saw. No rejection in the upper levels. Let's take a look at a few different time frames. Wanted to start off with a more granular. I've got a 15-minute candle chart. And speaking of those earnings, it was just a few weeks ago that we saw some volatility related to, and then again, a nice move higher in reaction. So holding this upper level, no rejection of. Let's step away from the 15-minute candle chart and put a little bit more time on to this discussion, or add a little time, I should say. I've got a 4-hour candle chart here now, and you can see in this instance a pretty well-defined trend up here also. So it's not just the more intraday, you can also see the more intermediate. We're going all the way back to, in this instance, we're talking end of last year, beginning of this year, back in December of 2023, January of 2024, stock was rallying up to that balance that we formed around 290. We broke out again to the upside, topped out around 382, and since then it's been pretty much sideways. Well-defined upper extreme. We're talking about the highs from March, if you remember, middle of and beginning of April, and then we've got the lows that we saw back in August. A swift recovery off those lows. Not only recover off this low back in August, Caroline, but a move back to the balance area, which oftentimes lends itself to retest some of these extremes, these highs that we've seen. So there's some energy right now to the upside here, to say the least, not only on that 15-minute candle chart since earnings, but going all the way back to the end of last year, beginning of this year. Going to add a little time on. You're going to see a very similar pattern, bottom left, top right, well-defined trend. In this instance, Caroline, I think it's pretty easily identifiable, but this stock's in a well-defined trend up off those pandemic lows in the bottom left corner of your screen. That was around 88, if you remember, to briefly above 382 we mentioned back in April, currently forming balance. We're around 360 right now, so this is value. This is acceptance of this upper level, and it's a reflection of the bullish fundamentals that Achilles just laid out.
All right, so you have some agreement from Ben there. I should note industrials actually outperforming tech for the month of August. Industrials up about 2%, tech only up about 0.5%. So is this a stock-specific call or a call on the broader sector?
the sector is doing pretty well overall, but I believe this is more stock selection. This has been one of my picks that has outperformed the other picks in the sector, and we're just going to stick with this. But should there be any type of regression to the mean, a pullback or correction, of course we're going to reevaluate our position and say, hey, what's the next step for this? Do we need to readjust our moving forward our targets?
Okay, and your next trade is Hilton Worldwide, another stock that's up about 20% year to date. Obviously, different industry though. Why do you like this one?
Hilton was one of the first companies that was affected by the COVID and the pandemic overall, and so they started downward that particular point. But I remember I was on this show saying to another anchor, I was saying to Nicole,
you can say her name, it's okay.
I said to Nicole, I go, this particular stock, the minute the pandemic starts to abate, this is going to be the first stock that starts taking off. And true to form, Hilton took off, gangbusters. We saw 20% from last year, 45+%. So we saw a huge movement to the upside. We still believe that there's still running room for Hilton to go. And that's really based on the fact that what they have is more operator owned than anything. So their people, their franchisees per se, or their owners are doing the right thing. Hilton is providing the guidance, but we're looking at a little lower as far as expectations are concerned. I'm thinking about 8% in a 12 to 18 month time frame. So I want to keep expectations down. I also want to warn people, if you have a chance to pick up this stock, wait till it goes down just a little bit, maybe 2%, if there's a correction upcoming. We have corrections in September. Hedge funds sell off, mutual funds declare their losses and gains at that time of year. That might be the time to come in again, not just from now, but again to go in and to say, I'm going to go pick up and accumulate a little bit more.
Okay, not seeing that pullback today, up about 0.25%. Ben, want you to weigh in on Hilton. Achilles says there's room to run, although I'm taking a look, it's only 5% away from the highs. Think it can get there?
Yeah, I don't like to necessarily predict if there's room to run, but I can tell you that we have yet to reject these upper levels. I mean, this is a beautiful chart for the bulls right now, which remain in charge clearly at this point. No indication that they're not. Let's do it to it in a very similar fashion as we did with our last example. We'll break it down across a few different time frames, and you're going to see a very similar situation playing out as we were just talking about in terms of CAT. Bottom left, top right, across multiple time frames, no rejection of recent upper levels. So again, this is a stock that's got some a bit of wind in its sails right now, to say the least. I guess is the best way of putting it. A 5-minute candle chart is where I wanted to begin with, because it's a pretty good example of what I like to look for, Caroline. The left side of your screen, you can see those big green candles. So major conviction of the upside, which you kind of lose at some point, right? It's tough to sustain that kind of momentum higher or lower. At some point, you kind of start to become a bit more rotational and sideways, and that's where you establish value. In this instance, pretty easily identifiable, right around $218. This is a 5-minute candle chart, but again, big move up, sideways consolidation, value forming, and no rejection of this upper level. Taking a look here, adding a bit of time on, I've gone from a 5-minute to a 4 hour, so from a granular to intermediate time frame, and hey, similar pattern as you can see, bottom left, top right, high conviction on the left side of your screen. We're talking about in the beginning of the year into the middle to end of January. We saw that all the way through to March. And then again, basically went sideways, breakout to the upside that failed to see real follow through. And again, essentially in this instance, again, your 4-hour candle chart now, we're forming value around 210. So one more step back, similar pattern playing out. Again, from a 5-minute to a 4-hour, now we're looking at a weekly candle chart. So we've gone all the way back to the spring of 2020. That's the low that Achilles was talking about, the rip off of it. Into 2022, we're talking about rallying from, well, it was around, what was it? It was that $60 level, if I remember correctly. That's right, up and through 100 with conviction, balanced out around 135, broke out again. Look at this high conviction trade here that you see, green candles, and then balance forming again, acceptance of this most recent area, acceptance of that big move up that we've seen off the October lows from last year. 210s where we're forming value around right now. Bulls are in charge and in control here as well, Caroline.
All right, so Ben doesn't like to weigh in if there's room to run, but I was taking a look at Wall Street analysts, basically split between buy and hold, 47% buy, 53% hold. $217 median price target, which would imply a little bit of downside from current levels. But we'll have to see who ends up being right here. Just before we get to your next trade, I do want to ask kind of similar sector versus company specific, because this earnings season, I feel like there was a lot of caution in terms of not just discretionary, but really around travel, whether it be from Disney, Expedia, Booking, Airbnb, you know, it's kind of waving a little bit of caution flags, if you will. Is this a vote yes for Hilton or for the overall sector?
Both. I think that we're seeing growth in the sector that's catching up to what Hilton is at currently, but I believe that they are the leaders in their sector overall. I also believe that overall people have decided to go back taking their vacation, taking their mini vacations and the like. So all these companies are going to benefit from that at this point, Caroline.
Okay. And I did see articles that there's more $1,000 a night hotels than at any other time. So certainly seems to be a positive for the hotel industry. Bad news for the rest of us. All right, your last trade is Microsoft. Microsoft shares up about 0.5% right now. Tell us why you think this one has room to run.
Yeah, you know, Microsoft is having a ho-hummy kind of year right now. It's only up 10% only, I said. But you have to remember, what is the big driver in their revenue right now? The association with the AI, the artificial intelligence that's occurring right now, that's moving the stock. We could see it go double digit. I'm looking for a 10 to 12% move to the upside, but that's really driven by the future. The AI that's occurring now being associated with it, like NVIDIA, like other performers in the sector. Microsoft has just decided that they're going all in purchasing companies that have this technology and are going to run with it. And I believe they'll continue to do the same if given the opportunity, if there's another company out there that has that future forward thinking technology that they have now currently, they're going to go ahead and get more. If anything, we're looking at a pullback in this. Once again, probably September or so, looking at that pullback might be another time to go and get more, because you can make, just for the end of the year, you can make yourself a quick 4 to 6% if you're smart and strategic about it.
Okay. Ben, you're looking at Microsoft from the technical standpoint. It's down a little less than 1% this month, so not as bad as July, but what are the technicals showing you?
Yeah, you were just talking about some of the strength we'd seen CAT, right, versus Microsoft and the month of August. Stark contrast. Short-term weakness, long-term strength. Caroline, let's get into it. First and foremost, a 1-hour candle chart. Just wanted to show you what I mean in terms of short-term weakness, because there has been a little bit of selling going on. It actually occurred, if you remember, off that 470 level all the way to these lows that we saw down around 383, but mostly sideways since. This recovery I'm seeing is kind of losing momentum. If anything, it sort of feels like we're starting to roll over here right now. So keeping an eye on, again, some of that short-term weakness, but you're also going to see that playing out on the 4-hour candle chart, because take a look at the left side of the screen here where we were rallying. We had seen a bit of momentum into those highs, again, up around 470, but every area of value that formed on the way up is kind of like a footprint in the sand on the path that we take, and you don't want to see those start to get wiped out, because it just invalidates the idea that we're trending higher, and that's exactly what we happened when we reached that 445 level. So that was a line in the sand that the bulls didn't want to see cross, and in fact, they did. So we've lost some momentum since, and you can see that on longer-term charts as well. It's still in a well-defined trend up off those lows from last fall around 310, but it's definitely losing some momentum. That breach of 410, it was not what the bulls wanted to see, to say the least. So keeping an eye on a stock that's kind of in no man's land here right now, longer-term trend to the upside. Looks like it's still intact, but that breach of 410 definitely bringing things into question here.
All right, we have to leave it there. Ben Lichtenstein, Achilles Larea, thank you both so much for being here. Coming up next, we're going to spotlight Dell after its latest second quarter report exceeded expectations, driven by strength in AI server sales. We'll break down its latest report and discuss what's next for Dell. Stay with us. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Trading 360. I'm Caroline Woods, live from the New York Stock Exchange. It's time to spotlight Dell after reporting earnings last night. Joining us for that is Eric Compton, equity strategist at Morningstar. Eric, great to have you here with us. And taking a look, shares of Dell up about 1.6% following this earnings and revenue beat, 80% increase in server sales. Walk us through the highlights.
Yeah, I think you hit the nail on the head there. Really, what everyone was going to be focused on was what is the AI server business doing? That's the key growth driver for Dell right now, and also one of the hardest things to predict when things are growing at 80, 100, 100+%. It's hard to know exactly where they're going to come in. So we thought AI server sales were going to come in at about 2.4 billion for the quarter, and instead they were at 3.1. So growing 100% sequentially quarter over quarter yet again, which was really impressive to us. So that led to the revenue raise from management for guidance, also led us to increase our revenue outlook. So I think strength in AI server sales was very impressive for Dell in the quarter. That was a key part of the story. The other part is just margins. So we were expecting AI server is generally lower margin product right now. We were expecting if AI server sales growing, it's going to put pressure on margins, and instead it was the opposite. So that was really the first time we've seen a company like Dell increase AI server sales, but still see an improvement in margins in the underlying segment that sells those products. So I think it was really impressive all around.
So you talked about that revenue boost to the guidance. It was kind of slight, though. The company now expecting 95.5 to 98.5 billion. There was some talk that maybe that would be a little bit disappointing, but it seems to be impressing investors somewhat today with shares up a little less than 2%.
Yeah, I think you're hitting on a couple points there. So one is just valuation and its relationship to these expectations. And so on the one hand, the revenue guide was increased by about 2%. A lot of these AI stocks, you kind of go in expecting maybe even bigger beats. And I think the fact that there was a beat, that AI server sales were so strong, and yet shares have only moved low single-digit percentage. It shows it certainly wasn't disappointing, but even with those beats, there are some expectations baked into that valuation. So it is hard to move the stock a lot, even when you are, increasing these AI server revenues 100%. I think, the other thing, like I already mentioned, I think that really impressed us, and that's going to be something which led to our fair value raise, probably even more so, is just the change in the margin outlook, where you've seen other competitors, as they've grown their sales here, margins have compressed. It seems like Dell is really the only one among its peers where they're actually starting to maybe not compete fully on price, but able to add some value in some of the installation, the integration. And so longer term, we raised our margin forecast there. And that's what led us to raise our fair value. Even with that raise, we're still right at the market level. So again, we think maybe the market kind of got it right on this one, even with the beats in the quarter.
Well, that's what I was going to say. You were impressed enough to boost your price target, your fair value estimate, as you call it, but it's $112 a share, and Dell's currently trading at $113 a share right now. So you think it's all baked in, no room to run from here?
I would say so. I mean, certainly a lot of uncertainty with a name like this, where you do have such volatility in sales, where things can move 100% sequentially. So I think we think we've got healthy AI server growth even next year, growing another 30% and growing even more after that. Could Dell even exceed that? Certainly a possibility. But yeah, our best view of where we think growth is going to go, yeah, we think the market's got it fully baked in at this point.
You know, we've talked a lot about the key growth driver being the infrastructure solutions group, but there's also the client solutions group, which is of course the PC and laptops. But we used to know Dell for that continued to see negative growth there. Revenue declined 4%. Consumer sales fell 22%. Enterprise was flat. That's a difference than what we saw in the HPQs and Lenovo's of the world, which actually saw growth. So how important is it for that division to catch up, or is this just an AI play at this stage?
Yeah, you're right. I think compared to peers, kind of what we would have expected from Dell in that quarter, sales growth in the PC unit was a little, you could say a little disappointing. Didn't comp quite as well. And that does matter a bit, but I would kind of agree with your second point where the ISG unit, which is where those AI servers are, where their storage business is, that's just a bigger part of the business. And as AI servers grow, it's just becoming more and more important. It's also higher margin. So it's really, I would agree with that second statement. That's really the driver right now. So small misses compared to peers on PCs. Yeah, you'd like to see strength all around, but that's just going to be much less important than what we're seeing in the ISG segment.
All right, we have to leave it there, but Dell shares gaining ground, up 3% now, trading around $114 a share. Thank you so much for joining us.
All right, thanks.
That was Eric Compton of Morningstar. Coming up next, it's time for the disruptors. We'll focus on MongoDB, which is soaring after releasing its quarterly results. Blew past investors' expectations and analysts' expectations. George Sillis is standing by to discuss the stock and give us an example trade. And a programming alert. A new talk show called Inside the Mind of a Trader is coming to Schwab Network in September. Created and produced by Charles Schwab, it's a journey into the minds of people who trade brilliantly. Here's a look at what you can expect.
The emotional aspect of trading is probably the hardest part, because at the end of the day, every single trader has had experience where they may be up a lot and they let the trade completely reverse and then go into losses, and they're pounding the table and saying, I wish I took my profits. And being able to recognize that and to basically take steps to prevent that happening, I think is one of the most important aspects of trading, because anyone can make money. Keeping the money is really key.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Caroline Woods, live from the New York Stock Exchange. For a look at developing stories this morning, I'd like to bring in Alex Coffey, co-host of Next Gen Investing here on Schwab Network. Alex, you're taking a look at Intel today. Share is having a great day, up about 9%. I have this AI watch list, and Intel is at the top of the list in terms of gains. Not every day that you can say that about Intel, but what's driving shares higher today?
Yeah, most days I would say it's the other way around, at least recently, Caroline. This has been a stock that's been under tremendous pressure for really years now, but accelerating in its most recent earnings event where it did suspend the dividend and sort of almost went to its shell a little bit to play some defense. Now, we got some more updates as the company basically, this of course reported by Bloomberg, is said to be considering options, including a foundry split.
investment bankers are working with Intel to help navigate what is described as its most difficult period in its 56-year history. This again reported by Bloomberg that they're considering various scenarios, including a split of its product design and manufacturing business, as well as which factory projects might potentially be scrapped altogether. So they need to make some changes. What those changes are obviously still being hashed out, but this is the latest update. And so far, it's led to a little bit of optimism. Real tangible things possibly done by Intel as they march back on this road to recovery. But we're still talking about a stock, even with today's move of nearly 9%, that's down over 50 over the last 6 months. It is back over, $20 a share, pushing 22 here. It did bottom out just below 19, so quite a bit off of its lows already, Caroline, but nowhere near where it was just a few months ago.
You know, there's so many headlines about changes that are steps that Intel is making to try to better its business and better compete against the rivals, whether it be cutting $10 billion or slashing 15% of its workforce. There were those reports that it's, talking to advisors about trying to defend itself against activist investors. But it just seems like at this point, a lot of the talk is what would an activist investor even do, because they've been trying to make so many changes in and of themselves.
Yeah, it's a good question. Of course, some of those cost-cutting measures, the staff reduction decisions that they've announced recently are defensive measures, of course. Suspend the dividend, certainly something that I think really disrupted reasons for investment in this name for many. And you see that probably being the contributing factor to why you saw such a steep downturn on its most recent earnings. But to your point, if you're an activist investor here, oftentimes they're going in when the bones are good, if you will. I think the bones are somewhat in question here as they've watched names come into their space, AMD, NVIDIA, and others, and really kind of steal the spotlight, but do so with real execution, in a well-meaning way, in a positive way. In the case of Intel, it's been a company, again, this isn't new. It's maybe coming to a point much over the last quarter in terms of a steep 30% plus decline. But this is a stock that's been, downtrending now for the better part of the last decade. So, they've been in this defensive restructuring, kind of rebuild Intel, the win back market share phase for a long time. I think investors have just lost their patience, but maybe gaining some back today, just modestly up 9%.
Yeah, that's pretty impressive. CEO Pat Gelsinger said at that Deutsche Bank Tech Conference, "We respect some of the skepticism we've received from the market. We believe we're up for the challenge." So let's see. Alex Coffey, thanks so much. It's time now for the disruptors. George Sillis, senior markets correspondent, is here with today's company, MongoDB, after releasing an impressive quarterly report. Investors certainly seem impressed. That's 16%. Walk us through the report, George.
Yeah, I mean, if you look at the report, Caroline, it was actually really impressive for MongoDB, which if you look at last quarter, their fiscal Q1, they actually reported some guidance that was a little bit slightly lower than estimates. The stock gap to the downside, and it was down about 22% for the full year prior to today's sort of reversal in price. And it was really a function of the company shoring up its earnings guidance and actually increasing it quite substantially relative to the expectations. Now, this is a very interesting company. We talk about, software infrastructure and database companies. That's essentially the roots of MongoDB. But one of the things about this particular company relative to some of the other competitors like Datadog or even Snowflake is it's becoming more of a niche player in essentially the general purpose enterprise software space, which is competing and starting to encroach on some of the market share that includes behemoths out there that like SAP, Oracle, and even Microsoft. So I think that's quite a compelling value proposition for this particular company relative to some of those other respective peers. But overall, if you look at the report, the estimates for earnings were actually quite low. They were expecting to lose, their estimates were expected to be down 48% to 248 cents per share. They actually beat that number coming in at 70 cents. So that was still about 24% lower than the last quarter for the same quarter last year, which was 90 cents. And sales were higher by 13%, beating the estimates coming in at 478 million versus the 469 million estimates. But one of the things you'll notice about the report is they actually guided slightly lower for next quarter's earnings, but they boosted their full year fiscal profitability or outlook, their EPS outlook, by close to 5%. And generally speaking, at least in my knowledge or history of looking at stocks, anytime a stock beats by a certain percent, you generally will see about 2 to 3 times that percent move in stock. So the guidance was actually higher by about 5%, and commensurate to that, you actually see the stock higher by close to 15 to 16%. But with that said, I think this is a reversal quarter, and effectively you're starting to see some of the analysts pick up based upon the better prospects for MongoDB in sales and earnings. Mizuho actually increased their target to 275 from 250. They do maintain a neutral rating on the name. While at the same time, Bernstein actually increased their target slightly to 360 from 358, and they maintain a market perform on the stock.
Yeah, it seems like more buys than holds and very few sells here. It looks like 80% of analysts are in the buy camp. Median price target now around 332. But given the fact that MongoDB is still down about, 30% year to date, walk us through an example trade for this name after this nice pop.
Yeah, so what we have to do is be constructive here, because there's a constructive outlook on earnings and sales going forward, but the stock needs to make up a lot of room to put in a major trend reversal to the upside. But one of the things you'll notice is last quarter, back in late May, the stock gapped lower, and it ended up being in a trading range with the high around 274 and the low around 215. Now we're back above the high end of that trading range. So what I'm going to do in this case, I think that the stock will essentially drift, perhaps sideways to slightly higher or slightly lower. We just capitalized on time value by selling puts to enhance some yield or generate some yield. So what I'm going to do is I'm going to go out to October with about 49 days to expiration. I'm going to be selling the $270 cash secured put. Now you can actually earn about $12 a share essentially on this position, or $1,200 a contract. So effectively, you can earn about 4.5% yield to the strike price in 49 days. Ideally, the stock should hold for this position $270, but your break even is down to $258 because you're earning $12 in premium. So essentially, if you're willing and able to take ownership of the shares at $270 with a $258 cost basis, you could essentially earn $1,200 to do that. And the sweet spot, of course, is having that premium erode to zero in the next 49 days. That'll only happen if the stock stays above 270. So I'm not expecting a big move higher. I'm expecting potentially a small retracement to the downside, but I think those levels of 274 may hold on the chart.
All right. We appreciate the trade and that breakdown. George Sillis, thanks so much. Coming up next, it's time for our 360 round. That's Marvell after reporting strong AI chip demand in its earnings report on Thursday. Our panel is ready to break down its earnings next on Trading 360.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for the 360 round, and we're focusing on Marvell after reporting earnings last night. Shares are up 8% after better than expected earnings. So let's bring in our panel to discuss. William Kerwin, equity analyst at Morningstar, and Christopher Davis, partner at Hudson Value Partners. Great to have you both here with us, William and Christopher. William, let's start with you. Biggest takeaway from this report, because investors seem impressed and they're not really usually all that impressed with earnings from Marvell.
Absolutely. It was a really positive report in our view. You know, the two main takeaways here are that one, AI revenue is going gangbusters. Marvell benefits from AI investment from its sales of optical connectivity chips, as well as a burgeoning nascent custom accelerator portfolio. But then really B, that its other end markets outside of AI that have been weak for the past 4 or 5 quarters are starting to turn around. So all in, very positive. We ended up maintaining our $75 fair value estimate, and we now see shares as fairly valued.
All right, I want to come back to you with your price target, but first, Christopher, I want to give you a chance to weigh in on your takeaways from the results and also the outlook from Marvell.
Thank you. I think it's a good reminder that there's more to semiconductors than just NVIDIA, even though that's what gets all the attention. To me, what we touched on just there, I think it's the ASICs, those application-specific integrated circuits. That's really a very interesting thing to watch in Marvell and for the semi space in general. That, you know, as things get more specific and the computing gets more specific to all these different hyperscalers and cloud players, that there's going to be more of these really custom chips. Marvell's a big player in that. Broadcom's a big player in that. And I think it's just something to watch for the industry dynamics. We're not long the stock, but in such a dynamic space, it's important to take a look at all the different competitors and see what we can glean from them looking forward.
All right, so William, you said you maintained your $75 fair value estimate. The problem is that Marvell is now trading up 8% at $75.53, so it's there. And this is similar to a conversation I had with one of your colleagues about Dell, too, that he boosted the fair value estimate for Dell, but it's currently trading at that level now. So just not a lot of room to run. It's all priced in.
Ultimately, we do think it's priced in. You know, we saw some value to it coming into the earnings. And obviously, as you said, the stock has reacted nicely up to our fair value estimate there. For us, this fits with our longer term thesis on Marvell. We were already expecting it to be a long-term winner in AI. That is still our view. We were expecting these other markets that have been a little bit weaker over the past year to turn around in the second half of this year. So we feel our thesis is playing out, and that's why we rested on our $75 fair value estimate.
Chris, you say there's more to semis than just NVIDIA. You're not long Marvell, though. Would you still buy NVIDIA at current levels?
I think NVIDIA might be more of a hold for us at current levels. I think for us, when we think about the semi space, we really just want to listen to what the customers are saying. And it's quirky in that the biggest customers for NVIDIA, Marvell, all report earlier in earnings season than the chip makers themselves. And when you listen to the Alphabet call or Microsoft call or Amazon call, they're all telling you that they're more concerned about underspending than overspending. So for now, the tailwinds really seem to be with these companies, and the spending seems to be there, and the technological advancements are there. But one thing we always look at, just like Morningstar does, is the moat, the quality of the business, the franchise, the enduring factor of those earnings power over time. And it's important to remember with semiconductors that these are deeply cyclical companies. However, they're in the right spot of the cycle for now, whether it's Marvell or NVIDIA. And you know, for that, that's a great reason to keep holding the stocks. But we always have to listen very, very closely to any of those changes in spending, because investors do seem to be getting a little bit impatient with some of the hyperscaler spending that isn't necessarily paying off as much as Jensen Huang would tell you it is on the earnings call. You get a little dissonance when you listen to the chip makers that are selling it, and then the CFOs and analysts on the Alphabet call, for example, saying, you know, where's the upside?
But Chris, any names in the chip space that you would buy right now versus just hold?
We're we're long Qualcomm. We think that's a viable name here, and we're also long MKSI, which is in the instrument space, more of a mid-cap name. So those are two that we like.
Okay, William, what are your top picks in this space that actually have room to run?
Yeah. My top pick in this space is actually going to be outside of AI. If we're talking about semiconductors, it's a name I've mentioned on this program before, but onsemi, still a name that we see as a long-term beneficiary from electric vehicles, renewable energy, and still one that we see as pretty nicely undervalued for investors. So that's one we'd be buying today. In terms of Marvell and its peer group of networking stocks, we think they look fairly valued. Not the most aggressively rich valuations, but onsemi would be my top pick today.
All right, yeah, onsemi down about 7% year to date, so definitely more in the value camp, I suppose. William Kerwin of Morningstar, Christopher Davis, Hudson Value Partners, thank you both so much for your insights. Really appreciate it. And thank you for joining us on Trading 360. Download the free Schwab Network app available in the Apple App Store. And of course, tune in 24/7 on schwabnetwork.com. I'll see you back here at 2 p.m. Eastern for the watch list. But stay tuned because Fast Market is next.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies. We're going to take a look at NVIDIA post-earnings, which is down 6% yesterday, but is rebounding a little bit today. And Meta Platforms, which is up about 10% so far this month, and just below all-time highs. And Lightfolio is going to cover consumer sentiment data in Netflix. Streaming stock is up today after another price target hike out of an analyst. Now that we've had a look at the names we're going to cover, let's take a look at the major indices here. The S&P 500 up just under 0.2%. The Dow down about 70 points. NASDAQ 100 up 0.4%. Russell 2000 lagging a little bit, down 0.15%. We've given up a lot of the gains that we saw earlier on in the session. But to help me break down this market action, let's bring in my co-host for the day. That's going to be Kevin Green, senior markets correspondent here. KG, another fade in equity markets. And like I've been saying over the last week or so, it seems like we're starting to roll over a little bit. And it just seems there's no momentum to the upside at this point.
Yeah, we're just consolidating right now, Tom. And unfortunately, if we go back and test that 5580 level on the S&P 500, you start to question the fact that maybe we're not able to sustain these levels. And we see a little bit of a retracement from that bounce back that we've seen over the last couple of weeks. Now, one thing to just kind of note, when you're looking at breadth, it's still actually pretty good. You already talked about some of the major indexes, but we're still actually seeing around the 7 sectors that are still up on the session here today. The only ones that are really lagging is energy and healthcare. And for the most part, energy is more of an OPEC story than anything. So once again, I think it's the mega cap names. NVIDIA had a nice little strong pop to the upside here today, but has faded since. And we're just trying to round out the month. But if you're kind of looking at the monthly candle, I mean, that hammer candle, you have to respect it if you're a bear in this market and understand that we have had buyers stepping in when we have these dips. So let's see how this is going to pan out for the remainder of the session.
Yeah, we'll continue to watch that. We still, going into the end of August, have some decent gains for 3 of the 4 major indices. NASDAQ's only up about 0.2%. The S&P 500 up about 1.4% so far this month. That'd be the 4th month in a row that we've had gains for the S&P 500. We'll continue to watch these levels here as consolidation continues. But now let's bring on our next guest. It's going to be Joe Mazzola, head trading derivative strategist at Charles Schwab. Joe, give me your take here. As I told Kevin, it just seems like maybe consolidation, maybe a little bit of a rolling over where we've lost a little momentum to the upside for equities.
Yeah, I think Kevin was spot on. He talked about, the breadth is still fairly healthy. It's just, some of we've seen this recently where we've gotten a little bit of a pop in the futures and, it is starting to fade. And I think NVIDIA is the culprit right now, kind of given what happened in the morning. But, it's a story where we need some type of catalyst, to push those new highs. And I don't know what that might be over the next couple of days or couple of weeks, just because we're rolling out of an earnings period where it was a good earnings period. Like I said, we've had 80% beat rate in terms of the earnings. I think it's the sales and the revenue guidance has been a little bit softer than expected. And I think that's got investors and analysts maybe worried about margins going forward. And if you even go back to the NVIDIA report, that was one thing, it was a great report. I mean, there's no denying that. But, when the bar is set as high as it is for expectations, and you did, hear some analysts maybe concerned a little bit about margins, but we're still talking 75% gross margins for that company. So it's interesting to kind of see what expectations are going forward. And it seems like, this market is just taking a little bit of a pause until it finds that next catalyst to move forward.
KG, to Joe's point, if you look at the S&P 500 up 17.3% so far this year, it seems like a lot of the gains that we've seen over the last several weeks since that fall at the start of August,
Okay, so we're back.
baked in all this stuff about maybe a potential
Watching Tesla for a follow through. Tesla might sell some credit spreads on Tesla. If Tesla can manage a move, a push higher.
2.6% on core year over year. So it seems like, hey, the market's already baked in a lot of the good news at this point.
Microsoft testing the 414 level. Tesla looks good. Looks like it's going to keep turning. Probably give it another day, though. Tesla, Supermicro turning.
any individuals out there that may have just started.
Supermicro trying to turn. Bitcoin still at the lows. Nvidia bouncing around 117.50. I was thinking about an iron condor on Nvidia.
One of the probably the more volatile months of the year, and rightfully so from a seasonality standpoint. That tends to be the case. So keep your eye out on that, and we'll, we don't provide any recommendations or advice here, but if you kind of look at a 15 VIX going into August and September, which is relatively high in terms of volatility on a seasonal basis, it's still cheap. So if you are concerned that maybe there might be some type of a black swan event, or maybe we have jobs report, when the jobs report comes in very strong for whatever reason, or comes in at a very weak for another reason, there's still opportunities to hedge. And I think that's something that a lot of people failed to do when we had the pullback early on in this month, and now they're kind of getting another shot at being able to do so right now.
Yeah, Joe, to that point, seasonality, end of August, going into the Labor Day weekend, volumes aren't, that heavy at this point. So there's no real conviction either way here for equities. But, with implied volatility levels low, and historically we see September pretty
Affirm.
volatile, there are opportunities out there for investors and traders at this point. If maybe you think that there might be some weakness or, a little bit of downside risk.
Sure, and today's one of those days, right? Because you have the
AFRM. Let's take a look at AFRM.
And what traders typically do, or Tom, what you and I did back in the day in the pits, is we would take.
Okay, AFRM had earnings. This is another one that I'm thinking about. Let's see what kind of credit spreads we can get on this one. Let's see. S&P Spider's starting to turn the corner. Could be a nice bounce on the 0 day.
Yeah, definitely. And Joe, I was taking the weekend out on Wednesdays usually when I was down on the floor. I didn't want to buy.
You were taking the week off. That's the difference.
That too. But KG, consumer sentiment came in a little bit, above the first read on it, the preliminary read. But if you look at some components within there, inflation's cooling on the 1 year to the lowest level that we've seen since December of 2020. But then if you look at the savings rates down, it just there's some questionable inputs right there in that data, right?
Yeah, and that's the probably one of the bigger sticking points when you're looking at PCE. So there's usually an inverse relationship when it comes to the savings rate and then the performance on equities and just consumption in general.
All right, so watch the 0 day. That looks like it could get going too. Let's see, AFRM. AFRM. Okay, the 200 day is at 35. Let's take a look at that. AFRM. Let's look at the verticals and let me just check their earnings real quick. AFRM. Did they beat? They had to have They had to have beat expectations. AFRM. So I'm thinking about selling a credit spread on AFRM. So all four metrics are green. In addition to selling a credit spread, I would be interested in some longs. I just don't want to buy it up here at the high. AFRM. Okay, intraday. AFRM just kind of moving sideways. AFRM. So earnings, nice. Four metrics are green. So this is probably going to keep grinding higher. AFRM. Okay, let's see what the implied vol is here. Implied vol. Let's go out to October monthlies. 64% on the implied vol at 37.50 40 strike.
Economists that I've seen and follow has really anticipated. And you're starting to see some of those cracks in the labor market, which we thought that was going to actually happen in October of last year, right? A lot of people did. It's starting to happen right now.
Yeah, I think the forecast, Joe, just due to the pandemic, and this is a different situation than historicals where everybody expects.
Okay, so AFRM is trading. All right, that's that.
I mean, the consumer's still relatively strong at this point.
Okay.
GDP was revised
Looks
up to
strong.
3%.
Just dipped back to VWAP.
Numbers aren't horrible at this point.
35. Let's see what the 35 gets you. 35. Selling the 35.
I agree at every point you just
Sell
made,
the
Tom.
35. It's probably too far down. 35.
I don't want to say battle, but the disconnect right now.
Buy the 30.
The equity market in that. If you're
Let's see.
looking at
Buy the 30 maybe.
rates and if you're looking at
30 put.
expectations for cuts for 2024,
30
we're still
put.
expecting 100 basis points.
It's 50 cent credit.
Cuts in 2024.
55 cents. So if you did a few of those,
200 basis points of cuts between the next 18 months.
35. I don't think we're coming back to the 200-day anytime soon.
When I look at something like that with expectations for earnings of double-digit growth in 2024 and then 2025, there's a disconnect there, right? Something doesn't add up. So if we continue to get the same earnings growth, why would the Fed, need to cut that many times over the next, over that?
It's only 10%. Okay, that doesn't really float my boat. Okay, what about 37? All right, so it's a little bit more risky. 37. Sell the 37.
We'll find out more as we move into the Q3 earnings and then Q4. But as of right now, like I said, I think there's a bit of a disconnect between
37.
the equity market. And typically, not always, but typically, the bond market's usually right.
Yeah, bond market. Go ahead. Okay.
37 is not traded. 36 not traded. 35. Okay, we talked about the 35. All right, so it looks like this isn't going to work. 40. 40 is right on today's low. Nah, I'm not crazy about that idea.
Yeah, sure. So
I'd rather just do verticals. Buy calls on AFRM, just not today. AFRM looks good. Earnings were good. Maybe just shares. Buying shares and selling covered calls. That's another way to do it. What do those look like? Let's take a look at the calls. A buy right.
That is coming up a little bit faster than maybe we had expected. So, if you do get those 100 basis point cuts, be careful what you wish for, because I think what that means is that there's probably softness in the near term.
Watching the 0-day. 0-day is turning more bullish, looking for a move back up to 56.27. That's the top Bollinger Bands. Up volume still leading.
We haven't seen that deterioration that the market thought we were going to get, the recession that they expected to come late last year.
Okay, so singles, let's see. Oh, these are pretty expensive. So let's see, buy right. Wow, you could buy shares of Affirm and sell a October call for $4. So $400 for every share, for every 100 shares of Affirm, you could sell a 45. It's just out of the money, but it gives you $4 downside. Now you could go to the 47.50 for $3. So for $300, 47.50. So if you don't mind getting taken out at 47.50, that gives you $3 downside protection. All right, that's one way to do it. Okay, so we'll look at a few other credit spreads that are working, like Caterpillar, JP Morgan adding to these. Okay, Caterpillar pulling back. So you want to sell premium, especially puts, when we pull back. Okay, so this is maybe some resistance in this area. Let me take a look at Caterpillar. Caterpillar on the, let's take a look at the daily. Daily, I'm looking for supply. Daily. That's the weekly. Daily. Okay, Caterpillar. All right, so you don't have resistance till 362. That's $10. Support all in this area, 348-ish. 351 all the way to 348. Okay, that looks good.
Yeah, and we've heard that from a lot of these CEOs
Affirm.
on the retail side that they're seeing weakness from the consumer, minus maybe Walmart and a couple others also. But Joe, looking ahead to next week.
Okay, so that's Affirm.
Joel's ADP, some ISM and PMI services and manufacturing data. Anything else sticking out to you here besides that job?
Okay, so Caterpillar. JP Morgan's another one. JP Morgan. Okay, adding to that one. It's probably going to dip a little bit soon, but the last time it dipped was what? Actually, it's dipped yesterday back to the 90 MA. That got bought up. So you know that there's buyers in here. Makes sense. JP Morgan, best bank out there, according to some. Tesla looking for a follow through. Nothing yet. Microsoft and Apple. Apple trying to turn. Microsoft making new lows. Microsoft. So that trade didn't work out earlier.
If you can get some recovery in manufacturing, get some recovery in housing, then I think that speaks to the soft landing. If you can't get those, then
okay, let's take a look at some of these here.
And soft landings are tough, as we all know. Hey guys, let's take a quick break.
Burlington Stores reported BURL Burlington. Okay, that's pulled back a couple of days. That's potential as well. Let's see. TJ Maxx. Let's see what the retailers are doing. Retail pulling back. TJ Maxx. Maybe some call credit spreads on TJ. RSI's dropping. Stochastics MACD resetting. TJ Maxx. Let's see what TJ looks like. TJ Maxx. TJX. Selling some calls.
And they let the trade completely reverse and then go into losses. And they're pounding the table and saying, I wish I took my profits. And, being able to recognize.
Not a lot of open interest. Until you get out into October is where all the open interest is. Let's see.
Anyone can make money. Keeping the money is really key.
Calls 121, 122. Let's see. Nothing out there.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every
120.
trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
I'm just taking a look at potential credit spreads. JP Morgan, Caterpillar. What is Lulu doing? Lulu? Okay, that looks like it wants to grind higher. Nice volume. Okay, NVIDIA. NVIDIA just sitting here. Iron Condor is outside of the Bollinger Bands. Maybe on NVIDIA. Let's take a look at that. NVIDIA. Iron Condors.
Here on the Schwab Network, we're talking NVIDIA. What's next for the company? Earnings are past. Stock fell over 6%
October
yesterday, making up a little
18th.
bit of ground today, but also off about $3 from its session highs. KG, when you look at this one, revenue growth of 122%, an additional $50 billion in buybacks.
Let's see. So upper Bollinger Bands, let's see, 137. Sell 137. I'm just looking at some ideas. I'm not doing anything. 137. Sell 137. Buy the 135. Put side. Put looks like 100. Sell the 100, buy the 95 maybe. See what that looks like. Buy the 95, buy the 95.
Slap any other name on top of that earnings report, and it would be a phenomenal earnings announcement.
Okay.
Concern that you had. So I think the market's just kind of taking a little bit of a breather right now, kind of reassessing areas where they could probably find alpha and take on risk. And maybe we start seeing maybe a lower volatility for NVIDIA, and we start seeing more, I won't say realistic, but more traditional moves for a company that's over.
$1.65 credit. 135. 135 on NVIDIA. 140. And 95, 100 on the downside. All right, I might try this. Let's see what this looks like. Oh, $328 for 672. I'm going to go ahead and do this for now. Okay, so let me show you what I did. Okay. NVIDIA. Okay, I'm going to start with this. So I'm going to do a few of these. And if it continues to sit here and do nothing, I'll add to them by the close. Let's see. Where monitor filled orders. Okay, filled orders. NVIDIA. Okay. Credits 164. 135, 140. Okay, so I'm going to put it on the chart and then I'll post it in the spreads channel. Okay, 135. 135. You can see what I'm looking at here. Right near the Bollinger Bands. 135. 140. And what did I say? 95, 100. Okay. 100 is down here. Now, whatever direction, if this does take a direction in the next few days, I can always take one side off. Okay, so that's what I'm looking at right now. Price is right in the middle. Okay. 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 So what is that? 20 October? 18 October? 18 October. DTE. 135, 140, and minus 100, 95 put.
So you do have opportunities if you wanted to maybe sell some options, with given the move that we've already seen.
Yeah, I tweeted that out after the report came out that, hey, options
minus
into that earnings
135. Okay.
Expected move was so large.
Okay, so that's what I'm looking at there. Okay, so I started this one. Let's see what happens. We have more room to the downside.
But it kind of takes advantage of the move that we've already had. It's selling the September 20th 115 put, so it's about a 3-week trade.
It's about the same. It's about the same. Okay, so that's that. Let me just bring. Okay, that credit is.
I looked at that 115 level in particular from a technical analysis standpoint.
Credit.
That 115 level happens to line up.
$1.65 per contract. All right. So because we have a long weekend, I want to sell some premium. Okay. I want to sell some premium. So for 10 of these, I'll get $16.50. I'm not going to do 10 right off the bat because we already had one trade that didn't work today on Microsoft. That pulled back, unfortunately. Apple also pulled back. Some of these stocks pulling back. So there is still some people taking profits, probably because of the long weekend, but the markets are not looking that bad. Okay, I see. Go here. Spreads condors, upload. Okay, so let's say Nvidia decides it wants to bolt higher next week. Okay, let's just say that happens. So what I could do is roll the top strike out and up a few weeks, or I could just take the top off and then double up on the bottom. So either or. So I would either roll these up and out if the stock decides to take off to the upside next week, or if the stock decides to drop markedly next week and start to head for 100, I can take this side off or roll it down and out and double up on the calls. All right, so that's the way I would manage it, okay, ahead of time. So let's look at, what was that? I just heard a noise. Somebody throwing something at the window. Oh, it's overcast. Okay. All right, so
and this is one of those situations you can have a pseudo wheel strategy. I mean, the dividend's not that great, but you can kind of look at trying to scalp some of the premium because of the IV. It's still relatively high for a name this large, but also being able to have some upside potential. If that strike does actually hold 115 and it actually expires above that level, then you can look at continuing to try to scalp premium from this name.
okay, so I'll post this in the spreads channel. Because we have a long weekend, I want to sell premium. All right, so spreads condors. Usually. Yeah, usually RT. Yeah, I put it outside the Bollinger Bands. Depends. If the bands are coming together, I know that volatility is still pretty high, but they're starting to come back in. So I'm not as concerned. If for example, with NVIDIA, I'm inside the upper band, 2 standard deviations. However, I can see the bands are turning both top and bottom. So I'm anticipating this is going to roll and that we're going to consolidate more. Bollinger Bands will contract, implied volatility will contract, and I'll collect most of this credit over the next couple of weeks. All right. So when you first sell a credit spread, a lot of people say it goes right into your wallet. So it's a little hard. Sometimes it's a little hard to understand, but basically you're selling the premium. So you get $165 per contract. Now, the stock could start to move against you immediately, in which case this credit would show up maybe as a negative. It might move to say $1.95, so 30 cents. So you'll be down 30 cents per contract. However, if it doesn't do anything like we're expecting, this $1.65 next week will probably be like $1.35. It all depends on theta and gamma. So next week, this could be $1.35. So you sold it at 165. Over time, it could move to $1 a week from now. 2 weeks from now, this could be 65 cents. So you're collecting $1. At some point, you might decide, okay, let me just take it off. So when people say, you sell a credit spread, immediately the money goes into your pocket, technically it does, but you need to see the position do what you think it's going to do over the next week or two to realize a smaller or be able to buy it back at a lower price. So you sold it at 165, you want to buy it back at say $1. Or like with the NVIDIA Iron Condor, I bought it back. No, it was Lulu. Lulu, I bought it back for $5 per contract. Sold for $205 in profit per contract. So overnight, Lulu netted $200 per contract, 205. Not a bad return overnight. Not a bad return overnight. Now, sometimes it works. Most of the time it works. Sometimes it doesn't. So you have to be prepared what to do. Okay. So let's say NVIDIA was going to have earnings tomorrow, or rather Tuesday. And we sold this Iron Condor expecting earnings to stay within price action, stay within the Bollinger Bands. Instead of being $1.65, this same Condor would probably be like $2.25, $2.50 if earnings were next week, because the volatility is much higher. The dealer wants to make more money in order to take the trade. The dealer to sell you the position, or you're selling it actually. The dealer wants more premium. Okay, so the implied volatility is going to be much higher. So bottom line, you sell a Condor or a credit spread, you get the initial credit. Some of you will look like, oh, I should be $165 per contract richer. And that's not the way it works. You sell the contracts, you own the contracts, or you sold them, and you have the credit. So it's not until time passes, a day or two, a week or two, that you start to see that credit. If all things go right, that credit starts to decrease in price, and you buy it back at a lower debit, $1 debit, or a 65-cent debit, or a $5 debit, like Lulu this morning. So let me show you Lulu. Lulu, pretty obvious. Lulu worked really well. Okay. Lulu's right in the middle. That's exactly what I'm thinking with NVIDIA. So instead of one day, an overnight, or a 2-day hold, this is a 1-day hold. We're looking at a month, right? Oh, let's see, NVIDIA. Okay, let's say the absolute worst happened with NVIDIA. Okay, you sold an Iron Condor. Let's say you come in on Tuesday and NVIDIA is now down here near 100. Let's say we come out in some really awful news. What would you do? Well, I would probably just take the trade off. You'd have a maximum loss in the case of NVIDIA. I think it was $320. I think it was like 50% return on investment for this Iron Condor. So the worst case scenario, I would take a loss of $320 per contract if that were to happen. Now, the likelihood of that happening is pretty remote, probably about 15%. I like to sell deltas that are like 20 delta. So 20% probability that you're going to have to manage this position next week. That's the whole idea of taking the delta. That's pretty low. Whereas somebody who thinks this is going to work on the put or the call side is paying for an 80 delta. No, for a 20 delta. So they have a 20% probability of being successful. Whereas I have an 80% probability of being successful. It's just the opposite of what I just said. So 20 deltas give me an 80% probability of not having to manage it. Somebody buying this position have about a 20% or lower probability that they'll be successful. So that's the whole idea of selling premium, because the house odds are in your favor. Okay, and the SPY is still moving lower. SPY moving lower. We don't have as much insight globally. Let's see what CrowdStrike looks like. CrowdStrike. Okay, CrowdStrike is making money. Okay, CrowdStrike, we sold that one. Iron Condor. Okay, so you can see this is pulling back in. The upper Bollinger Band is just above price. Upper Bollinger Band is at 288. 288. We sold at 300 outside the upper Bollinger Band. Lower Bollinger Band is much lower, but we sold outside of that too. You can see prices coming back towards the 20-day, and I have what, 50 days to go? 20 days to go. Sorry, 20. I can't add and subtract. 20 days to go, 21 days. So by 2 weeks before expiration, these options will start to lose value very quickly. You know, the whole way options work into the last 2 weeks. All right, Apple pulling back more. Apple. Okay, so there's another one. Here's Apple. Okay, so maybe a call credit spread on Apple. Okay, so call credit spread on Apple. Maybe selling the 235s, 240s, something like that. Let's take a look. 235, 240. Apple.
It's really investing in building out that ad tech platform to allow advertisers to more effectively purchase Netflix ads and target consumers and things of that nature. And so I think that this is a shift though in its overall mindset of, okay, now we're not so much focusing on this subscription versus
CrowdStrike. Okay, that looks good.
Monetization. And so, we would expect a little bit of volatility in the near term while it figures that out, but we do see long-term potential here because one of the largest themes that we're following right now is there's a really large discrepancy whenever you look at advertising dollars spent and the amount of ad dollars that are spent on traditional cable networks versus the amount of ad dollars spent over the top for streaming. And we think that these ad dollars will flow as the technology and targeting improves, and Netflix will certainly benefit from this for years to come.
Megan, real quick before I let you go. Stocks up.
What's Pinduoduo doing? Pinduoduo. I was talking Apple. Let me just finish with that thought process. Apple. Apple. Where's Apple?
I think that right now we're a little bit cautious with Netflix where it's trading. We would not be surprised to see a bit of a pullback in the coming months, especially as it approaches next earnings. If it's continuing to trade near all-time highs, that's a really high bar that it's going to have to cross. So we would not be surprised to see a bit of a pullback. Let's say our score is effectively neutral, but probably a little bit more on the bearish side. But long term, we do see that potential. So this is one that when we do see pullbacks, we would be buyers of those dips.
Okay, Bitcoin pulling back too. Bitcoin. Super micro bouncing. Nvidia just sitting here doing nothing. Tesla pulled back the VWAP. Microsoft pulling back. Okay.
All right, that's Megan Brantley, VP of Research at Lightfolio. KG, when you look at this, it's pretty spectacular rise that we've seen in this stock. How do you want to look at this one?
Yeah, I'm kind of right there with Megan now when you're kind of looking at maybe a near-term pullback because it's hitting a psychological level at $700 and it's actually been consolidating since August 20th. And so kind of an example for maybe a potential pullback or maybe the stock stays where it is right now is actually selling a call spread here. Looking at the September 6th, so expiring next week, selling the 700 call.
What's he talking? Call spreads? Netflix call spread?
Credit of $1.50. Max gain is going to be the credit received on this trade, so $150. Max loss is going to be the difference between the spread, which is $5 minus the $1.50 that I brought in, which would make the max loss $350 with a break-even point of $701.
Okay, Apple looks like it wants to pull back some more.
The options chain makes it a little bit difficult to try to squeeze out alpha right now, just because of the IV spike that you're seeing, as well as the overall curve itself. So this is kind of a trade that tries to capitalize on a pullback and not put too much excessive risk out there compared to other strategies.
Yep. Let's break this one down. As Kevin mentioned, out in the September 6th weekly cycle, so just a week to expiration. You don't have trading on Monday also. Selling the 700, 705 call vertical, collecting that $1.50 credit. That's what you can make, $350 in risk. Kevin, I look at this and I say, oh, it's a short-term positioning. If you think that 700 level is going to, hold, it's $11 out of the money from the current share price, which is $689. Probabilities of finishing out of the money, about 68% on that short 700 call, Kevin. So that's what you want, right?
Exactly, and as you talked about, we do have a shortened week as well, so this could, 4 trading days, not including this one, 4 trading days in order for the trade to work out. But if you do see a spike, this consolidation does kind of turn around, and you start seeing buyers stepping back into this name. Once again, you kind of cap the upside risk potential here with that 705 call to the upside here. So once again, when you're kind of looking at a risk reward, you're looking at around 20% compared to the spread, 25% compared to the spread. So it seems like from a credit premium selling strategy, it seems like that's the sweet spot that most like to look for when trying to sell credit spreads, but also understanding that there's upside risk potential for a name that's in a strong bull trend.
Yeah, and it's risk defined, as we always like to talk about those strategies where you know exactly what your downside is going into it.
Apple. Let's see. What's Apple doing? Apple.
I mean, it's still got $4.60.
Okay, so the New York FANG index stocks, yeah, looking pretty weak. So selling credit spreads, call credit spreads makes sense.
So good look at the short neutral to bearish call vertical there in Netflix if you think it's going to remain below 700 over the next week. All right, thanks to Kevin Green for joining me today and helping hosting the show. But let's take a quick break, and when we come back, we're going to discuss another big cap tech name, and that's Meta Platforms. This stock's done really well, just below all-time highs. It's had a good run over the last month, also up about 8.75% in the month of August. Stick around, Fast Market. We'll be right back.
SPY looking like it wants to bounce. Okay, what's Disney doing? Disney haven't looked at Disney in a couple of days. Anybody in Disney? Disney, no follow through, just sitting here doing nothing. Disney. CrowdStrike. Apple looks like it's trying to hold here.
Binge watch the market with Schwab Network.
Microsoft, where's Microsoft? Microsoft.
SchwabNetwork.com. All your streaming
Trying to bounce. Microsoft.
Schwab Network is available anytime, anywhere, on any device.
Disney. Yeah, Disney doesn't look that great. It's just sitting here moving sideways. Okay. What's working? Intel. Off the highs of the day. Intel. Amazon. Verizon. Walmart. JP Morgan. Grinding higher.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at the next stock, Meta Platforms, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network. Benny, we've got stocks that failed once again from a early session rally.
You had attempt auction higher earlier this morning. Tom fizzled out. We sold off since. You can see all four of the major indices.
Okay, Caterpillar,
Point to the selling activity that we're
Tesla, Tesla. All right, just chopping around. VWAP, Tesla.
Yesterday we saw new all-time highs in the Dow, so off those upper levels. But the other three majors, aside from the S&Ps, it looked like to me is still yet to take out the lows from yesterday. So the S&Ps just did get below that low as we speak. But
NVIDIA,
the data that we saw earlier this morning,
Supermicro trying to, it's just sitting here below VWAP. Not much to do. The market's just fading. A lot of people most likely have already taken off for the holiday, for Labor Day. Microsoft, Tesla.
Seems to be
Nope.
a bit of a ceiling at this point, but then again, liquidity is a little bit lighter today going into the long holiday weekend. But on the flip side, Benny, we got some weakness here in crude oil. It was trading $76.50 a barrel earlier in the session.
What's GlaxoSmithKline doing? That's one that Frano mentioned the other day. Glaxo. Okay, still flagging.
8 OPEC members scheduled to boost output by 180,000 barrels a day. That's supposed to happen in October. If you remember, OPEC set to proceed with these planned output hikes again in a month or so. There had been a slowdown in demand, if you remember, from China. That was sort of weighing on some of that production, but led by Saudis, led by Russia, again, OPEC and its allies are going to add 180,000 barrels a day.
SPY trying to bounce.
Store output that's been halted since 2022, Tom. A source told Reuters that there are many uncertainties on demand, but there's
Okay, Lulu close that trade. Let's take a look at Lulu. Maybe you want to take a further out like we did with NVIDIA. Lulu, let's see.
As far as a production rise, but we haven't seen a production increase in
Lulu.
now out of OPEC Plus, but it seems like such a little. Is this maybe that
Okay, just sitting here,
that's waning a little bit?
right in the middle of price action. 50 days still moving lower, so this technically is still bearish. The trend is still bearish. And we also have weakness in the retail since Wednesday. Walmart, all of these pulling back, except for Walmart. Walmart pushing out. Now, Walmart might be a good idea for credit spread, but it's got a low beta, so it's probably not going to net that much. Let's take a look at Walmart real quick. Walmart, put credit spread on Walmart for, let's say, 18 October. Vertical. Let's see. In this case, I'd be looking at probably the 20-day, 72. Not very high, right? No. Yeah. There's no premium here. No premium in Walmart. I was just looking at Walmart. Walmart's grinding higher. Costco might be one. Costco.
Netflix and Meta's a couple of the larger cap names, which were just phenomenal opportunities, multi-year opportunities off the 2022 bear market.
Okay, so the ES is starting to bounce. ES is starting to bounce.
And they're doing so even on sales growth deceleration. If you look at, sales in the past year,
ES is starting to bounce.
13%, 11% is expected next year or the next 4 quarters. So they're expecting decelerating sales historically around 5-year average.
Shoot, futures are turning the corner. Futures.
18% estimates relative to 17% earnings growth on a 5-year average. And profitability of this business is actually
Costco is something I would actually want to sell some iron condors on. And looking for prices to pull back towards a 50-day. Let me see what that looks like. Costco. When did they report? Or when did they report? Costco. I want to take trades on companies that I have a good feeling for earnings growth. Okay, so Costco doesn't report again until September 26th. So let's see an Iron Condor for, like, say 2 weeks out. Let's see, 2 weeks out, Iron Condor. Reason why I'm thinking Iron Condor, even though this could probably start trending, is that I want to sell twice the, I want to take twice the exposure so that I get twice the premium. Let's see.
Absolutely. I mean, you have to think about
Where
Google is sort of the largest advertising company in the world. You have to think about
Costco.
the largest social media
Okay, so 9, let's say 9.
out there. And these numbers are just enormous. And essentially, just think about the ad monetization rates across all their platforms. It's a digital business. They're enhancing
Sell
artificial intelligence use on the front end. In other words, the interface that
Iron Condor. Okay, let's see what this looks like. $5 credit, but that's too tight. Let's go sell the, I'm just talking through this. I'm not actually doing it. Let's see, 950, sell the 950, sell the 950. Now that's pretty far out there, but let's see what this goes for. 950, buy the 960, and on the downside, 810. Let's see, sell the 810 put,
YouTube from Google, but they don't have the same ecosystem that Meta Platforms has. And it's unique to in and of itself.
and buy the 800.
That generates really monopoly-based profits. Like I said, about 34% of their sales generate.
Oh, that's not good. That's not a good credit. What about the 840? Sell the 840 put.
Right in the middle, is it fairly valued? Oh, I think we did lose George. No problem. We will extend this conversation a little bit by going into an example trade here. I mentioned Meta Platforms. Over the last 12 months, the stock
840
is
put.
74.3%. So far, year to
So I'd be looking like this. Okay, let's say I was thinking about a credit spread, put credit spread 840, 850, 840. Sell by the 830. See what that looks like. 830. 75-cent credit. All right, so 840, 840, 830. All right, so last time this pulled back, remember, this is September, so we have to be prepared that although we're taking a 20 delta, take a 20 delta position, we have to be prepared for the fact that we could see more volatility into the month of September. So what's more likely? You think the market's pulled back in September? I'm thinking so. So probably call credit spreads make the most sense on things like Apple, Condor, like we just mentioned on NVIDIA. Microsoft looks like it's having difficulties. It's probably not going to get above 430. I think that was the upper call wall. The other thing is you can use the money magic levels to sell outside the call and put wall. That's another way to do it. Okay, 950. 30.
So, like I said, you don't need a monster move on this one. And your apex of profitability at or near that short 535 strike where you've got two short contracts on it. But even above
930, 940, and 840.
More than a double on this trade.
840.
Balance call butterfly. Why do you use this as opposed to maybe just going out to that same September 20th weekly cycle and just buying the 525
dollar credit?
Call vertical, right? Because I said
Nah. Costco is definitely out of the question. Costco. Okay, so we'll pass on Costco. All right, looking at the positions that we already have working, we talked about potentially doing something on Lulu. Lulu. Let's see. What if we did the same trade on Lulu? 300, 310. 300, 310. Okay, so let's take a look at the same trade on Lulu. Lulu.
If the stock does explode
Lulu.
above the 540 level. So you've got to keep those trade-offs in balance.
300. Okay, let's take a look at that. All right, so
You look at this type of trade,
Lulu.
you've got 21 days in it, right?
Lulu.
If it expands in price, say the price of the stock goes up to 535, 540 over the next couple of weeks, this will expand in price also. That gives you that opportunity to potentially
Open interest.
manage,
Okay.
maybe reduce some of your risk, maybe close a portion or all of the
Implied vol still pretty decent.
mind also. So good look at the unbalanced cost
35,
website if you think Meta
35, around 35% on the puts and calls out in October. 35%, 35%, 40%. Okay, so let's look at October. Lulu, October. Or do we just want to go a couple of weeks since we have the long weekend?
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis.
Okay, so Lulu.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast.
Okay, so here is a firm. We were talking a firm before, so they're looking for 36 or 50. 36 or 50 by September 13th. Remember, we're looking at a firm before. Let me do Lulu, and then we'll come back to a firm. Lulu. Lulu.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise,
Okay, we got a nice bounce underway. S&P, a nice bounce so far. Okay, what is it? Hollow?
In these emotional or reward pathways, as if you don't have an emotional reaction.
Hollow is plus 19%.
Over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Lulu. Okay, so Lulu. Focus. All right, so Lulu, 300, 310.
Pretty much across all 11 sectors.
Iron Condor. Sell it. Iron Condor. And once Lulu decides to take a direction, then we could take one side off or the other. Okay, so we had 300, 310. Probably not going to get much here. Call 310.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market overtime on the Schwab Network. Thanks for tuning in.
310 by the 300. Okay, sell the 225. Sell the 225.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, the bulls were trying to
Buy the 215.
activity we saw yesterday, but that has not held as now
Oh, that's a pretty, so they're looking for more tight price action.
Russell 2000. So bit of a mixed picture, and again, strength led by the Nasdaq, but not enough, I'd say, to see some enthusiasm as we go into these holiday weekends. So it feels like we're just fading here in real time.
If you went back 10 days on a chart, the very first day on that chart, throw it out. It's really 9 days. 9 straight days, we've basically been at this exact level between, you look at the SPX, it's between, let's call it 56.70 and on the upside, or 55.70 and on the upside 56.50. It has been a range-bound market. It's been a back-and-forth market. And so you see the green, you see the red, and you feel, oh, we're up, we're down, we're up. We haven't gone anywhere. It's been a market that has been in a very tight range, perhaps coiling into maybe a holiday short week. You can see that. Look at that. It's beautiful how range-bound this has been. And it's a market that was kind of overdue for this. We had a huge move lower to begin the month, a huge ramp higher.
Okay, S&P is climbing. Amazon hanging in there, right at 175. Microsoft turning the corner. Microsoft. Apple with a nice bounce. Apple. Okay, so Lulu, I'm going to pass on Lulu. Okay, so Affirm, AFRM, AFRM.
Looking things off with upvote and downvote, we'll chart and trade those upvoted names. And for FOMO today, we were looking at one of these perhaps beneficiaries of some of the evolving trends in AI, that is Intel. And it's pulled back about 30% so far this month, but attempting to recover about 6% at least this week. So
36 on the downside, 50 on the upside. Affirm.
Carve out their various niches. We'll also be looking at the ways in which generations are taking on different approaches to investing. We have a special guest joining our show later on today. And we'll close things out with under 30 as we are talking C3AI. Alex has always coined this as the best ticker out there, of course, just being AI. But they have earnings that we'll be previewing with George Tillis next week.
Problem with Affirm is there's no open interest, very little open interest until you get out to October. So let's see what the monthlies look like. Affirm, I think we did this already, right? Iron Condor.
We got an eclectic group here, all sorts of names. Let's start with the one that's moved the most in the last month or two, which is
Affirm.
CrowdStrike. You know the story, Jenny.
55 call.
Happened. World shuts down for at least a day, technology-wise, because of this company and its misstep. But it's trying to put that in the rearview mirror.
It is trying to put it in the rearview mirror. I have to say that while it has not recovered entirely, it's done at least like a decent job rallying back this month, this week. So depends on what time frame you're looking at. I was looking at a more near-term perspective. So this daily will tell you, I think, a better picture of like how far we've fallen. But CEO of CrowdStrike, George Kurtz, did say the company was open to resolving issues with Delta Airlines, which warned of legal action in the wake of that July outage. That was linked to the faulty update. Delta's customer, or like any customer, you want to get this resolved in
35 put. Sell the 35 put. Buy the 30 put. Or $1.42 credit. All right, so Affirm. You think it's going to get to 50 in 2 weeks?
Sure, CrowdStrike CEO is open to resolving those issues, but I think that's just them trying to avoid going to court.
Yeah.
35.30. 50.55.
Where this company will end up. It's been discounted dramatically off its highs. So at some point, some of this, truly is priced in from its peak. But where it goes, obviously, it went through the earnings, so it got through the earnings announcement. Actually saw an uptick. We talked about that being perhaps what would happen, is just because there's so many kind of moving parts with this, but also you're locked into these contracts for a while.
Yeah, there's not a lot of open interest on that one.
And make these changes, so it's going to be a longer term impact than I think.
So sticking with the more liquid stocks like Caterpillar, JP Morgan, this list for credit spreads, I've just been beating my head up trying to find something here. On. Let's take a look at on. Been pretty active. Okay, it's sitting here right now. Miriam Pharmaceuticals, MIRM. That looks like a good iron condor, Miriam. Starbucks, what's Starbucks doing? Starbucks, still sitting here, Starbucks.
Control of the company back in 1965, which is just frankly amazing. It had a market value of 25 million at the time. So
it's funny too. It's a textile company back when he bought it, and I had the pleasure of hearing him speak when I was in college. And he actually was talking about how that actual purchase was one of his worst, the textile company, but of course the namesake for his brand that has turned into, just a massive conglomerate, the biggest.
I mean, yeah, the biggest. Now, I mean, like at the time, the Class A shares were what, $20, and then we've seen like basically the market value obviously exceeded 1 trillion, but also reflecting the way that we've seen the stock not only just be on a roll for obviously Warren Buffett's tenure as the leader of that company, but it's been on a roll really as of lately. As we've seen, this name has handedly topped the S&P 500 performance this year. It is about 10 percentage points now better than the S&P 500 on a year-to-date basis, and Buffett's stake is about 15% of the overall company. That's worth about 150 billion at this point.
Okay, SPYD. That's one that I believe Yoda. I don't know if he responded. SPYD, that continues to grind higher despite the market's weakness.
It's one that's probably on a lot of watch lists, I would guess, for investors across the world. Next one on our list, though, is Dollar Tree, DLTR. This is, of course, Family Dollar, as well as the namesake Dollar Tree, but there was some shakeup in how they were going to handle that.
Well, okay, so in Family Dollar, I feel like I followed for some reason like this whole debacle of Family Dollar as it was acquired by Dollar Tree. It's been the biggest headache ever since it was acquired. They've tried to ease, some of the concerns of like basically their growth being
SPY moving.
That failing brand, but
and Family Dollar is much more like a dollar.
Microsoft and Apple have bounced. Amazon bouncing a bit more. Well, it's a pretty boring day. We had a nice little dip for Russell and people holding puts. Intel, it's up 7.5%. Intel, a little bit off the high of the day. Intel dipping a bit.
Consumable categories and increased shrink. So to me, as we set the stage now for Dollar Tree's earnings next week, Wednesday before the market opens, I have the argument I've been making all day where I'm like, how is this going to be different than Dollar General? I mean, granted, maybe you could say, hey, we're down over 13%.
What's IWM? I sold a Iron Condor on IWM. Let me go take a look at that. IWM. Okay, just sitting here. That's $200 per contract. Still in play. I mean, it only expires out in January, so that looks good. Let's go. Let's see. 235 and 190. 235 and 190. 235 is way up here. 190 is way down here outside the Bollinger Bands. 235, 190. So to answer your question, I think it was.
I got a comparison I want to hear your thoughts on. So I think of Dollar General. I think of Family Dollar.
56.50. Yeah, if they rip it into the close, that would be cool. I liked your thinking there, Rob. AMD. Okay, so AMD. AMD is another one. You could sell an Iron Condor and AMD. Let's take a look at what that would do. AMD. AMD.
It's like the whole sector is under pressure. Just this convenience store, somewhat value-oriented brands. The margins are too thin, and the consumer is perhaps just too constrained.
Okay, so here's the expected move on IWM, AMD. Sorry, 4% by next week, 6% a week from now, 7.5%. 7.5% by the 20th. Let me take a look at that. Let's see, September 20th, AMD.
I will say, from a standpoint of what the street is expecting, was a lot more promising comparatively to a Dollar Tree.
Yeah, I guess they got some open interest.
Year over year, showing upside.
September 20th,
Bush said they expect some material deceleration for trends in the second half of
AMD.
the year, which could potentially then weigh on shares. But overall, the companies serving this mid-upper income consumer, which that demographic skew has been better, at least accessible by some of these.
Let's see, AMD 155 on the upside. Sell the 155. Just going through some potential trades. 155. Say 160. And on the downside, 135. Sell the 135. Buy the 130. Let's see what kind of credit we get for that. $1.93. $1.93 per contract. Okay, so that's AMD. Okay, let me just take a snapshot of this so I know what I was looking at.
Wednesday, an 8K report with the SEC talking about discovering unauthorized third-party access on its networks last week. So it kind of seems like they might be dealing with a cyber attack, but the market's kind of shrugging it off when it comes to DICK's in terms of its performance. So we'll see. You mentioned the back-to-school season, obviously a big time for them.
So by September 27th, end of September, 130. Okay, so that looks pretty good, actually. 135, 130. All right, let's take a look at the AMD chart. Okay, 135. All right, so the probability at this point, you're thinking about September. What's the likelihood that the markets sell off a bit? So you have to think about that as far as the lower strike. So I could afford to go down a little bit more. Let's go sell the 130, buy the 125. Okay, that's $1.60 credit. That's still very respectable. $1.30. That's near the lower Bollinger Band. Upper bands 155, 160. Near the upper band. Not close enough to maybe go out a little bit further. Sell the 160. Buy the 165. $1.14 credit. $160, $165. All right, that's about 25% return on investment, 26%. All right, let's save this one. I'll save this. S&P trying to rally some more. All right, so what I'm looking at on AMD, I'm going to save this probably. I do want to take more trades before the end of the day. Credit spreads or iron condors.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's market on close. No place better than the Schwab Network. Trading at Schwab is now powered.
Okay, I'm looking at this one on AMD. I'm going to post this in the spreads channel.
Connect with the Schwab Trade Desk. Our team of passionate
$100 per contract. Let's see.
no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise. From bell to bell.
Okay, AMD.
Available anytime, anywhere, on any device. Or
All right, so AMD, let me just, do I have one already? AMD? Yeah, I do. Okay, AMD.
Welcome back to Next Gen Investing. It's now time for our
All right, so what I'm looking at on AMD is 160, 165, right? 160.
technicals and CrowdStrike as well as Berkshire Hathaway Class B shares. So Rick, let's start off with
AMD 160, 165. Yep.
like the last month or so to watch. We pulled back, but I've been amazed, frankly, with the degree in which we've been able to recover, at least in the month.
And on the downside, what do we say?
A notable point you're making there too is how much we've
130, 125. 130, 125.
that resulted from this whole situation here. But you can see
130.
Things started to go wrong on this chart here. You can see we have a longer term upward sloping trend line here in blue that was breached resoundingly the day we had the crowd.
125.
You know, the pain continued for quite a while. We bottomed down
125.
below 201, and you can see very heavy.
Okay, so the DTE here is
kind of moderated a little bit though. We've managed
20 September.
our yellow 21-day
20
we're above our purple 252
September.
Still the 63-day EMA in orange there is the holdout yet. And really we haven't made it that close back to where we were initially when things stopped, but much better than where we were a couple weeks ago, or rather a few weeks ago here.
Minus 160, 165 call.
Give us a catalyst to the upside.
Minus 130, 125 put.
I was looking, I think, at it like a five-day chart, which was the most optimistic. But now, as far as momentum here, what are you seeing with RSI?
RSI is pretty interesting because
That's $1.15 credit per contract.
before we even had the drop off here, we saw a brief entry into that overbought area as price was near those highs, those intraday yearly highs of 398.33. But momentum was slowing down. You can see we were kind of grinding sideways here for the most part, which is exhibited in the momentum kind of drifting downward here. And when we had our big drop off, you know, it's no big surprise that we made our way pretty convincingly.
JP Morgan, CrowdStrike.
Now we've managed to kind of claw our way back out of that area. We have invalidated that downward trend line
AMD.
into play more recently here. And you can see now we've managed to push our way back above the 50 midline on the RSI that separates bullish and bearish momentum here. However, our upward trend line has been broken here as well as in price. So momentum interrupted, price kind of moving sideways once again here. Not really able to crack above this red line.
Okay, so I'm going to keep an eye on that one. Let's see what happens towards the close on AMD. AMD, thank you, Money Magic. Yeah, so if you look at Money Magic's levels, 130 is almost impossible. 140 and 145 are major levels below. So 145, we're sitting on a put and call wall, right? Overhead 155, 160. Yeah, so 160, 165 works pretty good. So thank you, Money. That works really well.
Yeah, and we can see that, we have made our way back up to this resistance point here. We've got our 63-day EMA on the horizon. If we were able to push above that.
Yeah, so that works pretty well. I like how your call and put wall calculations work.
After we had our initial gap down near 316.75, that would be another mark to beat. And even then, we wouldn't have closed the gap that formed initially here. So definitely a rocky road still to travel in this name. To the downside, we've got a few things here nearby. We've got our moving averages that I mentioned earlier. 252-day comes in near 275. 21-day comes in near 267. Just below that, volume profile, point of control, our area of heaviest trading near the 261 level here. Beyond that, I mean, not really a ton of clear areas here, but there was one small low point here that matches up with the volume node near about 235. So that could be another area to watch.
Okay, so lots to look at here with CrowdStrike and closing out the week. I mean, well, it's been a pretty nice week actually for CrowdStrike on a nice note here. So we're up almost 1.8%. Now when we trade this name, Alex, walk us through how you think about this name, considering, yes, we do know that this has been like a PR nightmare, but it's over and done with. I think the financial
Okay.
impact still could be a bit up for question. As long as like they don't have any other catastrophe, like the other catastrophes,
Yeah.
I feel like this is a event that we can finally put behind us somewhat.
Momentum improving, stock price improving.
All right. So yeah, AMD probably stays pretty close to this price action. You see the upper and lower Bollinger Bands, 160, 165 on the upside, 130, 125 on the downside. Those are completely outside of Money Magic's levels. The expected move, yeah, looks good.
Simply take the width net of the debit. So in this case, that would leave us with $1,650 or $1,650 in max profit potential. This is one that does better the more closely you're able to project where this stock is over time. And so we use that 300 round number as the short strike, but it of course could be customized based off strike availability and of course the individual investor's outlook on the stock. Break evens, you add it to the lower call strike in this case, that's 283.50.
All right, so looking for a higher high, higher low on the S&P. I'm going to take a 2-minute break. I will be right back.
Bullish strategy because you need the stock to rally about 10% to get to that level.
Yeah, and I would say that today, obviously making a decent move, but it's going to be more of a long-term story to see how we can recover. And if we can recover, obviously, back to levels we were at just about a month, 2 months ago. So now to shift gears here and look at another name that's actually been on a decent winning streak, touching $1 trillion in its market cap. That's Berkshire Hathaway, of course. Happy 94th birthday to Warren Buffett. Wow, say that 10 times faster. But as far as the technicals here, what are you looking at with Berkshire Hathaway?
Well, we got our 52-week highs as a nice birthday present here for Mr. Buffett. And, the chart has been really quite strong here. We're up more than 42% from those intraday yearly lows here. For a while, we had kind of this stair-step type pattern that we see often in stocks here. You can see, sideways price action here, a large jump up, largely sideways, and another jump up here. So, we see these long periods of kind of consolidation, or in this case, really kind of a slow grind to the upside, more like here. You can see that we made a series of higher lows for quite a while here, and we have recently crossed above all three of our moving averages, or rather, two of our moving averages that we follow. We are above all three of them. They're starting to diverge farther apart from each other, the faster one outpacing the slower ones here, which suggests the trend is still improving and really a sharp rally to the upside here.
NVIDIA pushing a bit lower.
Just very strong performance here. Not really any notable volume spikes or anything, except for right here, and that kind of matches up with this low point here. So an interesting situation here as we kind of digest this move today.
Yeah, so now when we look at RSI here, momentum, is that giving you any sort of indication of this matching price, or are we seeing a diversion here?
Well, we did have a little bit of a downward slope in the RSI here. You can see this red line here where we did trend down a little bit, but recently broke through that downward sloping trend line. And you can see our green line, just a very long, very modestly sloping trend line going up across those lows as we make a series of higher lows here. More recently, we pushed into that overbought area, which is typically regarded as a sign of strength here. And, some people might say, well, we're making a higher close here today, but RSI is actually lower than it was at the previous close. You can see that there. To me, we already had a large reset here, and we already have kind of been climbing back upward after that point. I mean, we came pretty low on the RSI scale here. So now we're in kind of a new trend. We're still in the overbought area, which, as I said, is a sign of strength. I wouldn't really hang my head on this sort of bearish divergence here. I don't think that's really a very strong negative signal.
Okay, so don't read too much into RSI and recent momentum, but as far as some price levels we are watching here, what are you keeping on your radar after a pretty nice week for Berkshire?
yeah, when we're making these highs, it can be difficult to assess where to find potential.
All right, no follow through yet in the S&P. We still have the majority of the NASDAQ 100 is green on the day, so that's pretty interesting.
Linear regression line or line of best fit based on closing
Tesla
prices.
looks like it wants to do
One
something.
standard deviation to the upside. Turns out price is quite close. We're very near that level now. It comes in around 474, 475 near that area here. So pretty close resistance on the horizon
CrowdStrike.
potentially here based on this study. If we were to keep moving upward, the +2 channel might be worth keeping an eye on in the coming months here. Currently, it's around 506. Not saying it's going to reach that point anytime soon, just that's where this study happens to come in right now. To the downside, old highs right here, a brief consolidation point around the same level where price was struggling to break above that area. 449.25, that could be a place that we retreat back to support before continuing an uptrend here. It's also quite close to our yellow 21-day exponential moving average, so that could be one place to look for support.
Okay, so a lot to look at here when we consider Berkshire, obviously a company that has, the various ways you can look at it. I think this is our first time trading this name, Alex. So for example purposes, talk to us about your thinking here.
Yeah, this is a name that in a way is almost like an index. It's a conglomerate of several different companies. More on the value side, that's kind of Warren Buffett's MO, but of course we know really was a big position in Apple recently, shrunk it down, but still a big piece of his portfolio.
Back above 5,600.
Name though, surprisingly, as much as this is kind of a household name, it's not the most liquid when it comes to the options market. So what we looked at here though is sort of where investing and trading can kind of meet a little bit longer term strategy and one that's a little bit more capital efficient and perhaps more risk defined than just outright stock purchase. But what we looked at was a call diagonal spread. Now, I elected to use an at the money, longer dated December 470 call for this example. That's sort of the anchor of this particular trade. It's farther out in time, so in theory, the time decay will work a little bit slower in that. And then also, it's a little bit closer to at the money. It's going to be a little bit bigger option. It's going to carry more deltas or more kind of share equivalency exposure. Now, we know that there's a difference between being a call option holder and a shareholder. No dividends, no voting rights, expiration date, to name a few of those differences. But it's meant to theoretically kind of have that similar exposure where if the stock goes up, the call option, all else equal, would be appreciating too in some circumstances there. Now, in order to reduce that money spent on that, or the debit for the trade, we went to the October 500 call and sold that against the position to create this diagonal spread. We talk about these a lot. This is a little bit further dated, and it's maybe a little bit bigger, but the same idea. So $20 debit though, Jenny, so a bigger name with a nearly $470 price tag. $2,000 is the max risk on this. The stock goes higher. A move towards 500 is your best case scenario, where this is slated to expand quite a bit if that were to happen. Implied volatility, only about 20% for Berkshire B. So not expected to move a ton, but we do see that momentum holding in there pretty strong. And we, of course, see a stock that just made a new all-time high. So not all in the market is as shaky as it looks, especially when you look at something like Berkshire.
Not all as shaky as it looks, especially, considering, I know we're making a modest move to the upside today, but it's been a pretty winning week, all things considered. So Berkshire now having a $1 trillion market cap, not a bad place to close things out as we head into this long weekend. But we'll leave it there for our Chartmaster segment. Now coming up next, it's time for FOMO. And today we're looking at a name that has been no stranger to volatility as of late. That's Intel, which is up almost 8% on the session here. One of the best performers in the S&P 500 after a brutal month of August, attempting to recover this week, however.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades and full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO. Today we're looking at Intel, which Alex, if I had said we were looking at Intel to the upside, I mean, like if I had not seen the price activity today, I would have said you were lying because it has not been a mover of strength as of late. But it is in talks with investment makers to explore different options for overall. I mean, like basically just considering scraping its plans for its factory projects and M&A deals and presenting these various options at the board meeting in September. So it seems like they're at least trying after shares have pulled back almost 30% this month, and we've recovered about 6% this week. So it's been a decent week for Intel.
I was going to say, do you want the glass half full or do you want the glass half empty? Because the glass half full is about 15% off its lows. Glass half empty, it's down like 50% over the last 6 months. So at some point, I mean, it's basically back to where it just gets down to post that, just absolutely devastating earnings report where they suspend the dividend, talk about this massive cost restructuring, more layoffs. So I look at this as a situation where, patience is probably going to need to be warranted for this because they're making decisions now that are going to impact the long standing of this company. And that's going to impact perhaps short-term sentiment around trading. But oftentimes, and there's always exceptions, so nothing's going to be this, cut and dry, but a stock doesn't just go down, 30-some percent to, multi-decade lows and then just snap back. There's a reason that's happening. So there's a reason Intel's as cheap as it is. And so they got to figure this stuff out, and they can't figure this out overnight. Otherwise, maybe they would have figured it out at some point over the last 5, 10, 15 years when they've been trying to.
Well, that's the thing.
Tesla with a nice move at the moment.
Like the interest from like the public and street standpoint, and it has been such a laggard of AMD for now a decade. I mean, it's not a new story anymore that Intel has lost a lot of its allure, and that has been the case now for several years. It's not just the AI hype. I mean, they've been behind in so many aspects of the semiconductor trade, it feels like, for several quarters. They badly missed, actually, street estimates when they reported earnings earlier this month. The results did lead Intel to announce a $10 billion cost reduction plan and the suspension of their quarterly dividend, which was pretty much, to me, like the nail in the coffin of what has been a dismal year for Intel shareholders. The company also gave a pretty disappointing outlook, and if the second quarter results were challenging, their third quarter outlook, I'd say, was even more dreadful. They set a new record for the worst they've seen as far as like the company's lowered expectations. That was per Bernstein research. But spinning off or selling its manufacturing business would be a major shift in their overall business model. For decades, they've dominated the chip industry with their state-of-the-art manufacturing technology, but losing that dominant position now in the semiconductor space, I think then makes you say, like, what's next? What's in the pipeline of growth that will turn things around, that will make you say, hey, with the outperformance we've seen in so many of these AI names this year and the run-ups in valuations, what actually gives Intel like the degree of strength that it has yet to capture this year still?
Jenny, that's a conversation that was happening that can't happen anymore. They
Right.
did the opposite. They essentially said, we have to do this to have our business survive.
Mm-hmm.
They're not playing offense anymore. They're not trying to catch.
There goes Netflix.
They're trying to survive. That's a different conversation.
That is a different conversation.
So when I look at this, I'm basically looking at this and saying, unless you believe in this company and you're willing to kind of, let it kind of play out, yeah, the stock's going to move around. If you have 7-8% today, right? That's possible. I can always do those kind of things. But to see $30, $40, $50 a share again, like, I don't see how they can solve these problems that made this stock go from $51.28 in December to $18.84 overnight. So unless there's just a massive run up across the entire market and somehow they're able to implement these plans and get people excited, the expectations are just different than they were 6 months ago for Intel. And that goes to say too, I mean, is it the time to bet against Intel? I don't know. I mean, it's already lost 50% of its value. Like, you're not selling the highs. So it becomes a situation that I feel like it just condenses the decision making. Now, you can always disagree with me. This isn't even me necessarily saying it's good or bad. I'm just saying what has happened oftentimes influences what will happen next. And so the stock's lost 50% of its value. It was a great short idea, but is it still a great short idea? I don't know. It's also lost 50% of its value. Is it a great time to jump in and catch the falling knife for this name? I don't know.
Gosh, anyone knows that the catch the falling knife strategy, while it does pay off sometimes, it oftentimes doesn't. I mean, I've been one to say, how much more terrible could things get? And then you feel like you're eating your words. Is anyone that's also...
To be fair, too, I mean, the stock went from 50 to 30. That was a 40% decline, right? Pretty much, 40% decline. And then it lost another 30%. So you caught the falling knife and it flashed open your hands.
Yeah, you were at one point like, okay, you caught exactly. And I think that anyone that's been in that situation knows it to be true that things could always tend to surprise you to the downside, of course, until they hit zero, essentially. But I think the also concern is, Alex, is like, forget about the basically like the fundamental story, which is something I really don't ever say, but the fact that shares pacing for one of their best days in 2 years on the fact that the company is now considering like basically splitting. So we're not even talking about the traditional Intel that we know and have discussed. I mean, this is like a rally on the fact that they break up their business. So I don't even know what that Intel looks like, and I don't think the street does either. I was reading a note that said basically like don't fall for it because we're basically just trading on the fact they divide out their business, which many are saying probably won't happen anyway.
And you never know too, is some of this short covering? Is this just simply like, hey,
right.
The fund's over in Intel, and you have to buy to close a short position, so that can lead to activity. But also, it also might allow, if they implement some of these strategies and these plans, Jenny, to just focus on something that they do well. And if they do something well, maybe there's some value to be had for this company. Maybe they can reinstate a dividend at some point. Maybe they can refocus on offense at some point. But as it stands right now, with this 8% move, given the context that it's down 50+%, more than that, if you go from the highs of December, it's like 60%. I think the FOMO feeling is, much as you might have to plug your nose to do it, is probably to the upside. I just don't know, what those expectations look like.
I think that the eventual, like, if you're a believer in Intel, you're probably saying, hey, I hope that things continue to improve and that maybe this massive, like, cost restructuring, pause of, like, dividend, pause of, like, a lot of, like, they're laying off 15% of their workforce, maybe this will lead to a structural and a cost improvement in their overall balance sheet. So maybe you're trading on that, like, perspective of, like, we're just hoping for some improvement here.
Yeah, and so what I looked at, too, was duration, right? I said this could take some time. So I looked at a strategy that would give the investor or the trader a little bit more time in this trade. But also because it's so beaten down and because it's showing today it's capable of making an 8% rally in a single session, not capping the upside either. And so what I looked at was buying a December 20th, great day, of course, my birthday, the 18 call for a $5 debit, 23 break even, unlimited profit potential, but risk definition. So Jenny, if it continues to sort of meander around here, you know the risk at stake, but if it does make a substantial attempt at clawing back some of that, that potential upside, this one's uncapped. So 23 break even, you'll need some upside to break even, but you got till December 20th for that to happen, and it needs to fall below 18. So it needs to make new year-to-date lows for this to go max loss. And one other thing to note too, sometimes these names that are so battered don't actually participate in the same way if there is a substantial market-wide sell-off, because they're almost like out of those portfolios. So when everything gets kind of fire sold, they've already sold Intel. It doesn't really have that same potential sell-off. Doesn't mean it will happen that way. It doesn't mean that the market will sell off, but something to think about.
definitely something to think about. And I will say, on like an optimistic note, if you are interested in all like the foundry business of the semiconductor trade, I do think that that's one that long term. I mean, they have so many projects underway, like expected to be completed by like 2027, 2028. I know that's what they want to spin off. So I guess it depends on like which leg of Intel you'd be investing in as a shareholder. But there are some things to look forward to in the long term, and we'll leave it on that note for Intel up about 8% on this session. Now, coming up next, it's time to talk the various ways that generations are now investing. Dr. Preston D. Cherry will join us on Next Gen Investing to discuss how Gen Z as well as millennials are investing in some different trends we're seeing with the overall macro situation. And of course, a programming alert, a new shock talk show called Inside the Mind of a Trader is coming to Schwab Network in September. It was created and produced by Charles Schwab. It's a journey into the minds of people who trade brilliantly. Here's a look at what you can expect.
The emotional aspect of trading is probably the hardest part, because at the end of the day, every single trader has had experience where they may be up a lot and they let the trade completely reverse and then go into losses, and they're pounding the table saying, I wish I took my profits. And being able to recognize that and to basically take steps to prevent that happening, I think is one of the most important aspects of trading, because anyone can make money. Keeping the money is really key.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
All right, so watching the S&P, trying to get something going. Tesla, a nice pop in today. Tesla, back up to supply.
Investing now, the special guest joining us today, that is Dr. Preston D. Cherry, the founder of Concurrent Financial Planning, Gen X versus Millennial Investing.
Giving you an opportunity to exit if that's your interest.
Various ways in which we're seeing generational divides. I mean, I think that that's something we can say we definitely feel ourselves, but what are you seeing as far as like the different ways that these generations are spending their money?
Well, Gen X and millennials, Gen X is in the catch-up mode. I always ask Gen Xers, do you like ketchup? And if you don't, you need to, because Gen X are fastly approaching retirement, and they're looking at their statements, and although they're celebrating high incomes and lifestyle,
looks good.
they're saying, ooh,
Tesla, nice move.
do a little bit more saving in our retirement accounts right now. And millennials, particularly the older millennials, they're experiencing the same things. But millennials are looking at their statements and saying, wow, we're getting beat up right now by our teenage children, and also at higher cost of living. And everybody's getting beat up by a higher cost of living right now.
Dr. Cherry, thanks again for joining us. I remember last time you talked about kind of the differences between, let's say, how maybe our parents think about money and how they spend that money, and how maybe the millennials, which Jenny and I find ourselves in, we spend our money maybe a little bit for the now, a little bit less focus on the future, not wanting to die with regret was one of your big themes. And how do we balance that? Because we know things are getting more expensive, but we know we have to plan for the future. How do you make the tough choices to be able to do both?
Well, I call it life stage vitality, Alex. And you do have to celebrate your life stage vitality now, because you may not, later on in life, you may not have, the energy to do certain things. And you do want those memorability events that you have in life, and celebrate those. That said, you don't want that.
Hey, David. Yeah, cool. I assumed New Jersey.
So there is a balance there. You want to connect. You have two two selves, your current self and your future self. You want to connect those. And here's how I will give people an exercise. If your current self is your future self of what you used to be. And what does that mean? Well, what would you have told your past self, right now? And you do have regrets. And so you may be a millennial right now, but you were a youngster 10 years ago. And if you're 25 then and you're 35 now, what would you have told yourself? And so use those lessons to pay it forward. What's your 45-year-old self saying? What's your 55-year-old self saying? And carry that forward. So
Yeah, David, I was down by you. I went to visit my mom. Not too far from you. You're just across the lake from across Bay St. Louis, right? If I remember correctly. That's cool. Yeah, still here. Watching Tesla. Tesla on the move. Tesla's on the move. Nice little pop on Tesla. Running right back up to supply again. If we get through that supply, 212.50, 213, that would be good.
If your savings rate is the amount of money that you save of your pre-tax income or is going towards your retirement. And the earlier you start, the less amount that you have to save. If you do not save now, then you will have to save more of your pre-tax income, and that will affect your lifestyle, and your lifestyle will inversely come down because you have to save more of your check or your income coming in, right? So time is on your side the earlier that you save, and then you can have a little bit more lifestyle.
Bitcoin trying to turn higher. Micro cloud hologram, whatever the name of it is. That's starting to move higher. Hologram on the move.
There's no shame in renting, okay? Housing, the cost of buying a house costs a lot of money. It's just not your monthly mortgage payment. There's maintenance and a whole bunch of other stuff, right? So you can adjust your location of where you live and how you purchase your home or your renting or buying, so you can potentially rent at a lower cost and save the difference.
And sometimes you can rent something a little bit higher quality than you'd be able to afford as well, oftentimes. And so depending on what quality of life you're looking to lock in, that can be something to think about. But I want to get your thoughts on generally, especially for younger viewers that we may have, this is Next Gen Investing, who are a little bit unsure. Maybe they dealt with the pandemic, but that seems so unique. It seems through labor kind of surveys that you see out there, consumer sentiment, there's this feeling of uneasiness that is starting to build. What are your kind of words to investors and those who are just members of the job market of how to deal with an economy that might be downtrending and how that can be kind of self-fulfilling as you start to play defense?
Yes, there's no issue with adjusting some of your future retirement savings right now during times of possible unrest or unsurety. So what do I mean by that?
All right. So the market's moving a bit higher.
And you have this 10-15% savings rate. Well, you may adjust that to say 8% or 5% or 6, 12, perhaps 18 months. That's okay. So you can use some of that money to for the now build up more cushion in case there may be a layoff or something to that effect, where you have more emergency fund to deal with uncertainty. And then when there's more sure foot, then you can increase back that savings rate back up to those.
Yeah, she has a condo, Navarre Beach.
Yeah, and I think there's a lot of angst around this entire thing, but it's good to have these conversations and really great breakdown on sort of the ways in which
Amazon's on the move. Watch Amazon.
advice that we all wish we would have given our younger selves that we'll perhaps be utilizing here, but appreciate the breakdown. Thank you so much to Dr. Preston Cherry of Concurrent Financial Planning for joining us today on Next Gen Investing.
Cool.
Now, coming up next, time for Under 30, we were talking.
Yeah, just watching Tesla, David. Just watching Tesla. David just joined us on the stream. He used to be my Chase representative in New Jersey back in the day.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles?
Move down south. All right, Amazon's on the move. Amazon also on the move. Amazon. Amazon pushing a bit higher. Okay, let's go take a look. I have a credit spread on Amazon. I just want to take a look at it real quick. Amazon. Okay, Amazon. I have these 182, 170, 87.50 call credit spreads. Got 2 weeks, a little bit more than 20 days left on this one. Amazon pushing higher. Netflix pushing a bit higher as well. Netflix. Netflix looks like it wants to break out. Netflix looks like it wants to break out, right?
But it's largely kind of hold and serve, I guess. It's a volatile stock.
It is. I mean, obviously, you've got the right namesake. Artificial intelligence is a ticker, and this is
SPX, SPX.
But you know, if you look at overall,
Okay, we need to stay above 5,600 by the close. 5,600. You can see that level of liquidity right there. Looking for a pushback to the highs. Maybe end of day they can muster some strength. Bitcoin trying to bounce. Bitcoin had a really nice day yesterday. Today we pulled back into yesterday's price action. Let's see what IBIT looks like. IBIT, same thing. Coinbase. Okay, so those look okay. So Netflix. Nvidia, that Iron Condor. I just took that Iron Condor, $1.65, and add to it. I'm going to add to it probably by the end of the day. Iron Condor for credit.
And they're expected to report earnings on the 4th of September when we come back from our long weekend. But their estimates for earnings.
Microsoft's still looking for a bounce.
That's an improvement. I say a worse situation, not an improvement. They lost 9 cents a share last year.
Supermicro, what's it doing? Supermicro. Okay, wick at the low of the day. So shorts covering. It looks like a big bear flag, but headed back in the right direction if you're bullish. All right, so S&P looks like it wants to go here. S&P 500.
Why have we not seen this name be more of a beneficiary of like the AI surge? I know everyone's saying like the bubble has burst. I feel like we're way too early in the game to say that, but still makes you wonder like why we've seen this tempered growth for
S&P 500 needs to get above this supply, supply overhead up to about 5606. Gets above 5606, we could see a move to VWAP overhead, that dark blue line. 5606. We'd like to see a close above 5600.
What's the technology that you have? What's the value proposition of your technology relative to competitors? What's your revenue base? One of the things about C3AI is they've had a lot of concentration of revenues in just a few customers. Like Baker Hughes is like 20% of their sales. So that's some risk, and that may be one of the reasons that some of the analysts are a little bit apprehensive on this name. But ideally speaking, if you just exclude all the other
Tesla's still flagging at the high of the day. Tesla looks like it wants to go. Tesla has supply right overhead. Tesla 319,000 shares overhead. Resistance.
They generated about $292 million of sales last year, but they lost $280 million in losses. So you basically have a net income that's negative 90% of your total sales. So they've got efficiency issues, and I think that's certainly something they can address. And then the other thing is, generally speaking, I'm not saying all the time, the best moves in stocks aren't necessarily when they are profitable. It's generally speaking about 4 quarters before they become profitable. Now, if you look at C3AI,
they're not expected to produce any profits for this year, the fiscal year 2025, which is what they're reporting coming up for Q1. 2026 are also expected to lose money, but they're not expected to achieve adjusted profitability until 2027. So they're already about 8 quarters away from profitability. And generally, like I said, if you're about 4 quarters towards profitability, that's when it starts to pick up in terms of some analyst expectations that may be higher, and the price action might move higher. So it seems to be there's a lot of inefficiencies that I see in their business. And just because they've got AI in the name, it doesn't necessarily mean that they're a profitable business. That's not been the case for AI as a company. But it has been for Palantir. That's why I'm saying that we talked about that name, and it's actually now hitting new all-time highs.
Okay, looking for Tesla to push a bit higher. It would be helpful if the indices could lift a little bit more, get above 5,600 S&P cash. Futures look like they're winding up. Been moving sideways since about since about 115 or so. Bitcoin's trying to turn. Okay, looks like Tesla just got rejected. Microsoft at the lows. Supermicro trying to push back up to the highs. Tesla rejected.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
All right, still, I'm very interested in selling credit spreads for the long weekend. Okay, Netflix continuation. Netflix.
It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out.
Okay, let me look at JP Morgan. I have a credit spread on JP Morgan. Looking for JP Morgan to continue trending.
Being lucky in trading is great, but it's not the formula for success.
You need to be able to
JP Morgan.
in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen.
All right, JP Morgan. I have the October 18th, 210-200 put credit spread. At the time, it was $1.65 per contract, $165 per contract. Not expecting this to come back anytime soon. JP Morgan.
I'm not very good at sales. Turns out I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their head.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in anyone's stock, no more than 20% in anyone's sector.
Now there's a market for every single one of these people. There's a market for you.
Market overtime on the Schwab Network. Thanks for tuning in.
Okay, futures fading just a little bit. Supermicro fading. Nvidia. Are we going to entice the bulls again, only to drop it? I don't trust the markets at the moment. S&P 500. Let's take a look at that again. S&P. S&P doesn't look bad. S&P.
Good afternoon and welcome to the watch list. I'm Caroline Woods in for Nicole Petalides. It's 2 p.m. here at the New York Stock Exchange, and here's what's coming up on today's show. Intel shares are up on news the struggling chipmaker is considering splitting its business. We'll take a look at what that could mean. We're also taking a look at the growth of crypto apps and what it can mean for blockchain. And our panel looks at the state of the consumer after fresh signs of easing inflation and growing.
Okay, S&P doesn't look like we're going to make it beyond the highs of this week for now. 5,600. We want to stay above 5,600. Stay positive gamma. So we're just below that level right now. S&P cash.
0.1%. Strength in consumer discretionary being offset by weakness in energy. Taking a look at some of the futures products quickly. The dollar is higher, Bitcoin is lower, gold lower, and oil is also lower, trading around $74 a barrel. Or actually a little less than that. For some of the biggest stories in the markets, let's welcome in Kevin Green, senior markets correspondent here on Schwab Network. So Kevin, let's start with the commodity space, with the energy sector, because that's the weakest link in the S&P 500 today, as crude oil prices are below $74 a barrel. As I just said, what's behind the weakness in energy?
Well, Caroline, as you kind of talked about, we are seeing oil slide about 2%, but the energy stocks are also getting hit today, but not as aggressively. We actually did get a news report from Reuters that OPEC is still considering actually increasing production starting in October. Now, this has actually been in question over the last couple of weeks, if not months, if they were actually going to take this action because of the fact that oil prices have been lackluster, to say the least, and demand, especially when you're looking at China.
All right, good to know, David. Yeah, that's good.
Of the sources of member nations that are part of OPEC are considering the increase here, and it's looking to add around 180,000 barrels per day for some of these members that are a part of OPEC here. So increasing the amount of supply obviously is going to be bearish for the markets. We also have this situation that's happening with Libya, where they're taking production and inventory off the marketplace here. So even this increase in October is not going to really.
You're anticipating a weak September. I've been talking that thought process.
Kind of a sign that they might be ready to try to, I wouldn't say flood the market with oil, but start to normalize their oil policy that could create gasoline prices as well as diesel and oil prices in general to slide here. So that's
all right. So S&P's hanging in there, trying to stay above 5,600.
Official meeting, or one of the formal official meetings starting on October 2nd. That's probably when we are going to hear a decision if they're going to go through with these production increases or maintain their current levels where they're at right now.
Okay, so energy, the worst performing sector on the S&P. The best performing sector is consumer discretionary, although it's a very much a mixed picture in terms of the retailers after earnings. Should note that Dollar General is up today after that huge sell-off yesterday after earnings, but Dollar Tree, which reports next week, is still lower, now down about 13.5% this week ahead of that report. So tell us what we should expect there, Kevin.
All right. So Amazon continues to push a bit higher. Tesla is trying to do something.
Staple space, but they operate kind of two different businesses, especially for Dollar General, which over the last year and a half, almost 2 years now since post-COVID, they have really tried to transition their inventory to sell more consumer discretionary goods in order to achieve higher margins on the products that they sell. And unfortunately, during that time, staples were really in trend, discretionary not so much, and they've been having issues ever since. And we actually saw that with their earnings announcement. Now, they did blame the consumer a little bit when it came to the softness in sales, and they also reduced their guidance. So we did see a sharp sell-off of over 20% for Dollar General. The market tends to kind of put them in the same basket, so we did see kind of a similar reaction with Dollar Tree, but they are actually reporting on Wednesday, and so the numbers that we're going to be looking for is going to be the adjusted earnings per share, which the street's estimating at around $1.04, about a 14% increase on Texas, which has been a massive blunder for this company here. They have not been able to right-size the business. They have closed locations. And now the question is, when are they going to either sell this business or are they going to take other actions in order to kind of get it off their books, if you will? So, once again, two different types of businesses, two different types of headaches. Dollar Tree probably may actually fare better in this environment than Dollar General. And so keep your eyes on that stock. You're looking at a 20% implied volume.
All right. So S&P looking for it to push a bit higher.
Dollar Tree because of the fallout from Dollar General.
All right, and good point about the staples versus discretionary. I think of myself going to the dollar stores as a kid, and everything I bought was discretionary, nothing I needed. But yes, a lot of people do go for it.
Microsoft at the low of the day, showing more weakness at Microsoft.
Now let's take a look at the bigger picture with Stash Brown. He's managing director of Brown Capital Wealth Management. Stash, thanks so much for joining us. Happy Friday.
Caroline, good afternoon.
All right, so I want to talk about today's market action, and then we'll broaden it out.
Okay, what's NVIDIA doing? NVIDIA holding. AMD. SMCI continues to push higher. SMCI. AMD.
It's funny when you think about what happened this past month, where you really had a tale of two halves, or maybe a week and a half, the first week and a half, where you saw a significant amount of fear. You saw the VIX spike to levels we haven't seen in quite some time. You saw a lot of put buying to where we are now, where the last 2 weeks of August, you saw a degree of optimism. You saw a lot of buying. You saw the VIX plunge. And so now, of course, we have
All right, futures trying to do something. Futures are trying to push higher.
You know, did the fear just disappear, though? Because I was taking a look at your notes, and you say, barring an unexpected shock, the stock market has more room to move higher. So the fear just went away?
Right. So, Caroline, you had developments through the middle of the month, which certainly your viewers can relate to or saw firsthand. You saw the developments out of Jackson Hole, where the Fed chair committed to an official declaration of a monetary policy pivot.
All right, S&P trying to push. S&P trying to go.
And maybe we get even more than, say, just one or two.
S&P is trying to go.
Is expecting 100 basis points in rate cuts.
Okay, we'll get a change of character here. A bullish chalk if we push above 5606.
I'm not going to say historic, but it's been extremely strong. There was a particular day, August 23rd, where if you look at the components, the companies that trade on the New York Stock Exchange, you saw for every one stock on the New York Stock Exchange that went down, you saw 10 go higher. That is a material degree of bullishness. And when you look back from a historical perspective, say the next 6 to 12 months, it's very positive when you see these types of movements in human behavior. Human behavior tends to repeat itself throughout history, but whether it's a spike in the VIX and then the VIX coming down, or the degree of bullishness that followed, again, both instances where you look out the next 6 to 12 months, it tends to be fairly bullish for the S&P 500.
The market has been so focused on rate cuts this year, though, and that soft landing scenario, the narrative really...
Amazon still pushing higher. Amazon higher highs, higher lows. Not expecting much out of the markets today. All the New York FANG index stocks are lower. Tesla's a bit higher now, but let's see, New York FANG. Okay, here's a New York FANG index. Okay, so we really need to see this close higher. Let me get this out of the way.
Artificial intelligence 2.0. And you even have 493 that have largely been forgotten. What's been interesting this last month and a half is you've seen that 493 really start to have a divergent move where it is outperforming.
Okay, we're right. We came back to a 382 on this
The optimism or the excitement in regards to the next wave of artificial intelligence. I think broadly,
New York FANG index.
financial conditions still remain loose, and that is certainly one of the major variables if you're trying
Okay, so stochastics is almost reset again. You see that? So if we get a reset here on stochastic, That'd be awesome.
Conditions continue to remain loose, and that is always one of the most important variables when trying to project what you believe is going to happen to financial asset prices over the near term.
Well, it sounds like based on your sector picks, which I have, that you're expecting this rotation that we've been seeing to continue because your picks are real estate, which has outperformed tech this month, small regional community banks, and then energy infrastructure.
RSI is back below 50, but turning up. That would be good.
Sure. We'll start with the last one first. Energy infrastructure is a part of a larger story. Certainly, energy infrastructure stocks have seen a bid when you look out, say, 2 to 3 years. But the story's bigger for energy infrastructure in the last 2 to 3 years. It really goes back the last 12 to 13 years. And for the better part of the 2010s,
Okay, let me shift gears. I'm going to go over to CNBC and see what they have to say. These guys are boring. Oh, Rick is on. Okay, cool. Rick Santelli.
And that's what's throwing off both the household survey, the unemployment survey, and the revisions. The revisions look at tax data, which is basically not immigrants, and they came to the conclusion we had 818,000 less jobs, but it might have actually been 300,000 less jobs. 500,000 people took jobs that people under the table, that people used to have that were paying taxes.
Now, when I siphon through all this, here's what I think. I think seasonality is already not very good in these numbers, and it's getting worse. COVID changed so many things. A, B, certain states, I just don't trust their numbers. And B, nobody knows how many migrants or immigrants are coming across that border. So I don't know how they could divine some of these numbers. Would you agree with that?
Yes, and the reason I would agree with it is we talk about the labor market. We think we're counting jobs. We're doing surveys. We're asking people how many they employ. We're making assumptions, and then we weight those assumptions by the changing population growth of the country. That's why the unemployment rate's going up. That's why the household survey is stagnated relative to the payroll survey, which keeps going up. And a lot of the data is throwing us askew. And we all look at it and say, oh, the labor market's weakening. It might not be weakening. Maybe more people have jobs. They have more money. That's why consumption's up, and that's why inflation could stay sticky.
So what you're really saying is if aspect of the labor market, what is the banner, poster child of the weakening, is the rise in the unemployment rate. That might be the riskiest aspect of that report to basically bet the ranch on.
I agree. And none other than Claudia Saunders.
Netflix. What's Netflix going to do? Netflix.
Right. She said she doesn't know if it's going to work this time around.
Where does that increased labor
Netflix. Let me take a look at Netflix for some credit spreads or iron condors or whatever. Netflix has been sitting here.
Real quick, we're almost out of time. If the jobs report next week shows that the unemployment rate holds or drops a little bit, will that make any difference on September 18th ease?
Only to the extent that the Fed would go 25 instead of 50. 50 is still got about a 35% chance of them going.
Excellent. Jim Bianco, it's always a pleasure. We'd love to do floor hits together. Deirdre, back
True. Yeah, we got an August roll.
Thank you, both of you. Thank you so much.
JP Morgan.
Intel going into power saving mode, Lululemon cramping up, and Walgreens just cannot get out of the red. We will dive deeper on these names in 3 Stock Lunch. That's next.
JP Morgan roll. Okay. So let's see. So Rick was saying, Santelli was saying that yields have been going up on the data. Ten-year yields at 3.9%. 10-year, let's take a look at the 10-year. U.S. 10-year. U.S. 10-year. Okay, that's a bit higher today, 10-year. Another reason for the weakness that we're seeing. Let's take a look at the Japanese yen. Carry trade. JPY. AUD. Japanese yen. Australian dollar carry trade is reaching parity pretty soon. Looks like still fading. Nikkei should be higher, right? Nikkei should have made it back. Okay, it's at the 50-day Nikkei. All right, Tesla, watching Tesla. Tesla trying to move back up to 220. Let me see what the volume looks like. Tesla, I'd like to sell some iron condors on this one. Bollinger Bands are pretty tight, so I'd sell them outside the Bollinger Bands. Let me take a look at that and see what that looks like.
Every day.
Tesla.
Fast market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Tesla looks like it wants to break a bit higher. Tesla.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades seen throughout the day. For that, let's welcome in Tom White, co-host of Fast Market here on Schwab Network. Tom, Walmart is first on your list. Walmart hitting new all-time highs today. Up
Tesla.
0.2%. You found a bullish play. Walk us through it.
Yeah, we've seen a lot of the earnings reports out of some of the retailers. They've been bifurcated a little bit, right? We've had winners and losers in the space. A lot of them saying, hey, the consumer's restrained, while others are doing
S&P is trying to push. We got plenty of time, an hour and 45 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 30th, last trading day of the month. JP Morgan roll today.
Pullback in consumer spending at all, and that's why you're seeing the stock hitting those all-time highs today, up about 46% so far on the year. They highlighted continued momentum with e-commerce profitability. Their trends, including general merchandise, continued, point to the durability and consistency of earnings performance. And they're positioned well, regardless of economic conditions, Caroline. So I think that's an important aspect of this. So even in a high inflationary environment where savings rates are going to their lowest levels since the financial crisis, that people are still spending at Walmart. They've got 60% of their stores are now in the grocery side of the business, and that's pretty resilient. So a lot of things going well for Walmart as it's pushing to those all-time highs. We saw some unusual option activity in here also. In the November 80 strike calls, traders bought over 20,000 of those for an average debit of about $1.09. So the break even on this one, 81.09 over the next 77 days. That's about 5.5% above the current share price in there. They were also in there buying the November 85 strike calls, and now they repositioned this trade. So they were initially long some calls.
All right, S&P is trying to climb now.
Monthly cycle that expires in 3 weeks. They sold out of the 75 strike calls that were doing well for them, repositioned in the Nov 80s here.
Okay, so here is the issue. You can see the skew down here below. This used to be tilted to the right. Used to be tilted up and to the right. That was telling us that there was a lot of call skew over there on the right, a lot of call. But that's dissipated quite a bit. You can see the put side is very, very high, which is leading us to think that the 5,600 positive gamma can shift to 5,700. There's a heavy, a lot of dealer positive gamma at that level, 5,700. Traders taking calls at overhead strikes.
They added 12% of monthly active users to 522 million. One of the biggest issues that investors have had with this stock.
Okay, here is the flip point, 5,600. You can see very clearly right at this strike is where, right in this area is where positive gamma takes hold above 5,600. So if we can manage above 5,600, that's 5,700 there.
And operating expenses ramped up just a little bit there. I think the big key here for this unusual activity that I saw in here
actual strikes. There's 5,600 right there. So you can see that to the right of 5,600, that tall peak and trough. That's where most calls and puts are hanging out. We got about 194 million in put gamma deltas and 217 million in call deltas at this strike. So above this level, we could push a bit higher. Next major level is 5,650. Beyond that, 5,700. So 5,650 would be nice to see a visit there. S&P is starting to get some traction. So if you're trading 0 day,
at 32.93 over the next 2 weeks, that's about 3% above the current.
Let me show you what 0 day looks like right now. 0 day.
Volume about 6 times normal daily average volume that we've seen over the last week of trading. So yeah, somebody I think playing that we're going to, for maybe a rebound in the shares at that conference with comments out of the company.
All right, let's see. September 11th, we'll be on the lookout. Yeah. And finally, Intel.
Okay, Tesla's trying to push higher. Tesla.
Gains, up more than 7% right now. Getting that boost on some of.
I'm going to wait for Tesla. Maybe if Tesla can push a bit higher, I'll sell some condors or something north of, say, 225, 230, something like a 20 delta.
Yeah, it's actually leading the S&P 500 today, Intel, and that's a surprise because this stock was just at 14-year lows earlier this month. As earnings continue to get hit on this stock, they continue to lose market share to AMD.
Okay, here's what 0 day looks like. 0 day.
In the new AI chips.
All right, so TTM did back off a little bit. TTM, the red, yellow, cyan, blue histogram bars, you can see that price action is riding a 1.5 ATR stop near the upper Bollinger Bands, near 5608. Up volume is leading going into the last hour and 40 minutes of the day. Up volume is leading, except for the IWM, which did pull back. We have an iron condor on IWM. SPY is 2.5 to 1, and the Qs are 3.9 to 1. Qs are leading. Despite the weakness, we can see in the S&P is starting to run that upper Bollinger Band. Upper Bollinger Band is starting to turn. And MACD in the bottom panel left is about to cross the 0 line on the 5-minute chart. Oh, the roll happened already? Okay.
But that being said, seeing a nice pop today and seeing a lot of bullish call activity.
All right, so the roll happened at 157. Okay, cool. Thank you, David.
And the one that stuck out to me today was out in the November 25 strike calls. Traders bought over 13,000 of those for an average debit.
Okay, S&P cash looks like it wants to go. S&P cash heading back towards VWAP. Positive gamma above 5,600.
In Intel, and as I mentioned, this stock's just coming off of those 14-year lows. Seeing a nice pop today, and that immediately sends signals to call buyers, and that's what we found here in the November cycle.
Yeah, shares up 7.5%, but take a look at the monthly performance, down 30% in August, and then of course down almost 60% year to date. So let's see. Tom White, appreciate your insights. Thanks so much.
Thanks.
Coming up, we'll dig further into those reports that Intel is considering splitting its business and examine what can be done to turn things around for the struggling chip maker. And a programming note, a new talk show called Inside the Mind of a Trader is coming to Schwab Network in September. Created and produced by Charles Schwab. It's a journey into the minds of people who trade brilliantly. Here's a look at what you can expect.
Of trading is probably the hardest part, because at the end of the day, every single trader has had experience where they may be up a lot and they let the trade completely reverse and then go into losses, and they're pounding the table saying, I wish I took my profits. And being able to recognize that and to basically take steps to prevent that happening, I think is one of the most important aspects of trading, because anyone can make money. Keeping the money is really key.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All right, so that makes sense to see some upside. We've got the call roll 58.85 short, 5,300 put, and the 44 long, and the 44.60 put short. Okay, starting to grind a bit higher. Tesla, S&P, Tesla. We got plenty of time left to run this higher. Tesla.
Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Caroline Woods, live from the floor of the New York Stock Exchange. Let's take a look at a few movers in the market right now. Marvell is one of the top performers in the NASDAQ today after a strong
Tesla.
report after the bell yesterday. The semiconductor maker topped revenue expectations with 10% year-over-year revenue growth. Several analysts raised their price targets following the report, with Citi opening a 90-day positive catalyst watch ahead of the firm's global conference next week. Shares of Marvell
Okay, let's take a look at Tesla. I'm interested in selling an Iron Condor. Let's see, 190 on the downside, 225 on the upside. All right, so the calls, sell the 225. Looking to sell the 225. I'm just talking through this right now. I'm not actually taking the trade. 225. Sell the 225, buy the 230. Just looking at the credits on this one. Put side below the lower Bollinger Band, 190, 195. So sell the 190. And I'm looking 2 weeks out just to capitalize on this next couple of weeks. Volatility and volatility compression. Let's see, 190. Let's do the 185. Is that right? 185. $5 wide. It's $1.30 credit. Let me see what these go for. So it's $262 for the September 13th. So 2 weeks. So implied volatility is going to kick in over the next couple of weeks. The 13th is 2 weeks from now, Friday. So those are a credit of, all right, that looks pretty good actually.
Where it can catch up quicker now, and therefore gets itself positioned much better in the race in the AI.
All right, so I just took that credit on Tesla, Iron Condor.
That's maybe where the rebound could happen next year for Intel in terms of its revenues. So I think the breakup is really leading to this rebound in the stock. Of course, it still has to happen, and there's a lot of speculation. But it's a first sign of Intel maybe potentially turning the corner. So it's an interesting story because as we all watch this
230, 235,
particularly in AI and data centers, it's really been Intel
230, 235. Let me just do this one more time. 230, 235. Downside, we would sell the 190, 185. Selling the 190, 185.
Discussing a breakup indicates that is, I think, maybe the say more
85.
desperate, but at least an emergency.
Something's not right. Let's see.
They're struggling to get ahead of the trade.
Sell the 230. No, 230. Sell the 230. Buy the 235. Buy the 235.
The reaction in the stock is, I think, indicative of those either maybe being somewhat short or speculating through coal volumes, as your colleague said earlier. On the other hand, it's maybe that people see the value. Now, I would say, though, that Intel actually trades in the group still not at a significant
okay, so
it's trading like 26.8 times, whereas the big outperformers like NVIDIA or Marvel, for that matter, trading like 33, 37 times.
So Intel has also somewhat of a valuation issue here too, right? So I think it's a momentum play here, where it does.
NVIDIA
If the story actually plays out, if it
is
doesn't,
squeezing
then,
NVIDIA.
then we're back down to the lows.
So Ben, you're chief investment officer. Would you buy Intel at 21?
All right, I'll post this Tesla trade in the trading room.
I think of valuation first and foremost. Is this breakup, which you have to calculate, what's that
Tesla.
premium? Would that mean indeed a multiple that's actually going to go up towards where NVIDIA is, right? Is that where the opportunity is? Because 26.8 times forward multiple to NVIDIA 33 points times. NVIDIA's multiple.
Tesla IC. Okay, let me just mark this up. Actually, you know what? I have a chart already. Let me just use that. Credit spreads.
Convincing track for that matter.
Tesla.
So it does seem to me a bit expensive here still at these levels, but I can't ignore the story. So I would watch it here, see how it consolidates. If it does, then I think I would feel more comfortable buying.
Okay.
There were also reports that Intel is working with advisors.
So Tesla 230, 235 we said, right?
Do you think that these steps from
230, 235. 190, 185.
Do you think that that's enough to ward off activists?
Maybe not, because it tends to be driven maybe also by activists.
190, 185, 225, 230, 225, 230.
Much insight in the actual activist involvement in the company, because I'm not so involved that way. But I would think that this story doesn't come to surface for nothing, right? Clearly, there's a discussion going on, and so the speculation is high, and then the question is about like if it does get executed, what will be the true premium that reveals itself from.
Now I plan on closing this.
In the stock.
More than likely, I'll close this on Tuesday. Depends on how much we make on this. Okay, minus 190, 185. Okay.
Yeah, it depends on how he can execute it, because it's been for him, I think, really a challenging environment, and he has not enough time to really catch on to the AI infrastructure boom, and had to therefore catch up with cutting costs and workforce and other costs, and then dealing with a business, that foundry that's actually
Okay, minus 225.
really contribute to revenue. So I'm not sure his position. My guess is that today, ultimately, shareholders will appreciate that if the company takes the right measures, that the stock performance improves, and then ultimately will also be.
Okay, S&P is trying to push now.
A good sign. So I think it's early days or so to judge where his position will be.
Okay, and you mentioned the valuation might not necessarily seem attractive.
Okay, let's look at
NVIDIA. I'm curious. NVIDIA is down about.
Tesla.
Would you buy it at current levels? Would you take advantage of this dip that we're seeing in NVIDIA? It's higher today, but down 8.5% this week.
Okay, here's Tesla.
The story of NVIDIA is actually, I look at it more macroeconomically.
Okay, so by the 13th, this is what we're looking at on Tesla.
GPUs and Blackwell and other chips. So clearly, that monopoly position is yet to be torn at. So it's in a really good position to continue to drive this incredible revenue growth. But as the earnings has shown, it's never going to last forever that way. The anticipation expectation is too high. On the other hand, there's a real true macro story here. And NVIDIA has a real impact on the economy potentially because of all the AI infrastructure being built, essentially driven by NVIDIA's performance, at least largely because of all the demand for those chips. So as long as that continues, I think NVIDIA is in a good position, and probably this move down in the stock is an opportunity. I do look at the stock though, like these earnings and projections are hyped. So I would like to see it being pulled back a little further before I would be enticed.
All right, it's 2:34 on the East Coast, 2:34. I'm your host, Cousin Vinny, coming to you from theclosingprint.com.
You too. Still ahead, we'll take a closer look.
Last trading day of the month. Tesla. All right, so Tesla by the 13th, we're looking at one on the downside, potentially 197, 198. On the upside, 224, based on current option pricings and a 6.3% move either direction. Okay, so that looks good.
Every morning, every trade, always live. Expert earnings.
All right, so yeah, so we're coming into the last hour and 24 minutes in the trading day.
Anywhere on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Caroline Woods, coming to you live from the New York Stock Exchange. Let's take a quick look at the markets with about less than 90 minutes left in the trading day. Still a mixed picture, although the Dow is inching closer to that unchanged line, only down about 27 points.
All right, so yeah, it looks good.
Fairly negative. Meanwhile, the Nasdaq adding to its gains a little bit, up about 0.6%. S&P 500 up 0.3%. For a market update, I'd like to bring in Ben Lichtenstein, senior futures contributor. So Ben, final 90 minutes of trading, and kind of anyone's guess about if we're going to close higher or lower based on this action.
Yeah, it's been kind of a strange day, right?
Okay, so all right, so
Week for that matter, but I feel like it was to the moon off the open this morning, and then the sky's falling into that midday trade, and now we're just.
all right, so here's Tesla. So the lower end by the 20th. I meant to go to the 13th, but that's okay. So you can see that 195 is contained. That's like in between the third standard deviation and second standard deviation. Actually, that's above standard deviation too. So the expected move is 195 on the downside by September 20th. The upside, we're looking at 227. Okay. So about 225 by the 13th. So we're right in there, getting enough premium, but not going too far out. Okay. SPX on the move. All right, S&P. Thank you, Frano. S&P 500 on the move. Okay. So David, Mr. Holden, looking for upside. That JP Morgan collar looks pretty good.
Yeah, not low energy here on the floor, though. There's a lot of action going on, making it a little hard to hear. The big rebalance has everybody here. All right, you're also keeping an eye on Bitcoin to end the month lower. It's not down all that much, though, only about 0.2.
Hey, hold on 1 second. I got my office phone is ringing.
Friday news dump heading into a long
1,300 being laid off at Goldman Sachs.
Thank you very much. I know we'll see in a couple of minutes the cool story on Kool-Aid. All right, see what I did there? All right, switching gears, check out shares of Intel. Intel, this is a big story, folks. Intel is up 8% right now. There are reports that it is looking at possible strategic alternative, including the possible sale of parts of the company. It's a big story. I'm going to stop talking, go to somebody who knows more about it. That is Seema Modi. Seema, this is a big deal.
It is. Brian, Intel executives are working with outside advisors to reshape the business. That's according to sources familiar with the situation. Now, we're told that Intel CEO Pat Gelsinger is looking at all options. Morgan Stanley among the banks engaging with Intel on different strategic moves that could include splitting or selling certain parts of the business. Unclear if that would include the foundry business. Remember, Intel is building 5 fabs in the U.S. Capital from private equity players Brookfield and Apollo has helped Intel's expansion efforts, but it is a very expensive project to go under. When Intel did announce its cost-cutting efforts in August, I asked the company's CFO whether foundry plans would be impacted, and he said no, that it continues full steam ahead. The weakness in Intel's core business, though, does raise questions as to whether that is a realistic goal. I'm told that the company is trying to come up with a few solutions ahead of its internal board meeting next month. We're looking at the stock higher. You pointed to it, Brian, but still has a lot of ground to make up, down about 50% this year.
Anything in the report or maybe wild speculation or chatter, Seema, that suggests to you that honestly, that Intel could be sold? Could it? I mean, the whole, not parts. Just somebody buys Intel.
None of the discussions I've had or have I seen in other reports about a situation that would involve a full sale. But again, it does seem that they're in this type of process right now where they're having discussions with advisors to look at a potential restructuring, maybe selling or splitting parts of the business. And again, they're trying to put together some decisions into a short list ahead of their internal board meeting next month. Brian.
Seema Modi with a big story in Intel. Seema, thank you very much. All right, let's talk more now about Intel and bring in King Lip of Baker Avenue Wealth Management. He is an Intel shareholder. King, welcome. What do you make of that report as a shareholder?
Hi, Brian. Yeah, happy Friday. Yeah, we have a small Intel position. Our initial thought was the AI chips that the company would have would be look attractive relative in terms of an open platform relative to NVIDIA's chips. That being said, the company is stuck between a rock and a hard place. The company's running out of options. The costs are ballooning while revenue is falling. We think there's still a lot of value embedded in the company. So a breakup of the company honestly makes sense to us. Innovation has been lacking at the company. So if the company is smaller, it could sort of invigorate whatever's left of the company after a split up.
It really is a story when you look at Intel, and those of us of a certain age remember when Intel was one of the biggest and arguably most important and most covered and most coveted companies in the world. A lot of good people at the company. It's really, they missed it. Somewhere along the line, they made some strategic mistakes that have just wiped out a lot of shareholders, or at least cost them a lot of money. King, why are you taking, I know it's a small position, why are you taking a shot on Intel?
Just because we do believe the parts of the company are actually worth more than the whole, if you would. For example, the foundry business actually makes sense to us from a geopolitical reason, not having all chips actually overseas. Now that's a little bit of an about face if the company spins off this foundry business. But I think part of the reason why it's run into some issues is it's really had a handful of customers. And I think the reason for that is, competitors are looking at Intel and say, do we really want a competitor manufacturing our chips? So a spin-off of the foundry business actually makes sense. Maybe the company will retain stake if there's a restructuring, where it would actually allow it to be more competitive relative to its competitors. And I would agree with you. I've been long enough to know that at one time, Intel could have crushed AMD at any time, and now AMD's 2 times greater than Intel.
Amazing. And I'm not going to bring the dirty world of politics into this, King, but I'm going to bring the dirty world of politics into this because Intel's been a huge beneficiary of what they call the CHIPS Act, right? It's received billions or will receive billions in taxpayer dollars to help build this out in Ohio factory, etc. And I'm not bringing it up for political reasons. I'm bringing it up because you do wonder if there is a little bit of a taxpayer put, for lack of a better term, on Intel, meaning the government has sort of singled out Intel in a good way to receive money, and you wonder if there is a little bit. There's no way the federal government wants Intel to have any more problems. And as a stockholder, you kind of wonder what if the federal government has a company's back, so to speak. Does that mean I should have the company's back as well? I think you see what I'm getting at.
I do, and I think there are political reasons, there are financial reasons that Intel can come out of this. I think the timing is just really bad for them. I mean, the earnings report recently was dismal. But as I mentioned, there's a lot of reasons why the
Intel
can come out of this ahead. If you look at this year's earnings, it's awful. But looking into 2025, actually, the company's prospects look a lot better. But they really need a bridge to transition to 2025. And as you mentioned, there's federal tailwinds, and if the company can get over this tough spot here, I think the company will be fine.
Kinglip, Baker Avenue Wealth Management, fascinating story around Intel. See where this goes because it is one of the most storied American companies in tech. King, thank you. Have a good weekend.
Thank you, Brian. You too.
All right, we have got a long way to go, and on deck, Roger Altman of Evercore ISI will be here to give us his take on the real cause of inflation, plus what is critical for your money in the weeks ahead. I may even ask him about Intel. As always, live at the New York Stock Exchange. Dow's down 13. NASDAQ's up nicely. See what happens in the next 45 minutes. We're back right after this.
Get to the Dead and Company show.
Yeah.
It's like, I mean, I was at the Dead and Company show with people who've been to 25, 30 concerts.
Of course.
This
They said it was amazing.
Blew it all away. But it's a great business. So it works. The experience works. It's amazing. But the business is also demonstrating its strength. You have every day, they do $1 million in revenue on the Postcards from the Earth, which is their own content. So during the day, they've figured out now how to do the movie during the day and a show at night. So you can do like two things at once. They've got the Ectosphere. They're getting nice advertising revenue from the Ectosphere. That's kicking in.
They got fight coming, UFC.
They got UFC fight. They have corporate events. The only reason they don't have more corporate events is because they need to get at least $1 million paying profit to do a corporate event because they can't do the movie at the same time. The other thing that I thought was very exciting was, and no one seems to have talked about this, there is going to be a U2 movie.
Right.
U2.
I heard about that.
So, I mean, again, this tells you that they own they have content. They have the whole ecosystem because they have the content. And then I think that's going to be very popular, that people are going to want to see that, because when you're at a show, the band's a little bit irrelevant because of the experience. So I think that the movie will be very popular. So every time they do a show, I think there's a possibility that you've created content that they can keep using.
That's a very interesting point.
The biggest deal is that they keep hinting about the next sphere. And that's going to be, the stock, has come to life. I saw JP Morgan went from a hold on a $37 target to a $57 target and a buy on the last earnings report. But again, when they announced the next sphere, which they keep saying is soon, not sure what soon means because they've been saying soon for 3 months. But when they announced that, I think it's going to be basically a franchise kind of deal and I think it's going to be big. So we're pretty excited about the sphere.
Will it be? Do you know if there will be government involvement? It will be like partially state-owned?
I mean, where they go next? The rumor has been consistently Dubai is the rumor. So, but I mean, again, I guess we'll know when we know.
Yeah. All right. That's cool. That's great to know that that's on the calendar.
Yeah.
The stocks have been up like 8% basically since it started trading. So gone pretty well so far.
Yep.
And also rallied on the last earnings too.
And the earnings were good.
Let's talk one that's kind of fun, like a school bus company.
Yeah.
Bluebird.
Yeah.
Right? That's what they do most.
Well, that's what they do. They make, yeah, that's it. That's not part of it. They make school buses. School bus business is actually a great business. There's, more people being moved on school buses than any other form of transportation. The country.
Nice
in addition to
bouncing
that,
Palo
in addition to the
Alto.
fact that there's a very old fleet of school buses that need to be replaced. You've got two other huge catalyst wins at their back, which I think make this an amazing company right now. One is, everyone looking for EV play, and whereas it used to be like Tesla was yesterday's Nvidia, now what's really working in the EV world. This is the best EV play I think out there, because the school bus they dominate that business.
Interesting.
There's $5 billion of money, government money, going down to the governments to fund the transition into electric school buses. They dominate that business. And if you think about what a school bus does, it goes on a relatively short run.
Sure, it seems perfect for it. And it goes back and resets.
Exactly. So it's a perfect EV situation.
Wow, that's really interesting. I mean, if that becomes a reason for why people buy the stock, I mean, it trades at like 15 PE, so it seems like you could get a much more a higher premium for that type of business if it goes that way.
Yeah, I mean, Tesla was at 100 times earnings.
Right. Yeah.
But I think there's
and you already know there's a use case.
Yeah, absolutely. Yeah, it definitely, and they exceeded expectations. They raised guidance. It seems to be a terrific setup for years to come. This is just the first year of what's probably 3 to 5 years of terrific growth.
Okay. Maybe a value pick for the last one here, real quick. A Superior Group. Carhartt is one of the brands under their umbrella. Is that right?
Well, no. Actually, Superior Group has 3 businesses. That's some of the apparel.
Like uniforms and
stuff.
stuff.
Yeah, healthcare apparel. So they got 3 businesses: healthcare apparel, which is what we love about this. The stock is very cheap at half-time sales. Great cash flow generator. All 3 of their businesses have very big growth possibilities. The TAM is huge in branded products, in the healthcare vertical, and in their call center business. These are 3 really good businesses. The stock was doing well, and I'll just say what worked best this year for us is companies where they had supply chain disruptions, they had inventory disruptions, and then they came out of it, and then the earnings returned to normal, and the stock shot up 50-60%. This did that, and then they had a bad quarter. They had a bad quarter, and the stock gave it all back.
That's why I kind of framed it as like a value. It looks like it fell way out of whack with its trend.
It was one bad quarter. And we can explain away the quarter if we want, but let's not. Let's just say that
it's just a bad quarter.
They just had a bad quarter. They did not reduce their guidance for the year, so we think we're going to have a really strong back half. Great businesses. Insider purchase from the chairman, who's the largest shareholder already. Stepped up open market purchase, which we love. So we think this is a great entry point after that big drop off.
Love it. Love the details.
Right.
And I think they do some of the gowns and the clothes with different brands sometimes.
They have
with like a.
Yeah, they do have a number of brands in both actually in the healthcare vertical, but also they do like uniforms for like restaurants and Ace Hardware and places like that. So they do those uniforms as well. And
seems like a pretty reliable business model.
Very much. Yeah, very reliable. Slow and steady.
Love the picks. Eric Kuby, you're the man. Great to catch up. Thanks. Always nice stuff. Always on top of the stocks that you're watching. Appreciate that. Good thoughts on the macro too. Eric Kuby, Chief Investment Officer at North Star Investment Management. Coming up, we'll talk some more tech. Get into the week's winners. Dell, probably the big one. Be right back.
Download the Schwab Network app and join in on the latest market trends
All right, Palo Alto on the move.
on any device for free. Schwab Network.
Palo Alto is on the move.
Knock, knock. Number 1 broker here for the number 1 hit maker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest.
S&P moving a bit higher. S&P. I'm just looking at Palo Alto for some credit spread ideas. Palo Alto.
Schwab Network. Available anytime, anywhere, on any device for free.
Accelerate your market knowledge and shift your perspective into bold view. Real-time example trades, a full hour of trading info. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab. Fast Market, ready for you, ready to go at 12 p.m. Eastern.
All right, looking at Palo Alto for a put credit. I'm bullish on Palo Alto. Palo Alto.
Welcome back to Market on Close. Let's talk some tech, especially in last night's reports. Chris Sanka joins us from TD Cowen, Managing Director and Senior Research Analyst covering Dell, HPQ, Apple, and many more. Chris, thanks for being here. What was the highlight of the week that, of course, had NVIDIA kind of as the poster child, but it seems like some stuff in your category might have been more fun to talk about?
Yeah, thanks for having me, Oliver. Obviously, Dell had pretty good numbers last evening. Clearly, the highlight was the AI server business. You know, it's interesting because the sales came in much higher than expected. Backlog was roughly flattish Q-over-Q, but the orders continued to improve. I think the bigger thing also they spoke about the pipeline of AI servers, you know, being much in the backlog. I think the positive from there is the fact that, you know, we're still in the early stages of this AI cycle, and there's still opportunities for enterprise.
Okay, S&P is still going. S&P is still moving higher.
On the pushback side, obviously, from these outdoor margin business, and the PC recovery hasn't quite happened, and I think storage has a good potential for AI, but that inflection still needs to be out there.
We got 35 minutes to go. 35 minutes to go for the regular session.
Is there more surprise potential in the server build out right now than sort of the initial like chip?
Futures continue to climb.
On to the next stage of the operation?
Yeah, I mean, you know, I think you know, AI is still in the early stages, and there's a lot of opportunity for growth. So, you know, clearly the servers will also move. I don't know if it's going to be a linear progression upwards. It's like maybe choppy. It might be in fits and starts, but I think if you take a longer term look, you know, the market should grow from here over the next few years or several years. But I don't think it's going to be as simple as like linearly, like, you know, trajectory up to the next.
Okay. Chris, what about the message on personal devices? To come back to HPQ for a sec, Dell to some degree as well, the stuff that's been dragging on their businesses. We saw a message from Best Buy that they saw consumer demand coming back. Is that a big deal? Does it move the needle at all, that stuff, when we're in this giant AI growth period? Does it matter?
I think in the long run, yes. I think, you know, people are going to put AI PCs, AI smartphones, and things like that. Clearly, you know, I think we haven't seen AI PCs really like come into fruition quite yet. We're still in the very early stages. You know, depending on who you talk to, like, you know,
NVIDIA trying to get back above VWAP.
AI chips could be involved in PC players this year, but I think the real opportunity is probably in 2025 and beyond. I think like one thing that always kind of
Okay, Palo Alto, looking for that to follow through. Looking for a credit spread on Palo Alto. If I can get a little bit more premium out of this.
So it could probably be like, you know, maybe gross margin percentage wise neutral or no impact, maybe some gross profit dollar upside, but looks like, you know, it's not just the ASP, but the cost is also going up. But definitely looks like it's a longer term thing. We haven't seen it quite yet. And also people are excited about the AI smartphones and Apple releasing things like that.
Chris, give me a thought on the potential for big Apple refresh cycle. Are you a believer in the thesis?
Yeah, we do have pretty good numbers for next year. You know, I think Apple doesn't just go by iPhone units. We have them around like around 215 million this year. It's going up to 240. Next year, 240 is kind of at the prior peak levels in 2021 or so. So that's a couple of years, units have been coming down because you look at like here compared to the last big cycles in 2021, the 3-year replacement of so for so the 2025 units should grow. And then you lay on top of it AI, which have pretty good refresh cycle in 2025 for the iPhone.
Okay. So at this point, we should assume that some of this is very real then, or is Apple too expensive based on not knowing for sure yet?
No, I mean, I wouldn't say it's expensive. I mean, the valuation is always up for debate with Apple, especially depending on how.
JP Morgan doing well. Thinking about adding again to that one. Okay, S&P, nice move on the S&P.
AI on the edge, and I think there's a lot of opportunities for Apple to monetize it over the next couple of years.
All right, Chris, thanks for the thoughts. Appreciate that. Apple one of the few down today. Good stuff. Chris Sonker, Managing Director and Senior Research Analyst at TD Cowen. Let's trade some options. Let's look at the market in some detail. See if we'll get some movement. We've been ramping up good up off the lows, back near the highs of the day. Look at this. NASDAQ now up 1%, 170 points. Couple good swings here today for sure. Kevin Green.
So the volatility has been pretty decent. You can trade puts in the morning lately and then calls in the evening. All right, we're moving pretty quickly here on the S&P.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education.
Okay, looks good. The market's moving higher.
However complex the strategy, with a wider range of opportunities, you can trade flippantly with Schwab.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insight. I'm Tom White. I'm Kevin Dick. Catch me on Fast Market.
Okay, Amazon.
Fast Market.
We'll look at the move on Amazon, Apple, Microsoft, everything moving higher. Okay, cool. Cool. Amazon, quite the move on Amazon. I'm going to have to roll these up, it looks like. Amazon. I have Amazon call credit spreads. All right, so I won't do anything this week, but next week I could conceivably have to push this up to 190 above this strike here and above the. I need to pull this up a little bit more, at least 185 above the upper bands, because you can see the upper bands are starting to turn upward. The 50 days right there. So while I'm not concerned about it right now, I will probably roll this up about 5 or 10 strikes. So maybe 190, 195, something like that. Amazon. Palo Alto. I'm trying to do something with Palo Alto. Okay, I'm trying to sell some put credits on Palo Alto.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient.
What happened to? I just had this.
Cash move to your brokerage account is available in seconds.
Palo Alto.
You can stop waiting and start investing.
Do I have more than one? Palo Alto. No. Okay, let me just pull this up. I don't know what I did with the chart. So what did I say? 345, 340. Wow, what a nice rally. What a nice rally. All right, looking good. Looking good.
That could be the case. It's not a boring day. It's actually a really good day.
Okay. Palo Alto mostly been green.
We are, but we actually have something for everybody. Actually, if you look at the volume chart here,
A nice volume. MACD stochastics turning. What was the Palo Alto? Palo Alto? Working.
And what we can actually see for on the chart itself is this continued rejection of 5630. We have to try to break through that going into the close here. Oliver, I'm not sure if we're going to be able to do that. It's going to be very difficult. But if we are, and we're able to have a significant amount of volume to the upside, we could actually see that gap higher and maybe even test that.
Palo Alto looking very strong.
Unlikely, but there is still some
Apple.
We also do have low liquidity.
Wow. Very nice move end of day.
Following the trends for the last couple of days, for the last week or so, 5630 is going to be your major wall. Your negative gamma level going into the close here is going to be 5600. And the reason why I brought up the 2-day chart as well is you can just kind of notice here the fact that we actually did make a technical lower low today what we had yesterday when we were looking at the
University of Michigan final was 67.9. Forecast was 68.1. Previous was 67.8. So forecast a little shy of forecast on Michigan consumer sentiment. NVIDIA though, NVIDIA looking good. AMD bearish chalk coming back down. Bearish chalk coming back towards VWAP. Apple bullish chalk moving higher. Tesla bullish chalk breaking to the upside. Tesla. Nice.
Yeah, it would be decent. I mean, once again, we have these levels still holding on. So when you're looking at it from a volume standpoint, this is the volume chart. What you are looking at here is that 5590, pretty much 55.
Okay, Palo Alto. Not able to do anything with Palo Alto, so I took that potential order off. Let's see. Do I have anything exercising today? Let's see. Starbucks is not today, is it? Starbucks? No, that's Starbucks. That's January. Starbucks, NVIDIA, Tesla, Disney. No Disney. Okay. CMG. September. Apple.
So dealers can say, for the most part, net neutral, but you have the environment with low liquidity to try to be able to ramp.
Okay. Yeah, the potential, I guess, for us to have a major breakdown looks pretty slim, but the potential for us to fall back into, one of those lower kind of pockets is very fair. So it's not like the bears are walking away feeling victorious this week by any means.
Oh yeah, definitely. And actually, what you're also able to see here when you're looking at the histogram is some actually defined areas for the market. 5650 is going to be our area of resistance when you're looking at open interest as a whole. But you're also starting to see a development here at the 5545 area to the downside, where individuals and institutions are starting to pick up some puts. So are we going to continue to have compression the next week? That could be the case. But for now, the rejection and the amount of size that we are seeing on the volume on these rejections, once again, seems a little bit concerning. And when we're looking at these
okay, Palo Alto. Maybe I'll do something next week on Palo Alto. All right, pulling back a little bit on Palo Alto. MongoDB off the highs of the session, making 16.5% on the day. Microsoft grinding higher. Microsoft.
That's pretty much all there is to say about the dealer levels, right? KG, or is there any last thought on those, or should we talk some volatility?
Yeah, let's talk about some volatility here. What we are actually going into for the month of September is potentially a higher regime when it comes to volatility. And so
okay, let me take a look at Apple.
That's going to be front and center, especially when you're looking at the September. The jobs report in September. That's going to be September 6th. So this time next week, But then we're actually going to have this window, the third week of September.
Apple.
Fed meeting, and that's going to make they're going to make a decision of either cutting rates by 25 basis points, 50 basis points.
35.
Levels, if I highly doubt, and market clouding that as well. So just be mindful that a volatility ramp up could actually take place. What's also happening on that same week, though, Oliver, and we have to keep this on our calendar here, is going to be quarterly options expiration. So you're going to have the futures expiration, you're going to have the SPX indexes and all of that expiring that same week. Those rolls can also create a little bit more volatility. So be prepared for that. It's not going to be next week, but the week of the Fed meeting, we should see
Netflix on the move. Amazon looking good. Apple with a nice bounce. Microsoft looking good. Microsoft. Buyers stepping up at the low of the day. Microsoft. Okay, we still need to get above the 21 day. Microsoft for next week.
That's kind of the outlook for the remainder of the year.
Yeah, assuming the world didn't blow up the first week of November. All right, Christmas seems like a long ways away.
Put a smile on your face.
Hey, you were the one that was telling us about the ball kink for the inauguration. So.
Netflix pushing a bit higher. Netflix looks like it wants to break out. Buyers at the low of the day. Just hasn't done it yet. It'll probably jump when we're not paying attention. Tesla, looking for a follow through in Tesla. That looks good. Need a bullish day on Tuesday. Nvidia. All right. Iron condors on Nvidia. AMD. Nvidia. Okay. Nvidia just hanging out.
But overall, if you kind of X that out, because that would be kind of an anomaly or maybe even a black swan that we that. We were pretty much on historical trends. I think the equity markets actually fared a lot better than what the street was actually expecting. So hopefully we have that same type of scenario in September as well. But what we got to just have to keep in mind some of the headwinds that are going to be approaching us as we get away from earnings season and really focus and drill down on the macro, and also if we see a re-rating when it comes to treasuries.
Okay. Thank you very much, Kevin Green. Appreciate that. Have a great weekend. Well, we're not done with you yet. Alex and KG together. Oh, that'll be a great closing panel. Don't miss that. Right now, we're going to go to Full Street Bowl in a moment. By the way, new show coming up starting next week, September 3rd at 5 p.m. Inside the Mind of a Trader. I will be interviewing the host of the program on Tuesday. Check it out.
The emotional aspect of trading is probably the hardest part, because at the end of the day, every single trader has had experience where they may be up a lot and they let the trade completely reverse and then go into losses, and they're pounding the table and saying, I wish I took my profits. And being able to recognize that and to basically take steps to prevent that happening, I think is one of the most important aspects of trading, because anyone can make money. Keeping the money is really key.
Keeping the money. That's it. Keeping the money.
11 a.m. Eastern, only on
Netflix pushing higher. Microsoft. All right. So Nvidia trying to go. Tesla looking good. Meta looking good. Google looking good. All right. Snowflake, Meta. Meta's still sitting there. Meta's another one selling iron condors on potentially. S&P still pushing.
With Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorites.
With 18 minutes to go, 18 minutes in the regular session.
Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. Let's talk some commodity swings with Mr. Phil Strebel, Chief Market Strategist at Blue Line Futures. We'll begin our Friday chat there. Great to have you, Phil, as always.
Pinduo
What's going on,
Duo.
man?
Oh man, thanks for having me on, and Kevin reminding us of that early August sell-off in the S&P. I pulled up that chart, man. That was some dark times.
Bitcoin looked like it was going to do something today, and then it just kind of took a knee.
Exactly. Yeah, that's a rare event. event that we came through. I mean, pretty amazing. It's kind of a victorious month when you think about it that way.
Yeah, it has. We've got a great snapback. I mean, I am definitely focused on that S&P 500, seeing if we're going to squeak out a new high into the close. A lot of times we get this month-end markup, and I think that's what we were really seeing yesterday. Before
S&P.
pulled a rug out of it. Some big traders came in, bought that market up, and then they stepped away, and it was like they let the gas, the foot off the gas, and that's when we sold off yesterday. So today it's pretty light volume action. Everyone's looking at all that labor data next week. There's just
Okay, MongoDB surging. MongoDB on the move.
the Fed, whether they're going to do 25 or 50, and then we'll see what happens from there.
Okay, we'll see if we can finish near the
MongoDB. Wow, what a finish. MongoDB new highs. Marvell. Let's see what Marvell looks like. Marvell. Okay, Marvell never did get its feet under it. Okay, Intel trying to get above 22. Try to close at the high of the day. That'd be good. Tesla, same thing, trying to get to the high of the day. Pinduoduo trying to get back to the high of the day. Qualcomm, Broadcom, NXPI at the highs of the day. CrowdStrike, Mercado Libre, On Semiconductor at the highs of the evening session. Mondelez, Marriott. Oh, Marriott's got something going here. What's going on with Marriott? Okay, Marriott clear in the 50-day.
Probably another buck, $72.50 down to those recent lows, $71.
You think we generally can
And the 200-day.
Some of the geopolitical
Marriott clearing the 50-day and the 200-day, looking good.
Yeah, I mean, economically, things do slow down after the first interest rate cut because the people have been getting 5% on their money, and all of a sudden they get hit in the head with a 2x4. They're getting a little bit less.
Okay, got 15 minutes to go. 15 minutes to go.
And then lenders look at it like, hey, the Fed's cutting rates.
Tesla making higher highs, higher lows. Tesla.
So they starting to tighten up their lending standards and practices. So it does initially, that first interest rate cut does have a slowdown in the economy. I think that does weigh in on the crude oil market. I mean, I live in a vacation area, and coming into a Labor Day weekend, there's hardly anybody there. There's no one on the beach whatsoever. So I think people are really starting to feel a little bit of pressure and tightening things up. And that early August sell-off in the equity markets was probably the wake-up call.
Well, at least you get Quiet Beach yourself. Right? Kind of win for you. Either the local economy or
There's June grass, so I can't fish out there. I cast it out once today when I saw a bunch go by, and I was reeled in a bunch of big green bass, and I'm like, I'm out.
Hopefully your trading's going a little bit better.
Yeah, right.
What about crypto? You watching Bitcoin just continue to fail every rally, Phil? What's up?
So we had some people that were working GTC orders at 65,000 that were filled 4 or 5 days ago, right away on I think it was Monday or so. And I was like, holy cow, it's up that high. And then as the days progress, it just seems to continue to disappoint. We come back to this 200-day moving average, 59,371 on the September.
Okay, Tesla, Marriott looking good. Marriott clearing the 50 and 200-day. Looks like Marriott wants to go. Marriott.
Is not as great. We're only moving about $3,000 a day. But the reality is you start questioning, what is its purpose again? Because if you can't generate alpha in it, what is it good for?
Love it. It seems like right now.
235.
Gold, though, slipped 2 this week. Feels like gold didn't like the spike in yields today.
No, the spike in yields also came out of nowhere, so that was a bit surprising. I think 2506 is kind of like a critical level on the gold.
Marriott. When do they report earnings? Marriott.
You're kind of where it goes back.
Marriott.
If it closes below 2584. Really disappointed we couldn't break out to the upside, but we didn't.
Marriott reports earnings October 30th.
To really send it in that direction. We did see a sell-off in silver a couple times this week. Also, copper futures kind of coming back down again. So there's a number of components.
Last report, a gap down. Last three reports, Marriott gap down, moved lower. Interesting. Okay. We'll pass on that for now. Marriott looks good though. Marriott's still going. Tesla. AMD. AMD stuck to VWAP. AMD doing what AMD does best, like Intel. Okay.
Stocks and bonds. Stocks and bonds. The things we love to talk about. 10 minutes left, roughly. Equity index is now all higher. We've distributed the gains a little bit more evenly. Some came off the NASDAQ, but the Russell and Dow firmed up. S&P is looking good at 56.27.
Marriott looks good.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities.
Okay. S&P with 10 minutes to go in the regular session. S&P. Wow. What the hell's going on with the S&P?
Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at trading, turns out. I'm very good at trading.
Okay, so we got a big move here. So JP Morgan, I imagine, David, I don't know if you're still listening, but they're going to have to, holy crap, look at the markets. Oh, shit. Wow. Look at this market. Nice, 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 nice. Very nice. All right, there goes Apple. Wow, nice move on Apple. Do, 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 do. 9 minutes to go. 9 minutes to go. Ooh, boy, this is a really nice move. Nice. JP Morgan. JP Morgan. Okay, look at this market. Wow. JP Morgan. JP Morgan.
Let's start with some bonds. We did get a little bit of action here. Column yields are trying to creep, but we did get some decent data this week. So does that make sense?
I'd say today's move does make sense.
Look at the futures. Wow. Wow. Impressive way to end the week. Yeah, I know. I know, right? Frano? Geez.
If we could summarize today's economic releases, it'd be soft landing. We're getting inflation continuing to move towards the Fed's target. I think most important is that core PCE number coming in at 2.6%. I think that's important because at the June meeting, the Fed had revised up its year-end projection for where they saw core PCE going. They initially expected it to be 2.6, revised it up to 2.8%, and it's still at that 2.6% level. Now, due to base effects, maybe it rises a little bit from here. But when we look at the month-over-month numbers, the super core PCE data, I mean, everything that we see shows us that inflation should continue to move lower, which is a good thing. And then I'd say what was also good with today's number was that real personal spending to show that growth is still chugging along. We saw that earlier this week with the upwardly revised GDP report, specifically powered by personal consumption. So the consumer is still in the driver's seat right now, and until we start to see more cracks of slowing, I'd say the timing of that recession that everyone's waiting for keeps getting pushed back.
I think the market is listening.
Wow, look at this freaking market.
Stocks ripped. S&P trying to make a last
Wow.
dash here for range highs. So it's going to be a fun 7 minutes after all here, Mr. Mazzola. You're watching this. That was a pretty nice little punch we just got. Basically, literally since I introed you guys.
I mean, it's the Oliver effect. So
There we go. No, it's you guys' effect. I've been here all day. We just went up 15 points since Big Picture started. That's a pretty juicy little pop.
We'll take it. We'll take it. I think something is becoming a little bit more clear.
Okay, got 7 minutes to go. 7 minutes to go. Big pop.
Yields and equity performance is really starting to unwind, right? I mean, that was something that we talked about for a couple of years. We wanted to a certain extent, bad data, right? Because that increased the probability of a Fed rate cut. But now I think the bigger concern is if we do get some light numbers and the employment number next week, I think you could probably see a market that doesn't react too favorably to that. And we can use the July data that we got last month as kind of fuel to that fire. We saw the reaction, and I think we've kind of moved into a new regime where we need good news. And if bond yields stay up, that's actually okay for stocks because it's showing you that we've seen some expansion in the economy, or at least we're not contracting to the same extent. So.
100% with you is that being really important because when we saw the move in bonds and some of the data this week, I was thinking that it made sense for you to underline us probably what stocks want, right? Like we gotta when you got a market that's no longer reliant as it was on these hyper secular trades, it becomes more cyclical. Those are the companies that need the economy. So our new kind of orientation requires us basically to get good data relative to where we were before with all the Mag 7 stuff, Joe.
Yeah, no, I mean, look at the sectors that perform the best over the course of the month. Utilities, real estate, financials, all companies that do well in a lower rate environment. And it just kind of shows you that there's been some decoupling, but at the same time, investors are looking for other opportunities. You can have NVIDIA fall after earnings and still have the market rally just because we're starting to see that broadening of the breadth underneath the surface.
Joe, when you Colorado, when you look into next week, you look at jobs as kind of the main thing here, our major input. Does that have the potential to drop September into a kind of final expectation? Because we've still got like a good 30% chance of 50 left in there lingering. I mean, were we going to take that right up until the day of? Are we not going to know? Like we're running out of time here. Market's still saying there's a real chance of 50.
I think I'd argue that Friday would be the expiration date about when we'll see that, market expectation change. Right now, the expectation based on implied probabilities is for just 25 basis point cut. That's the camp we're in right now. But if we got a very, very weak number on Friday, then that can certainly push the expectations up to 50 basis points. And if we go back to Powell's speech in Jackson Hole, he didn't talk about the idea of a gradual pace of rate cuts.
Oh, look at this move. Look at the markets. What a beauty. What a beauty. Everything is up. Microsoft looking good. Okay, we got 4 minutes to go. 4 minutes to go. Intel. Okay, what's Intel doing? Intel. INTC. Intel. Intel. Big move on Intel. We're about the high of the day here. Intel. There we go. Intel, new high of the day.
That's, I think, a big point because it's very much at this juncture still.
Oh my gosh, look at this market. Holy smokes.
Maybe that's why it's still in there, Colin, because we had such a
Holy smokes.
big swing in payroll reports last couple we got.
Yeah, it's been very volatile. We've had some ups and downs. I would say that the July report that showed that jump in the unemployment rate by 2% to 4.3%, and that was very concerning. And that's a big jump when we look at what we've seen over the past year or so. But what makes us a little bit nervous, not that we're expecting a significant weakening, but that we're seeing a weakening in most labor market indicators that we're tracking. Initial jobless claims on the bright side, they've come down a little bit.
Yes. Wow. I'm just totally blown away here. Let's move. End of day. Wow.
And if we go to JOLTS, which is something that we're going to get next week, we're
seeing that both quits and hires are slowing. And I think hires is important. It shows that companies, businesses are not really rushing out the door to be increasing the labor force right now. So the big
Wow, wow, wow. Okay, make sure I don't have anything closing in the money. I don't think I have anything expiring today. I think everything I have is the 20th. Apple.
I feel like that's relevant too, Joe. Back to the stock point, this kind of final part of it is when you need earnings expectations for more cyclical groups to kick in. It'd be nice to see some of the manufacturing stuff firm up after bad readings, and of course we've got
Okay, looks good. Nice day.
for services. That's got to stay elevated.
Nice way to end the day.
Services has to stay above 50. I don't know if we're going to get a manufacturing.
Yep, true.
That seems like that might be a long shot, but just to maybe show that contraction slowing, I think would be very helpful.
Microsoft.
We don't get
Nice move on Microsoft.
next week, but at least
Beautiful, beautiful. Nice way to end the day. Cap off the week. If you're bullish. Microsoft. Wow, Microsoft is ripping here. Microsoft. Tesla.
All right. Fun chat, guys. Very good stuff. Great setup for next week. The phrase big picture was even used, I heard. So that's how you know we hit it. Thanks, Colin and Joe. 1 minute until the bell. We are really trying to pump it up.
Beautiful.
S&Ps have a chance to break out of the range in the next 60 seconds. Look at this thing. We're pretty much going vertical. Wow.
That's a wrap. Well, all I can say is that was a hell of a rip. Jeez. Yep.
Filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals.
Yeah, I'm thinking we get back up to all-time highs very quickly and then sell into the last 2 weeks of September. That's what I'm thinking is going to happen. Okay, so let's take a look at the S&P at the end of the day. S&P. New York FANG index. Let's see what the New York FANG looks like. Apple end of day. That was a nice move on Apple. Microsoft. Nice end of day rally. Much different. Okay. New York FANG index. Yeah. So if we get a bullish day on Monday, it wouldn't take too much for the S&P to make new highs or test the all-time high. All right, so while we never know what exactly is going to happen with the markets, we don't have a crystal ball. All we can do is go by price action. Price action is telling you a different picture right now. Let's look at junk bonds. Junk bond. Whoops. You know what? Let me just.
Into the long weekend, a lot of confidence, good vibes for sure.
S&P.
You could ask for without getting an actual breakout.
Wow.
The range did hold, so we're still looking at the same.
Look at this. Completely different look, right? We were down 2% on Wednesday from the all-time highs, 2%, and we continue to rally. Not going to take much to get to new all-time highs. Let's take a look at the S&P equal weight index. S&P equal weight index, removing the weight of these top tech stocks. Very bullish, very bullish. Wow, impressive.
It was concerning earlier when bonds were staying bid despite good data this week.
Hope everyone had a good day. I know some of you didn't on the bearish side, but what a freaking move.
So much about next week's data that we might have to cut 50. So this was a nice message as we saw the yield climb and we saw stocks rally with it. A really good finish to the day. Bitcoin down too. You know, I love the days when stocks are up, yields are up, Bitcoin's down. That tells me it's a market that is discerning. Kevin Green back with us and Mr. Alex Coffey. Excellent.
Okay, let's look at growth and value. Let's see how they did. Do we have a broad market advance? Advanced decline percent was looking pretty good. All right, so both of these are pushing higher. Both of these pushing higher.
you just saw this massive squeeze taking place.
Wow.
We talked about it. The 5650s, they were bidding up at like 50 cents, pretty much an hour before the close, which is relatively high going into the close. So it looks like they were able to ramp it up. Nice win because this is the first close, I believe, above the 5630 level for the week. And so I think that's actually a pretty decent win. And if we are going to continue with this type of price action next week, you want to continue to see our volume.
Okay, that looks good. Let's look at junk bonds. Junk bonds, that should be at highs. Junk bonds moving to highs. Okay, that looks good. Advanced decline percent into the close. These are all pointing higher. Okay, advanced decline percent. Big caps, mid caps, small caps, NASDAQ in the lower panel, descending order. Oh, wow. That's pretty exciting close, eh? Let's look at the New York Stock Exchange. When in doubt, I always check the New York Stock Exchange. New highs, new lows. Okay. Wow. Look at the new highs.
Next week at the top end of the range than at the bottom end of the range is where we were just a few hours ago. So
holy smokes. What a freaking finish.
You can basically take that same 5-day, 5-minute chart that we had up and extend it out over the last 9 sessions, and what you'll see is more of the same. You can see that here. I mean, we capture that.
Okay, folks, listen, have a great weekend. The weekend video will be out at 2 p.m. on Sunday, so be sure to check your inbox for that. Or check the Slack channel, alerts channel, because I'll send out the email later at night, 12 midnight on the East Coast, Sunday night, for the watch list. Okay, well, listen, have a great weekend. Enjoy yourself. My daughter's coming home from college for the weekend, so that'll be fun. My son's going to a football game tonight. His first football game as a high schooler. That'll be fun. Have a good one. Take care. Thanks for joining us. David, thank you for joining us. Take care. Have a great weekend. Ciao.